Good morning. Oh shit! Been sitting there talking to myself. Didn't have the mixer on, so you couldn't hear what I was talking about. Running behind schedule today. Okay, the markets are lower, so um, there's a couple of things you can do. All right. Number one is not panic. Right. I mean, we're only down a couple of percent off the highs. We look like we could punch lower. We're down 52 handles at the moment. So if we get any kind of bounce, I would probably be looking at something like SPXU or SQQQ. All right, so let's look at that. SPXU. That's currently hovering around $49 per share. Okay, so position here would insulate you for every $100 about what, 500, 600 bucks. Potentially, we could see maybe 57. This doesn't. These type of deteriorating assets on the indices tend to run for 3 to 4, maybe 5 days at most. Occasionally, you get these 1 to 2 week run ups. Okay, so just keep in mind if you're going to do something like that, um, we could always get a bounce. This could be some insurance. SQQQ, that one's already broken trend and started moving lower. SQQQ. All right, so we told you that XLY XLP was telling us that institutions were getting very defensive. They were selling tech, and they were buying at least consumer staples. Right, a lot of consumer staple stocks rocketed higher. We had SCHD, some of these dividend paying stocks or ETFs were rising. Okay, SCHD, SPHD, so these are doing well. I feel a bit extended actually, but so those are some of the things you can do. I wouldn't buy puts at the low because we could reverse sharply back to the upside. I'm expecting maybe we'll see a little bounce. But what happens when we're down here? When we're down at these levels, you have to understand that the dealers have to sell futures to hedge their position. So we're in a negative gamma state right now, below 68.90, 68.50. We're in a negative gamma state. So you have to take this with a grain of salt. You don't want to jump into anything conclusions. All right, Bitcoin is down there at 69,000. Starting to see a reflexive bounce, probably just oversold, shorts covering. Bitcoin stock, the chart is broken for right now, right? So I don't know. The smarter thing to do, I think, if you weren't positioned correctly, smarter thing to do is just sit and wait, right? Why do I say that? Let's take a look at the S&P. S&P weekly. We got 4 minutes to go, less than 4 minutes to go. Weekly. All right. So here we are, right? We have these thrusts higher. We have occasional breaks. That was the April breakdown, February through March. And in April, we were reversed. You remember that from the tariffs. So we're up here flirting with 6,800. So we're not too far off the highs. I wouldn't jump out your window in panic because we're not there yet, right? But what's going to happen most likely is one of these pullbacks are going to get bought. I mean, companies are still making good earnings. Google's off a bit. I did make my call spread a iron condor. I bought some puts yesterday. Just bought puts and added the wing lower. So where we are right now, 314 on that. Okay. So sit tight. Let's see what happens in the first hour or so. Okay. Don't panic. When you panic, you make mistakes. Keep a calm demeanor. Think positive. That's all. That's what I can tell you. It's like from experience, I know that these things see panic selling. It's actually something that would be positive, believe it or not. Panic selling turns into capitulation, turns into a buying opportunity. And I'm down to 70% invested, 30% cash. I told you that I was getting out of TRBCX. Not getting out, I was reducing my exposure. TRBCX, okay? My weekly told me to get out. All right. So at the end of last week, I was doing this. So we're down a little bit. We're 5 points off the high. But what I'm expecting to happen is, we'll get a pullback. People will capitulate. They'll sell out of fear that this is going to turn into something more disastrous. And that'll be a buying opportunity. Okay. But that's why I was collecting some cash. That's why I was positioning in SCHD to begin January on the 8th. On the 8th, I transferred money out of TRBCX and also out of SPHD, both of which, by the way, are still moving higher. I just wanted to rotate because SCHD was outperforming. Okay, so if you did all of these things, you're probably okay. I mean, you're fine, right? Because we're gonna get bought. The dip will get bought. One thing you can do is nothing, right? Just sit and wait, be patient, go about your business, do your work. If you got a day job. Okay, we're open. Okay, let's see if we have some reflexive selling or what are we going to do here? All right, so we're moving a bit lower. Okay, Google's lower. Let me just take a look at Google. Google. Where's my Google position? Google. Okay, let's take a look at Google. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday the 5th. All right, so Google's gapping down. It's a good thing I bought some puts here. Let's see, Google. Put side is up quite a bit. Google, I have 325, 320, so we're beyond that point right now. Google. Okay, Google, I took some of those puts off I added yesterday. Okay, this has been in a nice run up. All right, SPXU. Some of you asking me about SPXU. This is gapping up. All right, we know what the dealers are going to do. Dealers have to sell futures down here. All right, so if we start sliding even more, this is going to move in the opposite direction, SPXU. You can do SPXS. Okay, that's another one. That's at 35 and change. Doesn't really give you the much bang for your buck. This has got to move several points for this to make any money. All right, so we're continuing to move lower. Hedge flows moving lower. Wells Fargo. Let's see what are the banks doing? Banks. SCHD. Okay, we got a Doji. Okay. Okay, so we're up here, SCHD. Let's see, Wells Fargo, banks. Watch the insurance companies too. They're doing okay. Wells Fargo. All right, so maybe I'll reduce some of what Wells Fargo, looking for a little pullback to the 50-day, or I could just leave it alone. I don't have shares, so options do need to be managed a little bit more. So I'm going to go ahead and take some of these off. Okay. Just collecting a little bit more cash. Okay, we're starting to get a little bit of a bounce, some short covering. Okay, let's look at SPY. Okay, if you have those 670s or 660 puts, you're okay right now. You bought those. A couple of you asked me about that a few weeks ago. Brent mentioned on a Monday, I think it was like 2 weeks ago, that he was buying some puts. I like the idea. VIX was pretty low. So we have the VIX. We have VIX calls. I have the 2030. Okay, we're up here at 22. So that's doing okay. VIX. If you bought any of the VIX 20s I was talking about over the last few weeks, maybe take a little bit off there. I think we're going to get a little bounce here. So I'm going to take some of these off. VIX. Let me take some of these off. Man, good to see you as always. Always enjoy reading your work. Share this report by Alphabet. Really good from top to bottom. Really good earnings call. Anybody's slice. Okay. VIX pulling back. You know what? I'm going to leave these alone. I'm going to leave these alone. We could get another flush lower. That's always possible. So I want to keep these VIX. Too late. Too late. Took half of those off. I still got 10 left of these VIX 2030 or 2030. Yeah, 2030 calls for March. Okay, had a 2030 spread. Also had some straight 20s. I sold some of the straight 20s. Okay. Collecting a little bit of cash. We're going to put the money to work shortly. Keep your composure. Okay, it's always good to keep your composure. We're already starting to see a bounce in the S&P. Okay, so now that we're below the 50-day, decisively, excuse me. All right, so S&P is starting to bounce. It'd be nice to see a reversal trade here. Let me put some calls on here, just some lottos, just in case the markets get a huge bounce. Okay, I'm not going to buy any puts down here, that's for sure. But calls, some lottos maybe. Just a cheap bet. Let me set it up here, though. Let me do that first. Already starting to see a nice little bounce. S&P. Well, TOS is really slow right now. What the hell's going on with TOS? Think or swim? Okay, there we go. Okay. Calls got really expensive. Okay, let's see. Now we're starting to bounce. Just looking at these, just looking at 6870s, these are 17 bucks. Wow, they're looking for a big bounce. The calls are like, we'd have to get all the way back to 6,900. These are 10 bucks. Holy smokes. They're looking for a big bounce here. Looking for a big bounce. Okay, let's see how far they go with this. I got the 6,900 queued up, but these are really expensive. Wow. Here's the fifth. Yeah, those are fifth. VIX still pretty high. That's why VIX is still pretty elevated at 21. So options going to be a little bit more expensive, but still they're looking for a big bounce. Hedge flows, watching hedge flows here. Okay, looking for a bounce. The calls and puts are really expensive at the moment, so that's a good sign, I guess. Dealers are looking for big moves, lots of volatility. Okay, let me queue up some puts here just in case. Let me queue up some puts. S&P 500. It's 941, 941. Very steep drop off there this morning. Already bounced about 20 handles. Let's see how far they go with this. All right, put side. Let me go down to 6,800 and see what those are. I'm just loading up some puts and calls in my active trader window just so I can see, what's got the bid, what has the bid, where's all the money, where's the volume flowing. Right now, the puts are still active, calls are trying to bounce. All right, so good to not panic. Let's just sit tight and see what the markets do. You don't want to be buying puts at the low of the day on drops because you're going to be paying up. Any reflex of bounce, the premium disappears rather quickly. So I want to see if we get any kind of trend. Do we continue to move lower? Right now we're trying to bounce. Okay, Microsoft's a bit lower. All right, so we've been looking for Microsoft to bounce. Netflix, what are you doing? Netflix is bouncing. Okay, so a few things are seeing some short covering. I would just assume anything that's moving higher right now is just short covering. Okay, Netflix is coming off the low. I mean, I can't believe we're down here at $80. Netflix. I mean, at some point, you'd think value would come in, right? Here's Netflix. Okay, Micron with a big bounce. Micron, that was trading lower earlier. I would stray from tech at the moment. Tech. Look at New York Fang. New York Fang doesn't look good. Okay, very steep sell off there. Best thing to do would just be sit tight. Here goes the S&P starting to move higher. The calls are pretty expensive, so I'm seeing that maybe they expect a bigger bounce. Okay, so let's see. Number of stocks advancing. We're only $200 stocks advancing on the S&P. All right, so not quite half there yet. See if the answers continue to show up. Let's go take a look at breath. Breath. Okay, breath was rising, improving this week, and then we're a little bit off today. Let's see if we can't turn back up. See, this is the problem with buying puts at the low of the day. You get these sharp reversals. You don't know how far this is going to go. Okay, nice reversal off the low. I have to get something for my throat. I'll be right back. Banks still moving. Okay, banks are inside day, but still moving. Sorry about that. I need to get something to drink. Oh boy, falling apart. Okay, let's see how far they go with this. Cooler minds prevail, right? S&P. S&P still bouncing. We've got a fair value gap here. It's very possible we hit this fair value gap and roll over. All right, watch that. I think I'm getting sick. Micron's still bouncing. Chevron bouncing. S&P still on the bounce mode. Watching here. I would say this is probably just short covering for now. Okay, so this is probably just shorts covering. Okay, into the gap. We hit the fair value gap. We're going to roll over. We're going to keep going. I don't know. That's a pretty decent sell off there below the 50-day on the right. 50-day. All right, 68.82 is the 50-day. Now we've seen bounces back above the 50-day, so all depends on institutions. Earnings have been pretty good, so there's that too. Google wasn't so good. What's Google doing right now? Google. S&P still pushing. Give it about I don't know, at least a half an hour to see if there's any kind of trend. If we're going to bounce more, hedge flows are dealers are very active right now. S&P could be rolling over. We're right at the fair value gap now. Okay. Okay, we're right at this fair value gap. If you're going to buy puts, watch this area, see what we do. Puts are still got a decent bid, lots of volume. People are buying. I'm going to sit tight. I'm not going to do anything. We already had puts. We already had VIX calls. Okay, took some of those off. VIX March 20 calls. I had some of those. Also had added to it the 20-30 call vertical. Okay, so far we're hanging in here after the bounce. Volume. Watching the volume. Okay, S&P continuation. S&P continuation looks like we might push a bit higher. I took a few more VIX calls off. That's all I'm doing at the moment. Google nice bounce. Okay, so I took the puts off. I added a put wing, if you will, on the I made it an iron condor. I had calls for June. I took the puts off, the June puts off. Could have done something a little closer, probably have been just as good. So far, it looks like a doji. Puts are catching a little bid right now. Okay. Hedge flows. Everything's settled down all of a sudden. Chevron did gap down a little bit, starting to bounce. Chevron, Micron, a little short covering. Let's see if that rolls back over. Got a decent amount of stocks on the NASDAQ 100 advancing. Broadcom is up. Broadcom just bounced. Netflix bouncing, Nvidia bouncing. Apple's off the high of the day. Apple popped up and then a little profit taking. People probably still reducing their exposure when they have an opportunity. Intel. Intel is up. That's interesting. Intel is up. Okay, Intel is up. All right, reduced a little bit on Intel, only because it's in the tech space. If these start to bounce a little bit more, it can always get back in, but I'm reducing my exposure. And short-term options, okay? Short-term options, to be specific. Long-term positions, I'm not going to do much of anything. I'm already 70% invested, 30% cash. As of over a week ago, started shifting to SCHD on January 8th. That's good. All right, so Netflix is continuing this bounce. VIX, I took some of the 20s off. I have the March 20 call. Let's take a look at VIX real quick. VIX. Okay, VIX off the highs of the day. So I took it off earlier, VIX, before it started to fade too much. Starting to bounce a little bit now. Tesla trying to bounce down here at 396. VIX. Okay, S&P, the spiders. All right, so hedge flows. What are the dealers doing? Okay, keep in mind that if we do move lower, the dealers have to sell futures. On down moves, dealers have to sell futures, so the downward movement can be a lot more sharp. Okay, let's take a quick look at what is actually moving. If anything is moving, all right, that spider's turning back down now. Okay, here we go. Okay, so McKesson higher, Tapestry, that's consumer discretionary. Hershey's, SNDK bouncing. Globe Life. All right, so insurance. Mr. Flood mentioned Cincinnati Financial with good earnings. Cincinnati continuation. Mr. Flood is an insurance executive. He meets with management. Okay, watching. Premium sellers are making the money right now. Premium sellers. Just sit tight. Okay, hedge flows still turning lower again. Okay, 68.20, there's a little bit of positive gamma there. What's about zero? Okay, so we got a lot going on right here. The purple indicates the dealer is long. Market is short. That's a 89 percentile. These aren't very large. 4 million, 2 million, 5 million. It's not a whole lot for support, but we're looking for a little bounce again. Let's see if we get one. I'm going to be a lot less active. I can can assure you that right now with the markets lower, not going to be as active. I already took off what I needed to take off, so I'm looking to buy at some point. Okay, what's Google doing? Google with a nice bounce so far. Google. Okay. Google. If you're thinking long, the odds are against you at the moment. Okay, thinking long in terms of the S&P, the indices. Got a lot of scared money out there. That probably won't dissipate for a couple of hours, I would think. So with the S&P, we've found that after 10 o'clock, 11 o'clock, and then again late in the evenings, best times to look for reflexive bounces that follow through. We're looking for a trend. The trend right now is down. So they keep selling into bounces. They keep telling, okay, that's Microsoft is down at 400 now. Okay, all of these AI disappointments are getting sold. Okay, Microsoft is down quite a bit. It's got to show signs of a base right now. We have this plunge lower without a sign of a base, so this could keep going for a while. If you look at the weekly, it's kind of scary, really. If you look at the weekly time frame for Microsoft, that's the weekly. So let's not scare the children. Let's look at the daily. Looking for a base on the daily, not yet. Microsoft still makes money. It's just a matter of what an institution is willing to pay for it. Like I was saying yesterday, it makes sense that Satya Nadella would, I don't want to call it lowball it. I don't think he would do that, but they see earnings flat for now compared to what they saw last quarter. Okay, I'm still queued up on Microsoft from last night. Okay, so they're making money. They make money. It's just this number right here. 414 per share is what they came in with. And for the next quarter, they're looking for $4 to 412. So they're looking for flat earnings, which isn't bad. And my thinking is that Nadella will come up with ways to make this number a little higher. S&P continues to pull back. Chevron, inside day, it's had quite a run up. I have the 180, 185 call spread. I can adjust that if we start to slip a little bit or take it off. Got a nice profit in Chevron. Okay, I can always get back into this. Let me just close some of the Chevron position. All right, Chevron. I can always buy back into that Chevron. Okay. Google had a nice little bounce. Now it's starting to fade again. Below the 50-day. Here again, it needs to show a base. It's been running up this year so far. So as good as Gemini, the usage and everything else is, still could see a little, 20 to 30% Fibonacci. Okay, watching this bounce here, S&P 500. Back down to the low of the day. Understand what the dealers have to do. Okay, if we move lower, the dealers start to sell futures. That exacerbates any move to the downside. So if we get any kind of short covering right here, we need the hedge flows to turn up. That's not happening yet. Okay, so orange lower, that means they're selling calls. Blue lower, that means they're buying puts, the market, institutions, hedge funds. So we need both of these to be rising on any legs up. I had a late start today. Let me just put a pot of coffee on. We're testing the lows right here. If we drop off a little bit, we'll see some selling. Let me just put a pot of coffee on. Give me 2 minutes. It won't take me that long.
in just a moment. But here's another one-year chart that is definitely not a fun one for bulls, right? You've got this big drawdown now of more than 40%. And when I talk to Jared in just a few minutes, we'll be talking again about levels to watch and what some of the predictions are out there of how much lower Bitcoin could go. We're going to talk about another stock though right now, and that is Qualcomm, because those shares are also under heavy selling pressure after its revenue outlook fell below the street's expectations. Angelo Zeno is joining us now, equity analyst at CFRA Research. You got a buy rating still on this stock, Angelo, but there was a lot of disappointment here, particularly in the company's bread and butter smartphone business, which is under pressure because of the inability to get memory chips into these phones. So, this really seems to be a big challenge for the industry overall. How bad is it, do you think, and how long is it going to last?
Yeah, Julie. So, thanks for having me. It's pretty bad right now, right? I mean, you kind of look at how constrained we are. I mean, you kind of played it out nicely, but you think about where all that memory demand is going right now. You look no further than Alphabet's results last night and the boosting capex plans, right? That's really the issue at hand right now. It's the fact that you're getting all this memory capacity really kind of devoted to the data center AI infrastructure builds. And as a result, if you're on the PC on the smartphone side of things, you're getting hit really hard. When you look at what's happening with Qualcomm here on a sequential basis, you're looking at handsets dropping north of 20%. Let's call it about nearly 13 to 15% on a year-over-year basis in terms of decline. The good thing is we've now seen this reset on the expectations, and you kind of look ahead. It's likely going to remain pretty weak here. We'd say over the next 6 to 8 quarters at least, as far as the memory bottlenecks are concerned, before you really get any notable help. And then again, that's gonna hurt Qualcomm, especially given that they do have a lot of business at the low end of the channel, where a lot of those pressures are being felt. On top of that, they are losing ongoing Apple business, which continues to wind down. So they're hitting it all over the place in their core business. The good thing is they are diversifying, and that really is the core story here. If you are a bull, you're getting a very value cheap play here with a long-term trajectory in terms of new emerging markets.
I guess the question is how long term? Like, how long do you have to wait, Angela? Because if you look at those other sources of revenue, right, which have been growing quickly, and that has been the company's whole strategy. For example, the automotive business, $1.1 billion in revenue in the quarter, so it broke above $1 billion for the first time. But phone revenue is almost $8 billion. So, you put all those non-phone things together, how long is it going to take for it to ramp up?
Yeah, it's a great question. And what I would say here is, listen, the bad thing about being a value investor or looking at value names in the tech space is sometimes it takes longer than you want to wait, right? And as far as Qualcomm is concerned, we told investors you have an indication of this. I will say this: last quarter, let's call it about 25-26% of their revenue within kind of their manufacturing, chip-related manufacturing business came from non-handset revenue. Given the funds that we're seeing here in handsets this quarter, let's call it about 35% or so of their revenue will come outside of handsets. So we do think within the next 2 to 3.
Okay, they're trying to buy some calls here for now, but the pressure on the downside is pretty intense. Tesla's lower, Nvidia's lower, Microsoft lower, Netflix is seeing a little profit taking. Apple's trying to bounce.
So I'd say at this point in time, the valuation plus the fact that there is a line of sight here over the next couple of years. And I know, nobody wants to be talking about 6G because that's towards the end of the decade, but that's also another opportunity for the company long term. So there are opportunities out there, especially when you look at the valuation. You've got to be patient if you're an investor.
So I am curious then, Angela, if you're looking at Qualcomm versus some of the other chip makers, particularly say a Broadcom right now, where, yes, obviously you're saying you want to own this name, but is there other stuff where you're seeing maybe more opportunity in the short to medium term?
Yeah, I mean, listen, I think, this is a really interesting market right now. I mean, I think you kind of started off talking about some of these software names, and there are other types of names that have really been punished here over the last couple of weeks within
Micron, big reversal off the high. We got a reflexive bounce on Micron. Expect Micron to push a bit lower. The run up in Micron was just a little exacerbated, I guess. My opinion. Not that the market cares. Intel, I did reduce some exposure. Sorry, I keep coughing. All right, so Intel looks like I sold at the right time. It's interesting, that we're pulling back. The current earnings season for S&P 500, the end of fourth quarter being reported. 75% of S&P 500 companies have posted positive earnings. Positive earnings. The average aggregate earnings surprise magnitude about 9.1%. That's above the 5-year historical average. So companies are beating. So what does that mean to me, Vinny? It means that, as I mentioned earlier, I'm at 70% invested. 70% invested in about 5 different ETFs and funds. Okay. So I'm looking at the potential to buy on this dip. People are selling up here, which is good. I mean, I did take some exposure off too last week. But on days like today, what I like to do are, focus my activity. If I'm going to do anything, focus my activity. I've already done a couple of things. I took some Intel off, basically at the high of the day. Here's S&P 500. So the weekly, we're still up here at the highs. I don't know why people are panicking. I'm looking at social media. We're due for a pullback. If you timed it right or you bought puts over the last couple of weeks, you're probably pretty happy right now. Let's see. We're about 2.5% lower, right? Something like that. Okay, so 7,002. Okay, so about 3%. About 3%. We're currently down 1% on the day. 1% on the day, about 3% from the high. Okay, where did we come from? Okay, we came from down here. So keep it in perspective. If you've been investing, I'm talking long term now, SCHD, SPHD, TRBCX, RGAFX, VGT, those types of investments, then, a 2%, 3% drawdown on a partial position because we're not 100% invested. 3% is not that bad. We're giving back a little bit. If we came back to that November low, October low, that would be a little bit more, obviously. Okay, this low here is about 7%. We're looking for, now if you listen to the weekend video, 5 to 10% pullback is what it was starting to look like it was possible. So even a 7% pullback, not the greatest feeling. You always want stocks to go up every single day. Doesn't happen, obviously. But at some point, we're going to see a bounce. So I'm collecting cash. Once that hits there, okay, I'll have a 7% pullback, but 45% overall, 7% down. And then I'll be looking for this to come back up and get another 10% gain on top of that. So the short-sighted view is that, yeah, we're pulling back. Oh, Christ. Oh, damn, I'm losing money. Okay, you're losing some of your gains. Okay, give me 1 second.
Morning breath can be a sign of underlying health issues.
Cresco Health mouthwash protects your mouth overnight, every night, by killing millions of bacteria and preventing oral health issues like plaque and bad breath before they start.
Not the burn. Oh, that's so much pressure!
Crest.
Explore the rivers of Europe with Thurs. Connect more deeply to the people and places you visit. Enjoy a more intimate, engaging atmosphere with fewer passengers on board and expertly guided shore excursions without the crowds. All included in one upfront price. Travel beyond ordinary. Travel with Thurs.
You can tell she's your perfect match. Things are going great so far, but first dates are tough. With Toon Blast, you've got backup. Free play, no ads, and over 10,000 challenging levels. Anywhere, anytime. With every level, the fun just gets better. Just like your night.
Nice move.
Download Toon Blast now. Relax, compete, and have a blast wherever you are.
I worked at the casino for 6 years, and if there's one thing I learned, it's that in Chico, right? No matter how much you get, if you can long it up, you lose it all.
It's all the same.
That's why when I want to play, I think it's always
All right. So I think you get the gist of it. We've had a nice rally off the low. We were buying down here when Trump was saying it's a good time to buy. It was a pretty good signal, right? 45% later on the S&P. Okay, so it wasn't really this I was looking at or trading. It was SCHD, TRBCX. Okay. Just let's just keep it calm and collected here. TRBCX. Let's see, TRBCX. All right, so we made 175% on this since 2022. Average. Because there were times where we were buying on the dips. Now we're off quite a bit. So I was taking this off over 2 weeks ago, 3 weeks ago. Actually, January 8th was when I first started, January 8th. Okay. First week of January. As we started to lose this 10 EMA. So what I'm looking for is for that trend line. We'll adjust it at some point, but that trend line to start to see some buyers because earnings are good. So I'm a constant positive thinker. Optimistic, as Marcus Aurelius famously said, paraphrasing, you basically become what you think every day. So if you think positive, you're going to get positive outcomes. Yeah, you're going to have your negative setbacks. But right now, clear-headed thinking. When you get the markets pulling back, 150, 200 points. What was it? Sunday night where we're down 160, 130 points, and we rallied 160 back to the high. So it's possible. It's possible. Okay, looking for a bounce here. The shorts will cover. We'll get these quick bounces. If the bear flags continue to show up, then we're going to go lower.
seen this cycle play out before. Let me put a 10-year chart so I can show you what happened over the last crypto winter. So here we had 20 to 2022. We had this double peak here, and then it took a while to find the bottom, and eventually did. But then it's off to the races. Here we have a little bit of a different structure here, but a double peak, and it looks like to extend this line, we'll have that bottom maybe sometime in the fall, or maybe as early as summer. But I was talking to Mark Newton on an episode of Stocks and Translation. He's the top technical strategist for Tom Lee, and specifically mentioned the 4-year cycle, which I thought was interesting. Let's take a listen to that.
I don't think it would go down 80%. Personally, I think it's going to be capped. I think Bitcoin, in my own view, goes to 60, between probably 550 and 60. I don't think it's going to be a straight shot.
Another bear flag. Looks like another bear flag.
I'm not hearing anything about an 80% wipeout, so I guess that's the good news. And the other good news is that Bitcoin is very cyclical. We've seen these cycles play out before, and so you just got to kind of hold yourself right here if you're a holder, or if you want to buy, just wait a little bit.
Well, I mean, what I thought was really interesting about that 10x research report is the whole industry. I mean, you and I have been talking to people in the crypto industry for a while. They were so excited about institutional adoption. It's going to become more normal for people to hold Bitcoin. Well, guess what? That's a double-edged sword, because when it starts going down,
All right.
they're not necessarily willing to step in there because we don't know how much more it's going to go down. And they are buying and selling in more size than a retail investor.
I think the bottom line too is we need kind of
All right, GE back to the 50-day GE.
They're not able to fund projects the way they were in the past. They're just not attracting investor capital. So there needs to be a new thesis here. Some kind of maybe the technology hasn't even been invented yet. Maybe it integrates with AI in some way. But the old paradigm is kind of dead here. 2025 looks bullish here in terms of financial regulation for Bitcoin ever, and we didn't really see that much.
Well, and that suggests that the Clarity Act, which the industry is now pushing, including and sort of led by Coinbase and Brian Armstrong, which will clarify the regulation around crypto, that suggests that even if that does get through, it might not be a very long-term.
All right, hedge flows are starting to move higher. You're seeing calls being bought. This could be fleeting. It is dealers hedging the markets. So as the orange line and the blue line move higher, that's creating positive gamma. Puts are being sold underneath. Calls are being bought with the orange line rising. That's positive gamma. So I want to see hedge flows start to trend, okay? I suspect that if we start to see more bear flags, then obviously we're going to continue to move lower. Where can we go? Let's zoom out a little bit. Okay, so there's some big levels down here at 6750, just below this level. So we're just below 6,800 right now. We're right at it, actually, 6,800. So they need to defend this. If they can't defend it, they being institutions or, hedge funds, if they are interested in buying, we'll see it here. This looks like spreads. Let's see what happens. It's only not even an hour into the trading day. If you have profits, probably not a bad idea to, short term, if you have profits, but not a bad idea to get flat so you don't lose any of those profits. If we start to bounce, we can always get back in a little bit higher, but we want to make sure that we don't lose it and start moving down towards 6,750, right? Or even worse, 6,700. What's the VIX doing? VIX, I still have some of the 20s left and the 20-30 call spreads, right? So this is continuing higher. VIX continues higher. Getting a nice spike. People are getting scared. Volatility is picking up. All right. So oil and gas names that have been higher are seeing some profit taking. So my sense is that some of these have been moving higher, like Valero broke out of this pattern. My sense is what's going on is that people have some gains maybe from last week. A little bit up. Maybe they started positions yesterday, and they're just reducing their exposure, which is what I would do if I have options that expire next week or the week after. I'd probably be, okay, I got a modest profit, maybe I got $1,000 profit. I'm just gonna clear the deck. Let's see what the markets do. I think that's a smarter strategy than instead of trying to bet, okay, we're gonna keep going lower. I throw money at it, the markets bounce, and then I lose money. Go flat on some of these positions. Now, I'm talking about options that expire in the next couple of weeks, right? This Friday, next Friday, that sort of thing. If you got options that are out in June, like I have many, I'm not that concerned about. Like I have some Google call spreads out in June. So this little bit of volatility being dampened by the puts I took off this morning. Okay. I've had calls for a while. I rolled those up a couple of times. I think there's a few of you in there in the same boat. Anyway, we're testing the low again here. Testing the low. Looks like a bear flag. Looks like we're going to keep going. The 6800s were $13. They're $42 now. They increased $30. Puts are still bid.
Now, the one thing I'll point out is that some of these firms have disclosed their exposure to software companies. Others have not yet. They might through the day. Ares management actually said that they have less than 9%, which is, I would assume 9% exposure of its total credit, private credit portfolio to software companies. So we're really just trying to get a feel for what it looks like right now. On the other side of the equation, though, the thing I'll point out is that financial sponsors for private equity they're a huge part of the deal market, and so if they're having a harder time getting rid of positions in software companies, that can absolutely influence what the deal market looks like going forward.
I mean, it's also really interesting because the companies that are
Okay, we're making a new low here, S&P. Okay, so Trace still headed lower. It looks like we could be heading down to 67.30. All right, these puts have gone from $15 to 40, 48 now, 45. All right, $30 on these puts. I don't have them. I'm just saying. I'm just watching the puts that I loaded up this morning. I'm choosing to do not much of anything.
And holding these loans, and they said that effectively loans and equity positions. They said effectively some of them aren't sure what to do right now, and they're just trying to figure out a strategy. And part of that group is actually saying, let's figure out a thesis, and if we can get one, let's back the truck up because obviously the software situation right now it's pretty opaque and vague. What companies will be disrupted? Which ones will?
Okay. Vinny, why are you so calm? Because I've been through so many of these pullbacks. Losing your focus serves no purpose. I mean, look how many times we've tested the 50-day. This one over here in November was a pretty decent pullback. That candle, right? What was that? That was, what day was that? That was Thursday. That was a Thursday. I forget what happened that Thursday. Was that after FOMC? I forget. Anyway, the next couple of days we're right back where we started from. So having all the anxiety served no purpose. So why get upset? Why get anxious? I choose to do nothing at the moment. You could trade downside. You can trade the puts on the downside. You're going to pay up for it. VIX is really high. So the time to buy puts is when you can, not when you have to, right? So if you're at a point where you have to buy puts, then you haven't been paying attention for the last 3 or 4 weeks, right? Because this change has been noted for at least 2 weeks. And last week's weekend video, I talked about this quite a bit too. So when these things change, you need to pay attention. When you're down 2%, you don't want to take a loss. Oh, I'm down 2%. We'll make it back to the high. 2% becomes 3%, becomes 5%, becomes 10%. There's a couple of people in the trading room know exactly who I'm talking to. You got to take the stops. You got to pay attention, right? That's why we have a weekend video. All right. This turn didn't happen in one day, 1 week, 2 weeks, 3 weeks. It's been happening over the last 3 to 4 weeks. Okay. We saw that the momentum was slowing, flattening out, and turning down. I told you to start. If you're going to buy anything, buy consumer staples. That's up, right? That's defensive. Okay, so let's say that you made a mistake and you didn't take the stops. What can you do about your process in the future? Pay attention to what the markets are telling you, right? Junk bonds gapped down on Monday. Okay, this is a signal that we've communicated many times. Now, this doesn't look that bad, really, when I look at it. It looks like a range, right? This is the weekly. Are we going to make it back down to this level? Probably. That's that November low there. But earnings are good. So if our earnings were shit, I'd be a hell of a lot more concerned. I'd probably be about 50% cash if earnings were shit. But you can't have everybody on one side of the boat and expect the markets to just keep going. It's just not realistic. It's not going to happen. And the AI narrative, I was making fun of them last year, talking about the AI bubble. I mean, they just kept talking about it because they know eventually they're going to be right, to a certain degree. But the CAGR for the AI build out, global AI build out over the next 9 years, the CAGR every year, the compound annual growth rate is north of 30%. So what does that mean to me? That means that these dips are going to get bought. Okay. Tech right now is rotated out. So we're definitely out of tech. You don't want to throw money at tech right now. Micron had a nice bounce, and look what Micron did. Okay. These high flyers, these stocks that have hit these highs are most susceptible to a pullback. So if you're going to buy some puts, maybe you dabble here, Micron or SNDK, right? These are starting to crack. SNDK, AMD, okay, that already cracked. NVIDIA, is it over for them? No, look at the 200-day. 200-day is right there. So I'm collecting cash, looking for the bounce, looking for cooler minds to prevail and to pick up some shares for the longer term. Less is more right now, folks. Less is more. I can't tell you how many times in the past 20, 30 years ago where I was like so reflexive. Every time the markets hiccuped, I would get out, I'd get back in at the wrong time. I'd buy puts at the low and then winds up bouncing. It just makes sense to just sit tight. Market's going to be fine. Markets are going to be fine. Let's just take a look at something real quick. All right. So I know this is going to make you roll your eyes, but that's okay. That's okay. Where are we here? I got so many charts. I don't know. I gotta lean. Take some of these out of here. Okay. This is something to definitely consider. All right. Valuations and earnings. Okay. Down here is where the PEs currently at 20. This is where markets are. 2,000 points above that. I'm not saying this is going to come back. Just this is a little bit out of whack using the PE. Let's see. S&P 500. I started trading over here. Okay, December 1987. Markets were down 29%. That was a lot. In 3 days to be down 33%, 29% in 1 day, something like that. But where are we? We're way up here. So I started investing over here. I started a 401k back in 1987, December. Some of the first positions were IBM. If you've been around, you know that. IBM was one of my first positions back in the day. It's gone through a lot of changes over the decades. But here we are at the highs. I mean, when you're in fear, you got to zoom out. You got to zoom out, look at the markets, calm your nerves. We're going to bounce. Okay, so markets go up. The recent catalyst, the AI boom, is taking a hit at the moment. You know, investors and hedge funds and institutions, portfolio managers are all rethinking their assumptions and their expectations. What else? Let me see. The New York Stock Exchange. Oh, you know what I wanted to look at? Yeah, New York Stock Exchange. NYSE. Okay. All right. So here's the NYSE. I don't see a bear cross. I don't see a bear cross like this over here. Now, the bear cross would come after a loss of the 200-day, and a lot more damage that would occur with a lot more damage. Let me just shorten the time frame here. Let me go to 1 year. Okay. $20.50 200-day. $20.50 200-day on the NYSE. Okay, NYSE. When in doubt, you always want to check the New York Stock Exchange. Okay, 20.50 200-day. They're all rising. Are markets starting to lose some of these? Yeah, that's perfectly normal. The weekend video, I talked about potential for a 5% pullback. Let's see what that looks like on the S&P, 5%. S&P 500. Worst thing is when you're investing and you have no reference points, you have no, basically just reference points. You have no reference point to where are we right now? We're 3% down from the high. 3%. Okay, so the next level down we said already was this one over here at 67.20. Okay, that's 4%. And then even the worst case scenario would probably be a pullback here. That's 6 to 7%. Okay, so this is the reason why you need to have, take the profits off of things that you have profits on, just reduce your exposure if you need to. If you're 100% invested right now and you have no way to buy anything, then you just need to start reducing some of your exposure. Talking about short term over the next 2 to 3 weeks, if you have options, if you have shares, you could withstand some of this. But if you have 100% invested, maybe take some profits off some things, because if we do pull back 7 to 8, 10%, okay, the 200-day is right here, 200 days there, 200-day would be almost 8%. I hate to say it, but that's a possibility. So if you're not comfortable with a 8% pullback after 45% gain since the April 7th low, then maybe you need to rethink your bias at the moment. Yeah, so that's that. All right, it's starting to bounce now. I've learned over almost 4 decades of trading that you have to be clear-headed, patient when we get pullbacks. I mean, it's not that bad, really, 3%. I'm talking like we've got a crash right now. I apologize if that's the way I'm being conveyed. But that's the maximum drawdown, 7%. I don't see us going there. I think we're closer to something like 5%. 5%. 4%. Yeah, that makes a little more sense. Okay. The problem with day traders is that they don't know when to quit. A lot of times they don't know when to quit. We'll just keep trading like nothing's changed. I'm going to buy the dip. You're going to get destroyed. I'm just saying, when the markets do something different, we've been moving up. Dips have been being bought. I mean, if you just look at what's been going on recently. Okay, so on this dip from 7,000, a new all-time high, we dropped the next day. Buyers stepped up, pushed it back up. We didn't get back to the high in any of these occasions, but the buyers keep stepping up, stepping up, stepping up. So this starts to look more and more like distribution once you lose the 50-day. Now, the next step of distribution is phase 4, right? Phase 4 is the markdown. Is that going to be the case, or are we going to have a bigger or a larger range here? And then a bounce. I mean, consolidation is possible. All right, so we do something like this. Okay, and we consolidate in this range. We pull back 4%, which is what, like, I was thinking maybe that's the most we're going to see. But if we do see 4%, and then we bounce, you made 45% from the April 7th low last year to 4% pullback. We follow through and we start breaking out. All right, there goes the S&P. S&P is charging higher now. Puts are like dropping off like flies. We went from 45 to 30 in like 2 minutes.
Our nuclear precision health business, our OptiFreight logistics business, our direct shipment to the home business, and for healthcare services and supplies as well. All those are seeing very strong demand as well.
It's interesting, Aaron, when you talk about people taking advantage of their, taking control of their health and using more of this stuff. It's interesting because it's a little bit of a double-edged sword. If you look at many of the health insurance companies, they're spending
all right,
because people
cooler heads prevail. I was reading some meditations from Marcus Aurelius last night. Don't ask me why. I was just thinking. When it rains, it pours. You catch yourself thinking negatively about everything. Well, guess what? That's what you're going to get. That's what you're going to get. A lot of people will tell you this. Theologians and philosophers, the Greeks. What the hell is Vinny talking about? I'm just sitting here waiting for the markets to give us a signal other than, okay, we're selling. We got some fear in the markets. VIX spiked. I took some profits off on the VIX March 20s. Okay, I'm just sitting here waiting. I'm not going to throw money after the markets right now. Having reduced my exposure, I keep reducing it. I was talking to my son last night about a business, getting him going. He kept saying, "Yeah, I don't want to do it until I get a successful fire." I said, "Yeah, dude, you got to get your marketing, in play. We need to build him a website and post his progress. He's not trying to sell anything. My son, if you don't know, he's into liquid fueled rockets. His first one was machined aluminum. It fired really nice. but he's got a lot of work to do because he's 15. He knows what he's doing, but he doesn't, to a certain degree. Now he's working on a second one. It's going to be made out of some alloy, 3D printed, a rocket engine. It's like, wow. I mean, what was I doing at his age? Still sitting there watching the markets. What does the market do? Okay. So potential range. So anyway, I was talking to him about some things. So I was thinking, it's running the lower Bollinger Band. Let me take Keltner off of here. Keltner, just for this one chart. Let me call this February 05. Okay. I want to do a couple of things here. All right, you can see RSI is still drifting lower. Okay, so we're not oversold there. MACD, stochastic, everything is resetting. So this is going to be good. So wherever this lines up, stochastic will be oversold, MACD will be oversold. You can see 4 distribution days there. So that was the other thing we were looking at. We had 4 distribution days. Did that mean something? Turns out, yep, it did. Okay, so Bollinger Bands. Let me take some of these things off here. 9 EMA, I don't need that right now. 9 EMA. Okay, you can see that we're in a negative Kirby here. So we're dropping below support. This Kirby, this is where a lot of the trading has occurred. So this is pulling back. Okay. I would just sit tight. If you're at work, just go back to what you were doing. Right now we're going to take at least, I would think, 2 or 3 days to sort this out. Earnings are good. Okay. Ba-ba. 200 day. Okay, one more here. Let me just add one more. One more drawdown level here, right there, down to this one here. This right here. Okay. Okay, that one there.
Supportive diabetes, and CGM would also grow.
Gotcha. Interesting. And continuous glucose monitors for those who are not familiar with the acronym out there. Aaron, always great to catch up with you. Thanks a lot for your time today.
Okay, preparing for the bounce, just as important as analyzing your positions. Right now, we're looking for an area where we might bounce. I want to be ready. Doesn't mean that once we get down to wherever these levels here, that it's time to just buy. We need to see a lot of things line up. Advanced decline percent, junk bonds, 10-year yield, the dollar, all that stuff needs to line up. So we got plenty of time. Hopefully you've been taking some profits off. I love these medications that could result in death.
helps me compare two different versions of the same document.
We'll be fine. We'll be fine.
It makes me feel very confident.
Looks like more
AI assistant, we're able to focus on finding new
covers here at the low. Okay, watching this RSI. Okay, look for this to reset.
I just love your voice.
Write this down. 1-800-676-3021. 800-676-3021. I am JoJo. I lost 40 pounds and I feel so confident. Weight Watchers app really helped me learn how to portion my meals. I can't believe.
Okay, so this looks pretty good. All right, this chart's pretty good. 4 distribution days. Okay, let's just make a note of that.
Thanks so much, Juliet. Double Brian segment here. Brian, good to see you here. The Express Scripts business. You're going through that earnings report today. That was a big driver for you. What are some of the drivers in that business right now?
Okay, that looks really nice. Okay, so we're done here. So we can always reference this one. Let's see.
Strength across both our Cigna Healthcare growth platform as well as our Evernorth growth platform. And the specialty pharmacy business within Evernorth was a particularly strong driver within the quarter. You asked about Express Scripts, which is our pharmacy benefit services business.
Okay, so this is in the upper half. All right, so that's where this
It's going through a
is.
significant amount of industry transformation, as evidenced by the new product we introduced last October, which puts patients at the center.
Okay, we're still bouncing here. Not doing anything. You don't have to trade every single day. Microsoft starting to bounce. We need a base in Microsoft. If you're thinking about Microsoft, maybe you have a position. We need a base to start.
So you're right, there was
Micron,
legislation yesterday.
shooting star at the moment, Micron. Let's go down the list of the NASDAQ 100. Okay, we got a bounce on ARM. ARM, I would suspect, is going to get bought here. So Tony, ARM.
It really just builds off the innovation we introduced last October, which is a new rebate-free pharmacy benefits model where patients are guaranteed the lowest possible prescription drug cost when they go to fill a drug. So whether that's the price we've negotiated with drug companies or an alternative cash pay price or their copay, whatever the lowest possible price is, we guarantee patients will get that. So it gives them the
Okay, you got ARM Holdings, I think you said, Tony. Let's see, ARM. I think you said you had ARM Holdings. ARM Holdings, yeah. Okay, so this looks good. You had earnings, right? ARM Holdings. Let's see what that looks like. ARM. Oh, no, they don't have earnings yet? Okay. ARM Holdings. Oh, yeah, they did have earnings. Today. Oh, tonight. No, last night. What day is it, Vinny? It's Thursday. Okay, hello. I haven't been sleeping good lately.
Increasing demand for drugs, increasing demand for medical services that comes from the aging of the population.
Meta.
And it comes from more and more people who have chronic conditions.
A lot of charts that have pulled back. JP Morgan down 3% after moving back above the 50 days. So that's a good example of something. If you have a profit on JP Morgan from maybe last week, taking it off this morning, probably not the worst idea. Taking your profits, just sit on some cash. We're probably going to bounce. Anyway, ARM Holdings looks good. They beat. Look at the earnings growth. Okay, looks good. ARM Holdings. Okay, 59 cents. Revenue of $1.24. They're expecting 54 to 62. revenue for okay, you see the difference here? This is where Microsoft went off. Okay, this is where Microsoft screwed up, right? I won't say screwed up because they're reporting what the data actually says. So here we are with ARM Holdings showing 59 cents per share on revenue of $1.24, 124 billion. Next quarter, they expect fourth quarter, 62 cents, 152 billion max. So that's quite a bit more. So this looks good. Much better. So we need more of this kind of thing, less of Microsoft with its flat earnings guidance. So this looks good.
We share the strategic intent of that. And importantly, some of the innovations that we brought forth, even in recent months, directly speak to that. So a good example is late last year, we announced a partnership with EMD Serrano to bring fertility drugs to Americans at a much more discounted price compared to what they were able to get historically. That'll be available through the Trump RX platform that'll be coming online in the coming months.
Well, good luck in the coming quarters. Looking forward to talking to you again soon. Brian Ivanko, I'll talk to you later. Appreciate it.
Thanks for your time, Brian.
All right, Julie, back to you.
Brian?
Double Brian.
Appreciate it. That's it for Market Catalyst. I'm Julie Hyman. Thanks for watching. We're Yahoo Finance.
Explore the rivers of Europe with Tao. Connect more deeply to the people and places you visit. Enjoy a more engaging atmosphere with fewer passengers.
Okay, so that's a big positive. All right. So not everything is negative. This looks good. ARM Holdings looks good. Let's take a look at ARM. Okay, ARM. Yeah, that looks nice. All right. So you got a double bottom. While I wouldn't recommend buying anything today, if ARM Holdings can manage to get back above the 50-day, that would be a good start. All right, 50 days overhead. Okay, so 50-day is, let me just mark this up for Tony, one of our members. He was concerned about his portfolio. Okay, the 50-day. It is basing. RSI is already oversold and turning up. So that's a good sign. Okay, RSI is turning up. MACD is looking like it wants to turn up. It is trending. And the volume looks good. Oh, that's really nice. Look at the volume. Okay, so let me just do this. Okay, ARM. Okay, shopping list. At least I would add it to my shopping list. ARM Holdings. Okay, so Tony, I made this, I did this analysis for Tony, who has a position. Okay, ARM Holdings. All right, with everybody negative, with the market's negative on most stocks, especially tech, there's no hurry on ARM Holdings. But definitely something to pay attention to. Build a position perhaps in the next few days. Unlike Microsoft, they gave positive guidance. Okay, so okay, let me just do that. Let me do. All right, everybody's people are probably freaked out right now. I haven't looked at X or StockTwits, but I gotta imagine people are a little taken aback. We got back above the 50-day, which is really weird when you think about it. We got above the 50-day yesterday after dipping below. Okay, we dipped below the 50-day yesterday, bounced right back above, did the same thing on Tuesday. This time we gapped down. So, yeah, never good, right? Um, arm.
And silver is plunging after 2 days of back-to-back gains. The precious metal sunk by 17% at one point as the commodity tries to find a floor amid the market rout. The record run in silver and gold unraveled last week amid a rebound in the U.S. dollar. Let's get a check in on stock futures right now. We've got selling pressure across the board here today. So yesterday there was a bit of a divergence with the Dow performing better, the Nasdaq doing worse. Today all three are indicating a drop in the open, although there's still divergence. But the Dow is negative, indicating a drop of nearly 170 points at the open. The S&P 500 pointing to a decline of about 0.6%. Nasdaq 100 futures down the most, about 0.75%, and that's because, at least primarily, or at least in part, because of Google, the Alphabet and Google parent falling after saying it plans to nearly double its spending this year. The company reporting CapEx spend in the range of $175 billion to $185 billion. As CEO Sundar Pichai says, AI investments are driving revenue and growth across the board. Joining me now, John Blackledge, TD Cowen Managing Director and Senior Equity Research Analyst. So, John, what is the difference between a company that announces huge spending plans and the stock rises, and one that announces huge spending plans and the stock falls?
Yeah, Julia, the gap there is expectations. And so, like you referenced, at the midpoint of their CapEx guide of 180 billion, double last year, we had been forecasting 125 billion. Sell side consensus was 115 billion, and I felt like just in our investor conversations leading into earnings, investors were around 130 gap.
Get it down. The morning's going by pretty quick.
Are digesting this guide on CapEx, but also with it, and what you just led with, this cloud revenue acceleration was massive. So you are seeing the AI demand in investments in cloud, search growth accelerated, and Sundar also mentioned that there are capacity constraints still, just given the strong demand at cloud, at search, etc., for the strong AI demand. And so
All right, so a little short covering. I'm not going to put too much emphasis on this because, we're due for the pullback. We're already down. Let's just get it over with, right? Get it over with.
To your point about Gemini, I thought the numbers were interesting there. That 750 million monthly active users on the Gemini app.
I'm sorry, I'm laughing over here. My wife and my mother-in-law are having a fight. I don't know who has the upper hand. Is it Russian women, Latino women, Italian women? I don't know. Man, they when they get mad, whew, get out of the way. My office is removed from the house, but I can hear them. Oh boy. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's February the 5th, Thursday. Markets are down 3%.
And then we'll see how it evolves and if it becomes
Nice little bounce.
kind of the
Yeah, I don't know in the near term if the tech tape is gonna turn up, but I think you're seeing like the fundamentals.
Hedge flows trying to turn up. Got a lot going on down here. Let's see what the net open interest looks like.
Fundamentals are very good, and we think Amazon's are as well. We don't cover Microsoft and some of the other players, but yeah. So we'll have to see.
Okay, there's a lot here at 6,800. Next level is 6,755. Okay, this area here. So that's possible. And then there's a big level down here, 6,700. I forget where the JP Morgan collar is.
multi-billion-dollar corporations who have unlimited funds. I'm talking about insurance companies who are going to be defended. You need to get a lawyer. How much is it going to cost? It's not going to cost you much.
Okay.
This is what blue collar looks like. It looks like early mornings and long days, like problem solvers, people managers, and do-it-all pros. It looks like leadership, ownership, entrepreneurship. If this looks like you, jobber.
After a busy day, there's nothing like sinking into the soothing waves of Candy Crush Soda Saga. And swipe the stress away as you free the bears, floating into victory with every adventure. With just the right amount of challenge, you'll find it easy to clear your mind and sharpen your skills. The perfect way to set yourself right. So what are you waiting for? Download now and solve so delicious puzzles.
Still tickling the lows here. Okay, Micron, JP Morgan at the low here. Micron's off 2.5%. Chevron did take some off. Chevron, when it was a bit higher, just reducing my exposure. Chevron, I have June 180, 185s. So I took some of those off. If we dip a little bit more, I might get back into 175, 180. It depends on how far we move. We're at 177 right now. So maybe I can get some more of the 180s at a discount. So that would be good. Palantir still pulling back. Palantir below the 200 day. So there's some damage. There's some damage out there in the tech land. Remember to just keep an eye on XLP. If you're buying anything, look at the XLP. Look at the insurance companies. Look at the banks. Okay, here's XLP. SCHD. We've been talking a lot about since January 8th. SCHD. Inside day is probably going to base. I would think that SCHD, if you have or took some of this, okay, I'm looking for prices to flag in this area or consolidate. 9 EMA is right there. We got lots of volume. So this is institutions. Institutions were picking up shares. Okay, we bought over here. We bought on this breakout. Rolled some from SPHD, which is also looking pretty good. Okay, SPHD. These are all defensive for the most part. SPHD. Inside day. Okay. So people often say, I want to average down, Vinny. I want to average down. I only average down when when we pull back. in an upward trend, right? I don't average down. I wouldn't average down on something that looks like this. Okay. That's the reverse of SPHD. All right. So I would not be adding to a position that reverses like that. Only when it's rising. And when I say average down is like these pullbacks, I might buy a little bit. On the weekly, a little more obvious on these pullbacks. Okay, an upward trend. Continue to look forward, but not if it's trending down. Not if it's doing this. If it's doing this, I'm not going to average down. I mean, because you don't know where this is going to stop. Some of you talked about Hive. That's lower. Arm holdings. I like that one. Looking for a bounce back up into the range, basically. Just connect the lows. Okay. Arm holdings. I haven't done anything with ARM yet, but I am thinking about it. I'm looking at reasons to buy. Their earnings and guidance are positive. Okay, here's the middle of the range. So at a minimum, I'd be looking at 145, 140, 145, something like that. Okay, that's the middle of this range, basically. ARM holdings. Okay, S&P, nice little pop there. So shorts covering very quickly. This is why you don't want to buy puts at the low of the day. Okay, you don't want to buy puts down here out of fear that we're just going to keep going. You got to see a reason for it. Right now, we got shorts covering. I would just assume this is, again, shorts covering. If it's more than that, we're going to push right through VWAP and continue to move higher. Earnings are good. 75% of companies out there are reporting good earnings.
I think rotation remains a dominant thing for markets this year as we think about investors rotating into what I would call old economic sectors and stocks, whether that is transports, regional banks, chemicals, oil and gas. I think there's a good reason for that. And this week's rise in PMI, looking at manufacturing activity, expanded at the fastest pace in over 3 years. So there's hope that we're seeing a turn in the industrial cycle after a long period of stagnation. I think that provides some promise. And this is happening at the same time as the momentum moves away from some of the more growthy, speculative parts of the market. So I think this is a healthy development.
Okay, nice little pop there, though. S&P. Microsoft off the low, Apple coming off the low, Tesla coming off the low. Meta's had a pretty steep discount over the last week or so since earnings. Okay, so 6 days down from the high at the 50-day. They're showing up at the 50-day, they being institutions. Okay, look at the volume by price node here. A lot of buying that's occurred in this area. We need to hold this and push back above. If we get back above the 200-day, I would say Meta's a pretty good candidate for a long, end of year type of thing. Oh, hope everyone's having a good day. It is Thursday, February the 5th.
What that has translated into is basically earnings rising faster than prices and valuations getting cheaper. It's been more than a year that the technology sector has not seen valuation expansion. So at some point, there's going to be some bargains, and technology remains one of the key drivers really for the earnings growth for the S&P. But now there is an alternative, meaning that before there was no earnings growth from the rest of the market, and there is one now. I don't think this decline in technology stocks is going to be becoming something deeper necessarily, but it is a dynamic that we are watching.
Okay, that looks good. All right, so S&P coming back to VWAP. Okay, most likely we get rejected at VWAP. This is a line of sellers. That bar right there looks like sellers. Okay, talking about this right here. This right here are sellers right along in here. Okay. VWAP is just above. That's the next level of resistance. We're probably going to get rejected right here. But if we get through this area, the VWAP, then we could see more of this. I don't know if the market's going to do what the market's going to do, but I don't know if I feel better if the markets move lower first, take out one of these levels down below, and then bounce, off 5% versus 3%. Right now we're down 3%. Not that the market wants to listen to what I have to say, but
healthcare as a sector has been out of favor and potentially has some upside. So we're not recommending but we are spreading out some of our exposures as we see that cyclical upturn acceleration benefiting sectors like industrials.
And the sort of macro backdrop here, because traditionally a sector like industrials or some of the other cyclicals would be doing well because there is an expanding economy. But at the same time, yes, we saw strong GDP growth late last year, but we're in this sort of sluggish labor market. Do you think that that is going to start to be reflected in growth as the year goes on?
I think the low hiring, low firing conditions in the labor market will probably persist. But at the same time, corporate profits are rising. We are seeing
okay, so we're through VWAP. All right, we're starting to accelerate, so shorts are covering.
We're talking about slowdown, no doubt, in the labor market, but mainly supported by rising wages that outpace inflation. So even though necessarily we have seen the so-called three-state economy,
6,900. Yeah, that's a long ways away. 6,900. It's a long ways up there. Micron bouncing.
Including the industrial manufacturing side that has been in, let's call it, recession most for the past 3 years.
And then I know you, like many investors now, are looking outside of the U.S. as well, right? I mean, that trade has had a bit of a run already, but it feels like people are kind of sticking with it.
Yes, we think about one of the most lasting drivers of returns being earnings. We are seeing earnings acceleration outside of the U.S. Similar to industrials here in the U.S., where we have seen really manufacturing sluggish environment for the past 3 years. That's been the case also abroad for other indices. And now that is starting to change. The U.S. dollar weakness has been a key driver behind the outperformance, but it's not.
Only problem with buying longs today is that we don't know if we're going to get another flush lower. So I'm reticent. I'm not really interested in being a cowboy and buying a low and be able to say, oh, I got the low yesterday. I'd rather see more evidence. Right now, the S&P continues to rally. This is good. It's a start. What was the ticks here? Okay, futures continue to rise there. AAPU, Apple off the low.
I think you should, because I'm deleting that post on X in about 2 minutes after I go live.
Explore the rivers of Europe with Thurs. Connect more deeply to the people and places to visit. Enjoy a more intimate, engaging atmosphere with fewer passengers on board and expertly guided shore excursions without the crowds. All included in one upfront price. Travel beyond ordinary. Travel with Thurs.
Thanks, Jim. Everything buys on this robot. Everything.
All right, S&P S&P continues to climb here. So far, so good. All right, we continue to push through VWAP. Nice acceleration now. Shorts covering. Nice volume. Look at MACD. MACD positive after a deep discount. Okay, looking good. So far, so good. All right, so buying some of these, maybe dipping our toes, not a bad idea. We continue to thrust higher. So, what is junk doing? What is junk doing? Meta looks good though. Meta, nice bounce off the 50-day. Meta, junk bonds, gap down. Kind of like in no man's land, below the 50, above the 200-day. RSI is oversold. This could turn up, though I doubt it. I doubt it turns up yet. We already talked about the weekly. It's in a range, so it's not too much to worry about here. Okay, we're only talking about 2 points from the low, 96.50, up to the high, 98.50, more or less. So 2 points. Okay, a couple of percent. That's not a big deal. Junk bonds. It is a signal, however. It is a signal. 10-year yield. 10-year yield did drop off a little bit today, so that's good for IWM. Small caps still need a bounce. Qs shorts are covering for now. Shorts covering off the low. The Qs.
Here's what else is on my mind right now. Qualcomm's guidance stunk and the sell-off is deserved. Company calling out weakness in the smartphone market, largely part because of the global memory chip shortage. Execs say this dynamic could persist into 2027. An outlook like this should have been teed up by management 3 months ago. Bottom line here, come on guys, do better. The next tech giant in line for a reality check for me is chip player ARM Holdings. ARM also serving up some less than savory guidance, blaming memory chip shortages. Keep in mind that ARM designs the architecture that forms the basis of a large chunk of the smartphone chips in the world today, including Qualcomm. That leaves it with the prospect of subdued royalty sales as mobile processor sales essentially stall. Similar to what I just said about Qualcomm, ARM execs should have done a better job guiding investors to these challenges. Instead, investors in both companies are left completely holding the bag today. And I know you want me to lay into Alphabet for shocking the hell out of everyone by calling out up to $185 billion in CapEx spending this year. Note the street was around $120 billion on the high end. Here's what CEO Sundar Pichai had to say on this shocker.
Obviously, our CapEx spend this year is an eye towards the future, and you have to keep in mind some of the time horizons are increasing in the supply chain, etc. So we are constantly planning for the long term and working towards that.
And I said it was Pichai, it's Pichai. But I'm not going to lay into alphabet for one simple reason. The fundamentals of his business are so
Okay,
strong.
cues are bouncing. It's not, I don't want to jump up and down and celebrate yet.
Which you can read for free now on Yahoo Finance. Just go to alphabet.
Okay, Micron, big move back up to the highs. Micron, high of the day. I assume it's just shorts covering at the moment. Okay, Apple. Okay. Okay, let's look at the sectors again. Okay, sectors, materials have been up quite a bit. So it just looks like people taking profits to me. We've had a nice run up since December into January. Same idea as the S&P. You've been up quite a bit. You're off 1% from the high, 2%. Is it time to take a little profits off and materials, maybe rotate into something else? We'll see. Communications. Okay, that's taking a break. Communications, that'd be Meta, Google, Netflix, etc. XLE Energy, still hanging in there, 921.50 or up and to the right. Volume shows institutions. I really doubt institutions are day traders. They're probably looking for more upside. A pullback probably gets supported somewhere around the 9 or the 21 day. I doubt we pull back too much more than that. Energy. Financials. Try to get above the 50-day. Individual sectors in the financial sector like KRE, still hanging out at the highs. This still looks good. So if you're holding on to, say, PNC, which pulled back yesterday, today rather, pulled back today, inside day, looking for a little flag over the next 3 to 4 trading days, hopefully. I don't have any PNC, but I'd like to buy some. Walmart, you know that I wanted to get into some Walmart, so we're looking for a dip there. Still no dip. I'm not going to chase it up here. Looking for the dip first. I want to see the first indication that it pulls back like it did 2 weeks ago. Find support. If it finds support and bounces like it did on the second bullish candle here off the 21 day, if it does that, then I can put a stop underneath 115 as a reference, an example. Look for the follow through. So this hasn't pulled back yet. So I'll be looking for Walmart to do something like that. That's retail XRT. Yesterday we looked at Dollar Tree. Okay, that didn't follow through. GE, Caterpillar. Okay, down even more today. Russell shorted this at 721. $721. Russell shorted this. Okay, so that's quite a pullback there. Nice timing there with Russell. 3 days outside the upper Bollinger Bands. Looking for extended prices to get pulled back a little profit taking. So that's industrials. Consumer staples. Okay, that got a little extended. Now we could see some of this pull back in. So people were chasing stocks. Okay, this is why I don't like to chase and why I don't want to buy puts at the low of the day, for example, S&P. Okay, big reversal. So if you bought puts at the low of the day, you're probably crying in your milk. Okay, we could still fall off. This is a descending pattern. So I'm not gonna throw a party yet. I want to see more proof, but this is definitely in a descending pattern. If you aspire to linear regression, if you know what linear regression is, okay? So you have this, the highs and the lows, and your linear regression. Okay, so the odds are it gets rejected in this area. If it gets back up to here, definitely look for another rejection point. If it makes it through that means things have changed. Okay, so that's what we're looking at right now.
And then they partner with Google, who at the time, there were a lot of questions 6 months ago about the search antitrust and whatnot, because AI was going to displace them. And then all of a sudden,
Okay, what is IREN doing? IRE, IREN, and the ETF, IRE, IRE. Whoops.
and that's why the stock has performed so well the past 6 months.
Tell us what you would be looking
Okay, S&P is starting to stall here, stalling a bit. We made it through VWAP. That's good. Doji. We could just close right here as a doji, just stay in this range, and then get a bullish candle tomorrow. So what are the probabilities that we bounce back above the 50-day in the next few days? Not necessarily tomorrow or today. Well, we've pulled back. This is the fourth time we pulled back since October. We came back to the 50-day in October and bounced before we dropped below it. But in November, we dropped below again into the start of December, and then in January, and the very next day we were back up. So there's a high probability that we could see a 3-candle reversal here if this turns out to be a doji or a hammer. So do you need to buy here at the low and feel like a genius? Well, you could. I'm going to wait and see what happens, because when it rains, it pours. This is a fourth time down. Do we reverse back up? And I have to close positions that I had profits on that I collected into this week. I don't want to throw those profits away. So I might miss. I'm going to miss some position, some changes, some positive changes here, some potential trades more than likely. I already pointed out ARM Holdings. I'm looking at doing something there. Okay, looking at doing something with ARM. Volume. These volume spikes are very telling. If this holds and starts to move back up, I'll probably start a position in ARM Holdings. Meta, I'd be interested in Meta as well. We bounced at the 50. Do we get above the 200-day? This moves 10, 20 points a day. So, yeah, it'd be great if you bought it here and it jumps above the 700 and it follows through and makes new highs, right? Then you're a genius. But what if it drops 20 points tomorrow? What if it doesn't hold the 50-day? I don't know. So a follow-through day tomorrow would give me the confidence that buyers are still there picking up shares. All right, so I need a second day. So there are stocks I'm interested in. Apple, I'm interested in Apple. Okay, I have a position in AAPU shares. I'm looking for this to continue to make higher highs and higher lows. RSI is still rising. Okay, some of these stocks have gotten beat up. Meta, look where RSI is at 50, turning up. MACD, stochastic still could push a bit lower. Google, down on earnings this morning. Back above the 200-day. Okay, back above the 200-day at 324. I have June call verticals. I decided yesterday, let me protect my position because we've gone so far. So I had a call spread. I added a put spread for protection that made it a long iron condor. So what that meant was that I had puts. I didn't want to buy, $30 puts. So I made it a spread, made it cheaper, but I protected the downside. I took the profits in the downside, and now we're turning back up. So that turned out to be maybe a win-win. Most likely will be. Okay. So that's good, Google. So there are some things that I'm interested in. I'm just not going to go balls to the wall long at this point.
the buying opportunity. Of course, there's little mini rallies within bearish trend, but nonetheless, even the bulls are talking about this bearish trend that you are seeing in Bitcoin right now.
I mean, Mike, why not Bitcoin 10,000? Isn't that like Bitcoin is not like a stock that's generating cash flow? Why not 10,000? Why not 5,000? And would you call what we're seeing? Is this a new crypto winner?
I would definitely call it a new crypto winner. I believe MicroStrategy's president called it a crypto winner a few weeks ago or a month ago or so. Brian, I agree with the point. There is no way to fundamentally value Bitcoin. And as far as the action of past year, obviously the election was a big catalyst as an asset, and there was a lot of people buying into the space. But the digital asset trade companies, all the strategy out there, they were the primary buyers driving up the prices of cryptocurrencies in the past year, and they're selling shares of their stocks, like diluting their shareholders in order to buy this crypto. And what's happened now is they've proven that they had no expertise in their purchase prices because they're all underwater on those purchases.
Okay. Meta's still going here. Meta had good earnings. Meta had good earnings bouncing at the 50-day. Okay, 10% earnings growth, 23%, and that's including all of the CapEx, all of the spending on Prometheus and Hyperion mega data centers. Okay, the spending there, all of the chips that they've been buying. So Nvidia getting a little dip. Nvidia, I'm still not that interested in. Nvidia has to do a lot more. Okay, so we're down here at the low. Mean reversion is definitely a play, but it's not above the 50-day. Excuse me, the 20 EMA on the 60-minute. I misspoke. Looking for this to turn back up. It's below the 50-day on the daily. Let's see, Microsoft, same case here with Microsoft. Still below a descending 20 EMA, so this is not a reason to average down. I don't like to average down when the 20 EMA is dropping and price is below it. I only like to average down if this turns back up. So if I had a position from up here somewhere in the 450s, once this gets above the 20 EMA and the 20 EMA turns up, then I would be interested. I'd be interested in averaging down. But the trend has to turn up like it did back here, the 21st through the 27th, 8th, okay? So I need to at least see this kind of price action to average down. So what I'm speaking about is Microsoft MSFU shares, okay? So these are 20 bucks, 28 bucks. It's a possible play.
Connect more deeply to the people and places you visit. Enjoy a more intimate, engaging atmosphere with fewer passengers on board and expertly guided shore excursions without the crowds. All included in one upfront price. Travel beyond ordinary. Travel with TAP.
Control to optimize. To happen. Every January, a new you. What if you were never meant to start over? Your biology knows how to thrive. It just needs a reminder. Armor Colostrum reawakens that purpose. 400 nutrients, 4 seconds, 1 daily reminder. This year, remember what you're made of.
Okay, so we're starting to get rejected right here. Daily is a doji. Daily, doji. Okay, what time is it? It's almost 12 o'clock.
There's really nothing quite like that fresh start feeling. Let the fireworks fly with Candy Crush Saga. Give yourself a refresh with more than 20,000 levels at your fingertips. Available anytime you want. Plus, with no Wi-Fi needed, there's always space for a re-energizing break. Now that's what we call a sweet treat. Candy Crush Saga. Download now and play now for free.
Okay. Here's S&P. Looking at hedge flows, turning back down now. Hedge flows. Okay, we bounced back up about 50% into the range. Back to VWAP, above VWAP. I can't tell you how many times I've seen the markets do this, where we drop below, say, the 50-day, we bounce. Everybody gets long again, thinking everything's hunky-dory. We're below pivot levels, below risk off levels, and we just roll over and go even lower. So that's a possibility. So my sense is that we just sit tight. There's a few good things I pointed out. Meta pointed out potential for Microsoft, ARM Holdings, maybe Apple. There are some things I'm interested in, but let's see. Gilead was, I did put that on the watch list, right? Pretty sure I did. Gilead, I was looking at it anyway. Gilead, yeah, it's on the watch list. Gilead, let's see what that's doing. Okay, let's go to watch list. Watch list for this week. Okay, let's just sort this by performance. Who's doing the best today? Hershey, defensive position. Hershey, big gap up. Okay, that's on the watch list. The extended watch list, right? Yeah, extended watch list. I have Hershey's gapping up. SNDK dipping a little bit. SNDK dipping a little bit. The next one, Ball Corp, following through. Okay, what's ConAgra doing? ConAgra, a little profit taking. All of these are from the watch list. Today's Thursday. So you can see we've had quite a launch on many of these. So you have profits. These are the examples I'm trying to give you. Okay, if you have profits here, maybe you take some of this off. Okay, they might rotate out of consumer staples, but we're up on the week, so this looks good. ConAgra. What else? ConAgra. Merck is the next one in line. Merck, continuation. Okay, Merck from the watch list. Okay, Merck, I had the extended watch list, I believe. Yeah, so the extended watch list, what is Disney doing? Disney lower. Okay, Disney didn't work. Additional stocks from the watch list that continue to look good. Lockheed Martin. Okay, that's bouncing. What's SCHD do? SCHD. Okay, looking for this to create a base. Okay, does it happen? I have no idea. No special powers here, but I'm looking for something like this. Okay, we just broke out of a base back in January. That's where I got long on this particular position. Okay, on the breakout, this right here, January 8th, I got long right there. As you recall, just type SCHD in the search box above. That'll tell you what I was thinking back on January the 8th and what we've done since then. Okay, so now I'm looking for a base. So that's SCHD. Okay, what else? SCHD, Lockheed Martin, Alignment Healthcare. Okay, that's an inside day. ST&G, Scorpio Tankers, trending. Bulk shipping, LNG shipping, maritime shipping. These have been pretty bullish lately. Watch those. TK, TNK, still trending. These are all from the watch list or the extended watch list. Regency Centers, REG, Regency Centers, breaking out from the watch list. Again, looking good. Okay. What's Tyson Foods doing? Tyson Foods, continues the flag up here, consolidate. AAOI is from the IBD 50 that dropped off. 5 below, retailer, discount toys and stuff. Garden Health, GH. That's losing the 50-day, so that'll drop off the list. MIRM. Miriam Pharmaceuticals at the highs. Merck looks really good, though. Merck. Nice follow through on Merck. Okay, Meta's looking really good here. Meta, if you picked up Meta, I have no problem with you buying Meta. Okay, just put a stop underneath, you know. A little dip to 275, maybe you put a stop down there if it follows through. You know, if you bought it earlier on the bounce, you know, stop under 665, I'd be bringing it up to 675. I'd bring it up $10. I already had a dip there that got bought. So Meta looks okay. I'm just not doing anything. There's a difference. Okay. What else can I tell you? Let's take a look at NYSE, New York Stock Exchange. I'm interested in what Breadth is doing. Is the market broadening out? Is it just 4 or 5 sectors? What is it doing? What is it doing? Let me look at high-low here. High-low. Okay, we're still above the zero line. Okay, advanced decline just made a new high. New York Stock Exchange advanced decline. My indicators are off here. Not sure why that happened, but we had higher highs, basically. Okay. And we've got a red elder stick today. So we could this could turn into blue. This could turn into blue. Okay. Okay, so that looks okay. That's all right. You'd think it was a lot worse the way we dropped off. Gap down this morning. Advanced decline percent, everything is pointing lower. So that's telling you selling into strength, which is what I was telling you earlier. Taking some profits off, short-term options is what I'm talking about. Expire this week or next week. If I have a profit, maybe I'm reducing my exposure. If I get another entry, I'm still interested in the position, then I can buy, but I won't buy 2 weeks out. I'll buy a month out, 2 months out, maybe June, something like that. Like Google, for example. Google, I have June calls on Google. All right, that bounced right back above the 50-day after dropping. We talked about that already. I added a put spread that made it an iron condor. I didn't do anything with the call side. Expect this to be back up here. Okay, Tesla, nice little turn on Tesla. Did add to Tesla earlier this week. Proved not to be the best entry over here, Monday or Tuesday, I forget which. We came back yesterday. So TSLL shares, I'm okay with that, TSLL. The only issue here is that we're below the 60-minute 20 MA. So this needs to turn back up. Otherwise, we're still in a downtrend. S&P's turned up and continues pushing through resistance levels. So this is looking better and better. Look, I have no idea what they're going to do here. All right. I can see what levels are suspect. Okay. The levels that we might see some resistance. Support, pretty obvious, 6,800 held, right? So looking at GEX for longer dated options, you can see a very large node here at 6,800. Okay. If I zoom in too much, it gets kind of cloudy. You can't see much. But if you look at the peaks, okay, right there, 6,800. Prices dipped slightly below it. Now we're turning back up. Where's the next level? Resistance is probably up here between 68.55 and 68.70.
I can't do another movie night on that saggy sofa.
sack springs and a regret-free guarantee.
Get better savings on better styles at Haverty's President's Day sale. Haverty's, we furnish happiness.
Nice bounce so far. Nice bounce so far.
Barefoot on wet sand to any occasion. So every get-together feels just right. Because the comfort of Aloha is something that always feels like home. Sail up to Olokai. Anywhere comfort, anywhere Aloha.
This isn't a worthy vessel for your most cherished memories. Pixels make the moment feel so small.
I've seen mammograms even clearer than this.
Your love for tater tot can't be contained within a 5-inch screen. Glass.
Okay.
Photos deserve to be admired.
Meta, Google, Apple, Microsoft, Nvidia. I see improving conditions, but I'm not willing to stick my neck out. I took so much profit off short-term options. I didn't get out of everything I wanted to get out of. I did sell some put. I did close some puts on Micron at the low. That's popped up a couple of times now. Micron. Still think Micron could be moving lower in the short term. What's Oracle doing? I haven't looked at Oracle in ages. Oracle still driving lower. Jesus. Oracle's never ending. That's another Microsoft. That's Microsoft in a nutshell, right? So Oracle over here for earnings 2 quarters ago looked like this was going to go. A lot of you were looking for more upside. Cut that in half. Wow. Just wow. Eventually, this is going to go somewhere. I have some ORCX shares. Nothing to see here. Nothing to see. Oracle. S&P still trying to go some more. S&P. Okay, we'll have another level. We pop through here. MACD, watch your MACD. If you're thinking long off of this little pullback, watch your MACD and volume. Volume looks good. Was better on the bounce off of VWAP, and even better before on the retest of VWAP from below. Doji on the daily looks good. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're coming into the 12 o'clock hour. Yes, it's been kind of depressing a couple of days. The market's pulling back. But just like the market's moving up, the markets are not going to go straight down and just keep going. There's no reason for it. The earnings are good. 75% of companies out there posting good earnings, positive earning surprises, beat estimates. Okay. They're beat around 75 to 78%. Mid-season updates. 5-year historical average is 7.7. Average aggregate earning surprise has been 9.1. The average is 7.7. So we're above the 10-year, above the 5-year and the 10-year average of 7% and 7.7%. That's good. Meaning, while we are off today and off to start the week, Tuesday, Wednesday, markets look okay. Okay. Doji. What would really knock the stuffing out of the bulls if this reverses and moves right back down to the low or takes out the low. So emotionally, this is one of the reasons why I'm not doing anything. I don't want to be one of those people that get caught when this rolls back down. I want to take profits and let the markets tell me what to do. Okay? Instead of guessing. Yes, earnings are good, but that's not enough. Futures do whatever the hell they want to do, it seems like at times. Stocks that I'm interested in, I'll be making a list of stocks like ARM Holdings, which is having a pretty good day today. ARM Holdings. Okay, volume coming off the low. ARM looking good. ARM, maybe I buy something way out in time here. Maybe ARM 2 quarters out. ARM Holdings. Yeah, that looks good. I'm at the high today. I'm not going to do it now, but what does semis look like? Semiconductors, SMH. At the 50-day semiconductors, maybe the better way to play it is a trade on semiconductors for a bounce. That way you limit your capital expenditure. You buy some options, maybe looking for a bounce. Or, RSI is not there yet. MACD stochastic's almost there. So no hurry. We can look at this tomorrow. Remind me to look at SMH tomorrow if I forget. Let me write it down in my journal. That's a good idea. Let's write it down. There it is. Let me write this down for today. I want to take a look at ARM Holdings and semiconductors in particular. All right, so February the 5th. Let me just write this down. Give me a second. February 5. %3 drawdown. To date. ARM Holdings, check. And SMH, Meta, and Apple. Okay, that's what I'm interested in for now. Let's see, what else? Oh, Microsoft we talked about. That's got a lot of work to do. Microsoft. SMH, yeah, I like the idea of SMH, but I'm not going to do anything today. All right, so I made a note of it to look tomorrow if I forget. I usually check my journal for notes for the next day in the morning. All right, S&P futures drifting a bit lower now. Okay, people are going to start taking profits that were looking for a break to the upside. They'll start taking some profits. What does Trace say? Trace says we could conceivably make a higher low, higher high. We got support below. Okay. Higher low printing, higher low printing. Okay. So, yeah, that looks good. Okay, hold on one second. I got to get this. Hello? Yes, yes. Sure, sure. Oh, yeah. Mm-hmm.
Yeah, that's a great question. And what I would say here is the back end not being a value investor or looking at value names in the tech space is sometimes it takes longer than we want, right? And as far as Qualcomm is concerned, we told investors to do documentation. I will say this, last quarter, let's call it about 25-26% of their
Carolina Forest.
within their manufacturing, chip-related manufacturing business came from non-handset revenue. Given the funds that we're seeing here in handset this quarter, let's call it about 35% or so of their revenue will come outside of handset. So we do think within the next 2 to 3 years that number grows to at least 50%. So on the top line, you may not see much growth there. Not to mention there is potential upside to our expectations. For instance, we are getting in areas like data centers where if they were to announce some big customer wins, that could provide upside, right, to expectations. So I'd say at this point in time, the valuation plus the fact that, hey, listen, there is a line of sight here over the next couple of years.
Okay. All right. So I dropped $800 in the car. Now I've got to deal with this. Yeah, Murray's Inlet is quite a distance for a tow.
So I am curious, then, Angela, if you're
There's nothing any closer that you guys have can recommend.
Where, yes, obviously you're saying
That's the opposite direction. Yeah.
Stuff where you're seeing maybe more opportunity in the short to medium term.
Yeah, I mean, listen, I think this is a really interesting market right now. I mean, I think you kind of started off talking about some of these software names, and there are other type of names that have really been punished here over the last couple of weeks within the tech arena. And I think the concern really is kind of what does the tail look like in a new AI-induced environment? Not necessarily what's going to happen in 2026, because the earnings trajectory looks pretty good projected for this year. It's more along the lines of what's going to happen beyond 2027.
That's making me really nervous. The car, I'm upside down on the note now because of this engine being replaced. Let me ask you this: what do you think it's worth, parts-wise, the car?
Opportunities tied to them as they start getting into these large-scale racks. I do understand the fact that, hey, listen, can some of this capex momentum be sustained and maybe avoid some of these other AI type plays? That AMD is one where I think you can get that AI play and maybe that long tail tied to it.
Angela, you also cover Alphabet, so I got to ask you about that one because there too we are seeing some selling pressure. How much of it is what we heard from Alphabet? How much of it is the concerns you alluded to, right?
Yeah, that's my fear that somebody's going to say, they're going to make a lot of money off me by, I need to replace the whole thing. So I need somebody that's reputable. That's not going to try to rip me off,
Going against them. Not to mention on top of that capex number.
100,000, I think, something like that.
Monsters. I mean, they're essentially pointing to a doubling here, year-over-year. That's going to really destroy the free cash flow expectations here over the next couple of years. So a lot, essentially, virtually most of the cash from operations at this point in time being reinvested in that business. So don't expect any significant buybacks if you're an investor in this name. But that said, listen, that backlog growth that we're seeing from Alphabet really kind of warrants higher spending. So
yeah, give me a call back and see what you can find out.
But if they do in terms
all right, thank you.
Their promises from this higher spend, there's a really great growth story looking at the next 2 to 3 years.
I mean, Angela, in general, do you think that this sell-off that we've seen will
all right. Wife has transmission failure in one of her cars. So I'm going to check that out. All right. So it's a little bit after 12 o'clock. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. February the 5th, Thursday.
Where stories that can continue to grow in an environment here 3, 4, 5 years down the road.
Looking for a bounce. Can we get a bounce here? Okay.
Where maybe some of these SaaS-oriented names, get a little bit more difficult. So I do think there are some value traps in this market. I think there are also some great opportunities.
And you just named at least one of them, a couple of them for us. Angelo, thank you so much. Good to see you.
Thanks, Emma.
And this afternoon. afternoon, don't miss our interview with the Qualcomm CFO on Yahoo Finance to talk more about those numbers and the company's long-term outlook. Well, we have been watching some economic data, in particular job openings, which fell in December to the lowest number since 2020. They're known as JOLTS, this particular reading. So coming in lower than expected here, about 6.5 million job openings, 6.54. But that was a drop month over month from the 6.93 million reading in November. So we're also watch things like the quits rate, which was at 2%, that was unchanged month over month, and the layoff level also ticking up a little bit to 1.76 million. Excuse me, that's 1.76 million. So that was an increase month over month as well. Add to that the Challenger J, Gray, and Christmas numbers we got this morning, which showed the highest number of job cut announcements in January, specifically in January, going back to 2009. And this all adds to the increasing evidence, seemingly, that the job market is
Looking for a bounce.
So those two.
This time of day, lunchtime, I'm not really looking for a whole lot. Not a good time to buy new positions after the morning run up, usually after this low. Usually wait until about 1 o'clock.
And then you cut it. Well, congratulations. Now, they do have some points, like in this note that Google Gemini is doing extremely well, and they are a fierce competitor to Microsoft, both in Azure, both in cloud, in AI. Gemini has catapulted up to the first space. Now, that being said, Microsoft put up spectacular numbers. Their Azure growth, 39% in Azure growth. So this is still a massive company doing extremely well in offices. But here it comes again. The CapEx growth, 37.5 billion. Street didn't like it, right? Suddenly, with no warning, any CapEx growth that exceeds expectations, like you're seeing in Google Alphabet, is shunned by Wall Street. They don't like it. They want more. They want the overall CapEx spending to come to more responsible levels, and these hyperscalers are not slowing down. And so that's hurt the stock. But this stock was $555. It hit. The good news for investors in Microsoft stock, it's about $7 or $8 off its lows already today. It broke below $500 or $400.
Futures trying to bounce off the 105 on the 1 minute chart. Grover's 1 minute chart.
Already starting to recover here. A lot of people, remember, humans like big round numbers. And the fact that it broke 400 and is now holding 400, probably bringing in a lot of eyeballs watching overall Microsoft. But this is still a company that is in every single part of what's driving
Okay, let's see. Hive.
I think Microsoft, even the note, one of the notes said, from one of the analysts said, this is a time to be accumulating Microsoft. Do I know that? No, I have no idea. But it's certainly a long way off the highs. And when you see analysts crushing their price targets down to 390, how long do you think it'll take before they raise that price target back up? Because that's a low one on Microsoft. This is going to be interesting how it plays out over time, unless, of course, the entire market sells off. And then, you're right, Microsoft will stay heavy along with all the other large cap tech. So, yeah, this is kind of an interesting turn of events.
On this one, with Stiefel making this move.
Yeah, Kevin's right. Where you been, Stiefel? I mean, this stock has been hammered. We're sitting 27% off of those all-time highs, this basically filled the gap up that we saw from last May earnings, where they kind of blew out numbers and gave great guidance. I think there's a multitude of things for Microsoft. They're considered in the software side of the business for the enterprise. The Copilot, Wall Street Journal just had an article that Copilot's losing some luster with consumers at this point. That's not a positive. The competitive nature within this space,
how to equate the investments that they've made into OpenAI. How does that hit their balance sheet? And will growth rates slow? But if you look at cloud growth, and we'll hear from Amazon after the close today, cloud growth rates are starting to pick up back up. That should help Azure moving forward. So, yeah, a little bit late on this downgrade call out of Stiefel at this point. But, you know, it's getting weighed down with that whole segment of the software side of their business, and that's been a headwind.
Indeed. All right, guys. We've got bull versus bear coming up. The guys will get their example trays put together for Amazon. It has earnings due after the bell today. We'll have more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Amazon's next on deck to deliver its results after the close of trading today. The e-commerce heavyweight is expected to report earnings of $1.98 per share, which would be up from $1.86 the same time a year ago. Revenue is projected to top $211.4 billion. Analysts are overwhelmingly in the buy camp on Amazon this year after a year of underperformance. Investors will hone in on AWS and its performance as a growth driver. And, oh, by the way, what will CapEx look like? That's a big question. Time now for the tug of war on Amazon. For that, let's welcome back in our co-host, Tom White and Kevin Hinks. It is bull versus bear time. Before we get to your example trays, got to talk your thoughts on Amazon. Kevin, I'll start with you. Your thoughts.
It's all going to be about the CapEx spending. Coming off holiday shopping, Amazon's going to put up big numbers in terms of retail, right? That revenue number will probably be there. They've got 315 million now ad-supported viewers in Prime Video. So advertising is going to be big there, that number. And then it's going to be about AWS has got to put up good numbers or they'll re-rate it like they did Microsoft. So but here's the good news for Amazon investors. They've already sold the stock off down to the 200-day moving average. It touched there today on this gap lower. So if they put up good news, you could see a rocket ship back up if they put up the numbers. But remember, they've got AWS, they've got streaming, they've got digital advertising, they've got massive retail. They're in all these different kinds of the U.S. economy that are surging. Anyone that uses Amazon only uses them more, not less. So I think this stock which sold off from the 250s down here to the low 220s. They've sold it off with the rest of the market. Today's earnings release is going to be vital to its movement.
Oh, great point. Vital to its movement. Tom, your thoughts?
Yeah, Kevin makes a good point. As far as the technical side of it, hit that 200-day simple moving average and bounced a little bit off of that. About $223 is where that sits. So I think you start taking a look at AWS. We saw a reacceleration in growth above 20% last quarter. They expect that to expand again. And if Google's growth rate was any indication, maybe that'll be a positive also. They did spend $125 billion on CapEx last capital expenditures in 2025, and they stated that they're going to increase those in 2026. The street's going to be watching that number, as Kevin mentioned. How much are they going to increase it? Is it going to be like a Google where the market doesn't like it? The difference here, I think, guys, is we've seen consolidation in this stock. It's underperformed this Mag 7 space. It's down 13% from those all-time highs that we saw a couple months ago. So maybe the bar is not as high in this one. The retail side, we've seen retail sales data really good. The October Prime days are back in this quarter also. They expanded that to 18 more different countries. So that should be a benefit on the retail side. That's a big revenue generator, but makes the least amount of profits. AWS is where they make a lot of their profits. And Kevin mentioned advertising from those Prime memberships. That was over $50 billion in 2025. That's expected to continue to grind higher at those levels. So that's like one of those silos of revenue that we don't talk about a lot, but that continues to grow also. But bar a little bit low in this one going into the report.
That's great points that you made, Tom, especially like the cross currents around Amazon, right? The bar being lower, and many see it as a value play as compared to the Mag 7 this year. At the same time, that hyper focus on CapEx. How much will it be under the microscope for Amazon? All right, let's get to the example trades. Kevin, let's get into yours first.
My paper money trade is going to be on the bullish side. I looked at how they make up the implied volatility here. And the front expiration, which tomorrow's Friday, is 182, almost 183. The 1 week out, going out to February 13th, is a 79.5. But then if you go out 2 weeks, it drops all the way to 62 for the implied volatility. So almost a third of what it is in the front expiration. So that's where my focus was, looking at that divergence between those two. So I went out and bought the February 20th $220 call, and then I sold this week's February 6th $245 call. Kind of right in line with a
Hi, took alert plus 800.
It was actually the market maker move has come down a little bit. It was almost $19 to $20. Now it's about 18. So I'm doing the 220, 245 call diagonal. I spent about $10.50. It's about $11.15 now. So the stock is, like I said, come off its lows today. And so this diagonal now trading over $11. But this is something in the calendar spread family that has an embedded call vertical in it. So buying the 220, selling the 245. Tom?
Yep. Let's break this one down. 2 week wide bullish call diagonal on this one. As Kevin mentioned, the price has gone up above $11 on this because the market's off of its lows. And if you look at it, Amazon's a few bucks off of its lows. But let's break this one down. February 20th, monthly options expire in 15 days. Buy the 220 strike call in the money by about $4. So it's got that higher delta. That's the bullish portion of this call diagonal. And then against it in the near term, that 6 weekly options expire in just 1 day. Sell that 245 strike call. So bullish $25 wide call diagonal. You're paying less than half the width of it, even if you pay over $11. So that's a benefit because anything above about 225 is going to be potential profitability on this type of bullish example trade that Kevin brought us. The debit you pay is going to be your risk. So if you pay $10.50, you've got $1,050 in risk on that one. Pay $1,100 or $1,100 if you pay over $11 for that. But as we mentioned, when you're buying a really low implied volatility as opposed to selling that near-term option that has the event risk in it, really high implied volatility levels. That reduces your cost entry point on this bullish $25 wide call diagonal to the upside on this one. As I mentioned, the debit you pay is going to be your risk. You want it to go at or near that 245 level, but as I mentioned, anything above about 225, 226 is going to be a potential profitability. You'll have that option or potential to roll that short option on the 245 call that expires in just over 24 hours to another couple of cycles, creating credits that increases potential profitability also. So keep that in mind, but definitely need just a slight move to the upside to start seeing some profitability on this type of trade. So I'm going to flip it. I'm the bearish side of this bull bear debate, but I'm not really bearish on this name with this type of strategy. It's a little bit more passive. It gives you some exposure to the upside where you can still be wrong, but still be potentially profitable. I went out to the February 6th weekly options, just really short-term positioning on this one. Selling the out of the money 235 strike call, over $10 out of the money to the upside, and then buying the 245 strike call. So a short $10 wide neutral to bearish call vertical, collecting roughly about a 250 credit. It's trading closer to 290 right now. So you could probably collect a little bit more, but that's because the stock went up from when I looked at it earlier. Collect that 250 credit, takes your break even up to 237.50 on this one to the upside. Now, the probabilities have come down a little bit, Kevin, because the stock's gone a little bit higher, but you still got a 68% probability that that short 235 strike will be out of the money at expiration.
Yeah, 68% probability. This is the kind of spread you might put on if number one, if you're bearish, right, on Amazon or the overall market. Number two, if maybe you have long stock to protect. And what it does is you can do two things with that. You can sell the call, or in this case, you sell the call vertical, which keeps your upside exposure despite the exposure in that short that short call vertical. So this can be used as a trade, can be used as a hedge against your long stock. It's got several things, and it's high probability, it's collecting data, and it's risk defying, Tom.
If you collect that 250 credit, you got about just over $700 in risk on that, but that's all the way above 245. And Kevin, I just looked at the 237.5, 247.5, and that's trading 250 because the stock has moved higher. So it's all based on what credit you're willing to take in versus the probabilities that you have on this out of the money call vertical, which is neutral to bearish. So there you go, Diane. Mine's a little bit more passive. Kevin's a little bit more aggressive on his.
Okay, well, sometimes you got to take it passive. Sometimes you have to be more aggressive. All right, good stuff, guys. We've got cash tags coming up. The team from Lightfolio will be along with new data on Reddit. It also has new earnings due after the close today. Stay right here on Schwab Network Fast Market. We'll be right back.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Kevin Hanks joining from the CBO. Time now for our cash tag segment. Taking a look at Reddit. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Likefolio. Andy, thank you so much for joining us and bringing your data as usual. So Reddit, on a year-over-year basis, that stock has had some challenges. I mean, it's down about 30% on a year-over-year basis. When you look across your sentiment data, what does the landscape look like now?
Well, it looks pretty good in terms of just the raw numbers. You know, this is a position we had for quite a while and got out last December, just a couple months ago. It's been falling since then. But when we look at the data now, you know, if we look at ad growth interest, so people visiting the actual advertising site of Reddit versus some of its peers, Reddit up 111% year over year, absolutely blowing away peers like Pinterest, Snapchat, and Meta. Part of that's because they're coming off of a small base, but another part of that is because these ads really work and deliver a very high ROI because Reddit users are very engaged and very open to learning new things and learning about new products. Platform engagement on Reddit looks good, up 5% year over year, not explosive, but again, that's off of a larger base, so any growth there is good. I think from a pure numbers and pure reporting perspective, they're going to post a good quarter. The question is about the guidance and specifically about their partnership with Google, because we're starting to see a lot of commentary around Google and its Gemini AI platform really starting to prioritize YouTube videos and sending its users to YouTube rather than to Reddit threads. And so that's an enormous problem for Reddit that is starting to develop, and we'll be extremely interested to see what executives say about that partnership with Google and how that's going and how much traffic they're losing because of the shift in Google Gemini priorities.
Andy, I read 2 articles on Reddit today, preparing for the show, and both of them said the exact same thing, and that is in terms of the early monetization stages, it's early meta platforms. And this is like a baby version of Facebook or Meta that could grow into something incredible. But also, both mentioned their dependence on Google search for some of their traffic is something that could bring some risk into this. So how do they work through that? I mean, they're the users are growing rapidly. Their average revenue per user is growing rapidly. They're doing everything right. They've got to monetize better. But this looks like it's at the beginning stages of a really good story going forward. But they've got to figure out this Google Alphabet Gemini thing, don't they?
Yeah, they do. You know, we talk about these stories a lot on here. It's a huge opportunity. It's a company with that is showing signs of being very good at execution. I mean, gross margins are above 90%, EBITDA margins hitting 60%. So they're scaling profits in an incredible way. And there's a lot of open space in front of them. So there's enormous opportunities long term with a really big short-term problem, and that is, you know, when you go to Google now, I don't know if you've noticed, but you know, they're showing the Gemini results right at the top, and they're using the AI to try to keep you from even having to click on anything, much less send people over to something that they don't own, like Reddit. If you're going to click, they'd rather you go to YouTube. That's obvious. And so that's a big conflict for Reddit because a ton of their traffic comes from Google. So again, when we're listening to this conference call, I don't think it's going to be about the numbers or the advertising or the margins. Those are all going well, and I think Wall Street knows that. It's really more about how the company is dealing with this current crisis, and there's going to be more crises along the way for Reddit. But That's what happens when you're a company that's growing really fast and taking market share from peers. All of a sudden, problems start to pop up that become pretty big problems, at least in the short term.
Andy, really quickly before I get into my next question, just want to address we had a bell just happen on the floor today. A couple IPOs happening. That was Bob's Discount Furniture, just opened moments ago for its initial debut. Starting out with a little bit of it's been fluctuating. It initially was a little soft, but now it's ticking a little bit higher right now, up about 0.25%, fluctuating. Now flat, trading at $17 a share. This is its trading debut. The furniture retailers initial public offering was actually priced at the low end of expectations. Tough day for a public debut given the overall market softness that we've seen, but things could turn certainly throughout the day. The day is still young. We'll actually have the CFO on later in our programming in our market on close with Sam Bottas and Marley Caden. Now, Andy, the next question I want to get into you as it pertains to Reddit. Given where shares are and your data, how do you look at it in terms of your earnings score that you all typically go by? In other words, would there be a potential entry point today, given your data and the softness it's had over the past year?
No, I think we still have to wait until after the report. I think that the Wall Street is expecting a very large move on this earnings report, so you have to be prepared for that. If you're a shareholder, and if you're entering today, you have to be prepared for this could move 14% in either direction, and that wouldn't really be a huge surprise to Wall Street. So you got to be careful here. I do think that Reddit's long-term trajectory is very strong, but so has been the stock if you look at it over a significant period of time. And so there's a real possibility of better entry points in the future, and that's what we're going to wait for. We're going to wait for the current or the short-term problems to overwhelm Wall Street sentiment while the core business and the long-term solutions are being built out by the company. That's the way we like to invest. And so with Reddit, we're on a wait and see. Let's see what the company says. And if we get a significant dip at any point in 2026, as long as the long-term data continues to show that advertisers love this platform, then we're eventually going to be buyers, but not just yet.
Kevin, you got a final thought?
Andy, one last question. Is this, what this company's doing, how well they execute, are they right to be purchased, or are they too big to be purchased? Do they have too much market cap? Is it too expensive of a price? Because they seem to have a nice, their problems would all go away, let's put it that way, if they were purchased by someone like Google Alphabet or Amazon or someone that has the cash to do it and the wherewithal to know this business, like a Meta Platforms. Not like they haven't done that in the past. What's your thoughts there?
Yeah, I think it's an interesting conversation. I don't know a current valuation if it makes sense, but there's definitely value there. I think that if you're a Google and you could, put your own advertising network and that demand into the Reddit advertising ecosystem, you could probably pay for the purchase really quickly. The problem Reddit has is that it's being co-opted by all the AI engines, and that its data and its answers and the things that it provides to its users is being undercut by all these AI platforms. So you don't necessarily need Reddit in order to have Reddit quality engagement. And so I think that's the biggest problem for Reddit as an acquisition strategy. Their ad platform is not that revolutionary that someone else's wouldn't already be better. And their content, while valuable, has already pretty much been sold to the highest bidder at this point. So I don't see them as a takeover target at this price, but if Wall Street throws the baby out with the bathwater, then those types of things can start becoming more and more attractive.
All right, Andy, we'll leave it there for today. That's Andy Swan, co-founder of Likefolio, with a look across Reddit and beyond. Now, for the trading perspective of all things Reddit, let's bring Tom back into the fold here. Tom, any final thoughts before you guys jump into the example trade?
Yeah, I think if you look at their data, it's positive, right? But at the same time, in this type of market environment where you're not even getting rewarded, that's a concern. And you kind of heard that out of Andy, the fact that, hey, would they be buyers now with the 32% pullback that we've seen since the start of the year. I mean, we're back at levels since 2 earnings ago when it gapped up on those earnings in July, at the end of July. So it's a concern going into this. Got a beta of 2. The option market pricing in a pretty hefty, as Andy mentioned, nearly $20 move either way in the shares, nearly 13% either way. Kevin, when you look at this one going into these results, the bar's really low on this one, but that doesn't seem to matter during this earnings season a lot of times.
Yeah, I agree.
I'm here with you. I'm just eating lunch. Marcus just sitting here chopping around.
But he also presented a problem. Now, the good news is that problem can be fixed over time. So what I want to do is see them address it. It may be today or tomorrow. On a conference call, they may address it. So what I wanted to do with my paper money trade here is give this time and put on a bullish play that gives duration. So I went out to the February 27th. I didn't even touch this earnings event, even though it is a massive event, right? With a $20 move on a $150 stock. But I wanted time. So I went out to February 27th, bought the 150 calls, sold 2 of the 180 calls, and then bought 1 of the 185 calls, an unbalanced call butterfly, trading about $8.70, trading about 90 cents higher than that. Now, Tom, the stock has rallied as with the rest of the market. So this is one that gives you that upside, but it also gives you duration all the way out to the end of the month, Tom, for this to make a move. So it's a play on earnings, but it's a longer term play that could play out over the next couple of weeks.
All right, yeah, let's break this one down. February 27th, weekly options, 22 days to expiration. You got 3 weeks in this position. Buying the slightly in the money 150 strike call, 154. Buying one of those 150 calls.
Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. 12:44 on the East Coast. It is Thursday, the 5th of February. Just letting some time unwind so that we can get a good sense of what the markets are going to do. Are dip buyers willing to come in and buy? It looks like it. Meta bouncing, Google bouncing back above the 50-day, Tesla, Broadcom, Microsoft, NVIDIA. So these look like they're could see some follow through, but I want to see a little bit more action. You know the reason I've been taking off short-term options that expire this week and next week, reducing my exposure. Did take some VIX off this morning at the highs. All right, VIX falling off. All right, so VIX we took off earlier this morning above 20, 21 and change. All right, so VIX is off quite a bit from the high. So we sold way over here. I still have some of the 2030s left if the markets can't find a footing. So there's a little bit of a hedge. Looking for evidence that they're interested in buying. Number of stocks advancing versus declining. Want to see that improve. Okay. Currently, we have 195 stocks advancing. That's lower than it was earlier. Earlier, we had about 230 stocks advancing on the S&P 500. We're down to 195. So that needs to improve. Need to see the breadth broaden out. I don't want to start putting money back to work with most sectors lower. Okay, so let's just look at the sectors real quick. XLB, materials. That's been on a run lately. That's showing signs of some profit taking. Not a full-fledged reversal, but profit taking nonetheless. Communications, that's Meta, Google, Netflix, Fox, Charter, etc. Warner Brothers Discovery, I believe. They're going to go to vote in March, I think they said. Warner Brothers Discovery pulling back a bit. So that's communications. Energy has been on a run. That's still very bullish. So I'd expect dips to get bought. I did take some CBX off this morning. Again, looking to take a little profit off. Maybe we'll get a little dip and I can buy the 180, 185s again. Or maybe the 175, 180. It depends on how far we pull back. But Chevron, I took some of that off. Valero, I took some of Valero off. We're still at the highs, looking for a continuation on the breakout. GE, I reduced my exposure in GE. I had some short-term options. I'll keep the longer-term options for out in April and May. Dip buyers here, so I'll follow through tomorrow. I can put some more money back into that. For now, I just wanna reduce my risk further. Midterm election years tend to be very volatile. 2018 midterm election year, the markets pulled back 10% before the election in November, and then another 10% after the election, for a total drawdown of 20% from the highs. That was 2018, if you want to check that out. The cross currents. The good thing is we got good earnings. We have good earnings. 75% of the S&P 500 companies have posted a positive earnings beat. That's the most important part, earnings and guidance. Are they going to make more money next time? It's great that they beat this time, but what's the forward guidance? That's what happened with Microsoft. The difference between Microsoft and ARM Holdings, which is something I'm considering as well, ARM Holdings. ARM Holdings has positive earnings, and forward guidance was positive. All right, so if we get a follow-through day tomorrow, I'll push above 120. I'll wait until we get there. I realize that I'm, 20 points off the low. I didn't get in this morning anyway. But if ARM Holdings can get here, then I'm looking for a 20-point move to the 200-day. Okay, so I'm willing to wait this out and look for more positive evidence. We need to see the rest of the markets also bounce, like semiconductors off the 50-day. If that bounces tomorrow and ARM also bounces, I'm feeling more confident that a position in ARM makes sense, since their earnings were a beat. Here's ARM Holdings, okay? 145% earnings growth, 26% revenue growth. They beat all four metrics, 43% earnings surprise. And their forward and guidance is greater than the current. At 59 cents, they're guiding to 62 cents. 41 cents, sorry. They reported 59. Estimate was for 41, so they beat 1.24 billion. Okay, they're looking at 1.42 to 1.52 billion. So that's good. That's what I want to see on anything that I'm interested in, especially on ARM Holdings, which pulled back to recent lows and is holding. You can see the signs of institutions. This is the kind of thing I want to see. Positive earnings. The recent lows hold, and we got forward guidance that looks bullish. Okay, we just pulled back on the S&P. Closer towards 10% net income margins,
that speaks to improved scalability for the overall business because essentially it's a technology company. But at the same time, if you look at the earnings multiple for 2026, earnings are expected to be $3.70. It's trading at 17 times, 2026 EPS. So one would say with 25% earnings growth, trading at 17 times.
Tesla off the lows,
Earnings,
still in the still below the 50-day, just above the 200-day.
The stock is growing at a reasonable price. And I say growing because it's 25% growth rates, both in sales and earnings, and reasonable meaning it's trading at less than 20 times earnings.
All right, thank you, George. That's George Solis, senior markets correspondent, with the breakdown on Affirm ahead of its results, which are due after the close today. Let's get Tom and Kevin back in here for example trade purposes. So, Tom, this time you've got the example trade in Affirm. You heard George's breakdown. What's the approach today?
Yeah, this company takes, a fee, for every loan that they make, these short-term buy now, pay later, loans at this point. Yeah, your gross margin is about 67%, but net margins are, just about 7%. So not that much, but they've got over 24 million consumers using this platform. That's continued to expand. Also, it's about the amount that people are buying. We've seen some decent sales numbers, especially during the holiday season. So is the bar low? I don't know. It's about $40 off of its 52-week highs. It hit $100 in September of last year. Now we're trading about 59, just under $60 a share. So I looked at a strategy that's not a pure earnings play. If you think this thing's going to rebound, maybe give yourself a couple weeks in this trade, but it gives you some flexibility. If you get the move you want to the upside on this example trade, in the markets open, you can start maybe closing a portion of your trade ahead of expiration over the next 15 days. But I went out to the February 20th monthly options, expire in 2 weeks. Buy the in the money 57.5 strike call, sell the out of the money 50 or 67.5 strike call. So a bullish $10 wide call vertical. You're going to pay roughly. I've got 340 debit on it. It's trading closer to $4 now because the stock has moved higher. And you can look maybe if you don't want to buy something that's slightly in the money like the 57.5. You can maybe buy the 60 and sell the 70 call, but it's based on what your risk reward and risk potential is on these trades. But if you pay that 340 debit or $4 debit, that's going to be your risk, right? $340 or $400 per spread on that one. Now, if you pay that 340 debit, takes your break even to $60.90. You might have to pay a little bit more for this one, Kevin, but it's pretty straightforward. Implied volatility levels are high, but at the same time, the bar is pretty low in this going into the report.
Yeah, it's a vertical spread that your debit is about a third of the width of the strikes. You need a move, but you don't need much of a move because that 57.5 is a couple dollars in the money. So you still lined up your short strike with the expected move. You made it a $10 spread. So this is one that doesn't need much of a move to the upside to go through its break even. And like I said, if it goes to $10, it's about a triple for the overall move on this stock. So yeah, with a debit around 330, 340, that's about a third of the width of the strikes. If you get the move you're looking for, it could be a triple.
Yeah, one of the keys on this is the option market pricing in about a 12% move either way, just over $7.20 either way, and that's a one-day move on this. The beta on Affirm 3.3, so the S&P 500 has a beta of 1, right? So this moves more than double on a percentage basis than what the S&P 500 has done historically. So keep that in mind. This is a high beta name that you can trade, but at the same time, I mentioned that flexibility on this one. You don't have to wait till expiration in the next 15 days if you get the move you want to the upside because your gains are capped also above 67.5 on this type of trade. But a decent risk reward profile, Diane, but you definitely need a move just ever so slightly to the upside to get above that break even.
All right, good stuff there. Let me give you a quick check of the IPO. Bob's is turning higher now off the back of its public debut. It's trading up about 8.25%. At the moment, we've got another IPO still waiting for its public debut. That's FPS, Fortune Power Solutions. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Tom White and Kevin Hanks. Download the Schwab Network app. It's available in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around. You've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Okay, we're about to come out of the noon hour, so we're looking for some direction from the markets. Tesla. I assume that this is just short covering on many of these. Initially, a few people come in trading it during the day, but this is definitely not something I want to jump into. Needs to get back, start heading the other direction. Okay, so we left off with energy, I believe, and XLE. XLE, still very bullish. Note the slope of the EMAs, the volume. Financials, in particular, the banks, those are looking up. These are looking really good. You would never know if we didn't know the markets were down as much as they were. R at 60 points. If we didn't know that, you would never guess with the KRE doing what it's doing. JP Morgan. So that's a good thing we have at least this happening, right? Wells Fargo, I did reduce my exposure on Wells Fargo. I'll go with longer options. I had some options that expire next week and also in March. So I took some of those off on its little dip. If it starts to follow through, I can do something again. But I had a profit here. I didn't want the profit to leak out and hope for the best given the situation with the S&P. So looking for the banks to continue. KBE, KRE. Both of these look okay. FAS, not so much. PNC off the highs. PNC has been a runner. Okay, so they did dip by today. All right, so PNC, I was looking to get some PNC. They've already bought the low, so I missed that opportunity. That's okay. PNC doing well. It's acquired two banks and I forget who the other company was. Let's see. Let me go back to my history. Okay, here we go. So the history here, acquisitions. They bought Signature Bank, PNC. They acquired Aqueduct Capital Group. And most recently, that closed in January, was they acquired First Bank Holding Company. Okay, so this is all adding to the efficiencies, cost-cutting programs, branch network optimization through the acquisitions that they just did. Okay, they have an efficiency ratio around 55 to 60% in the recent quarters, which is good for a bank. Okay, so PNC, I was looking for a dip to buy it. Probably need to see a little bit more downside because we're still inside of yesterday's wick. All right, so that's the banks. Banks, some like Ozark also, OZK, and Zion Bank. These are all looking good. So they're probably going to keep going. They just broke out on Monday, Tuesday. Shifting over to tech. All right, tech is getting bought. All right, so this is good. This is a starter, potentially starter analysis wise. Okay, it looks like a double bottom. Okay, so we're bouncing in this area. Just about the time people start buying puts for whatever reason, the markets reverse and move in the other direction. All right. So that's a possibility with tech. Tech is oversold now. Micron showing a bounce, for example. Micron is at the highs. Pull back from the highs, bounced intraday. You can say so. Micron trying to stabilize with the tech sector oversold. Look at the New York FANG components. Okay, so this looks pretty ugly, with the caveat that we got a hammer and potential reversal tomorrow, back towards the 200-day. So just about the time you think everything is going to hell in a handbasket, it turns back up and moves in the opposite direction. You buy puts, you wind up getting stuck. Position turns in the other way, and then you get chopped up. Okay, so that's tech and New York FANG. Consumer staples is what's been hanging in there the most, and even it now is showing signs of some profit taking. I would not be surprised to see some of these investors start to take some profits up here. Okay. SCHD showing some signs of some profit up here. I like to see this pull back a little bit more to add to my position. That's fine. It's a dividend paying ETF. SPHD, same thing. Okay, so staples, consumer staples, XLP. Industrials, XLI, still in a bullish trend, 921.50 are almost pointing at a 45 to 50 degree angle. Okay, what I'm talking about is this, the angle of these, okay, this acute angle is like 45 degrees. That's strength. Look at the volume, that's institutions. Do you want to buy the high? No, you wait for a little dip. It could come back a little bit more, maybe back down to the 21-day. But XLI looks good. Stocks like Caterpillar got sold, and now we're starting to find some buyers. Caterpillar's still in a very bullish trend. Okay, so that's industrials. Utilities, not that interested in. Utilities just kind of sitting here. Healthcare, it's okay. Consumer discretionary, hammer. Retail, XRT, pulling back. But stocks like Walmart, I'm looking to get long Walmart. So Walmart, I didn't want to chase this the last couple of days, looking for this to pull back in. Missed the opportunity on Monday. That ran up from 120 almost to 130. So a 10-point move there, almost 10%. Retail. So Costco is another one that I'm looking at. Costco, BJ Wholesale. All of these look good. Dollar Tree. Dollar Tree was looking at it yesterday. Still not above the 50-day. Dollar General. TJ Maxx. TJ Maxx looks good above the 50-day. Target off the highs, but in a bullish trend. So there's a lot of things to look at. It's just like I'm not in a huge hurry to put money to work right now. S&P is fading off the highs for now. Yeah, we're moving back to BWAP now.
infrastructure, margin compression, and potential depreciation drag that we could see right now in real effect. So the margin pressures behind the infrastructure bill, we do operating margins hovered around 31.6%, slightly below past levels. Overall, this was a strong beat, yes. It's just the concern over rising costs again. But we've seen this play out in names like Meta, where it actually wasn't read through as a negative. And so it's sort of difficult to understand.
Tesla's still rising.
The street will criticize it today, clearly facing at least some pressure in today's session.
In some ways, it's the moment they spent less than the street was estimating. The cloud growth is almost 50%, 48% year over year. That is so incredible. We were talking about tens of in hundreds of billions of dollars in some cases. Right now, 17.66, but their revenue 113 billion, still growing at almost 20% year over year. And then what really stuck out to me, and you mentioned this, their Gemini app now has, according to what I'm saying, over 750 million monthly active users. Now, look, it's not ChatGPT yet, which I think is like the 800, 900 million weekly average users or active users, but it is closing the gap in a hurry. So that first mover advantage that really made OpenAI this household name and made Microsoft all this money as an investor and has this huge excitement around a potential public offering. Well, I don't know how exciting it is anymore if Gemini is closing the gap this fast, because Alphabet doesn't play for second place.
I know, and I will say it does help that they're already entrenched into, like the search engine that we all tend to default to. I mean, I just updated my computer, and it was the very first thing I updated was making sure all my defaults were to Google's and the search engine, frankly. And so Gemini, very much integrated within that, which helps build a user base.
This is a really good point, and it's not because it's your preference, which is any more important than anybody else's, but it's because if we're going to watch this transition from our traditional use with search, whether it was Bing or Google or DuckDuckGo or any of these, to more of a chat AI agent type interaction, the easiest way for that to happen is for an experience that you've already been using, like Google, to slowly integrate this technology and sort of in front of you adapt the experience. Much like if you were to went on Instagram 1.0 versus the experience now, it's a totally different app. But it happened methodically and slowly over time, and you kind of just got used to the changes as they happen. If Alphabet pulls off something very similar, we're going to be using Gemini in our everyday lives and not even realize it. We kind of already are.
Yeah, I was going to say, I think that is also something playing out in real time. People are always so critical of these LLMs, and I'm like, you've used them in some capacity, whether you know it or not. So it's already being very much integrated into your daily internet use. At least as far as my daily internet use is concerned, I'm definitely avidly using these various LLMs to my advantage, at least. But our next name today is facing also some pressure today. This is Qualcomm. Now, the story here is hugely tied to really surging memory chip prices that are hurting smartphone demand and challenging some of the forward-looking growth of Qualcomm. So they've specialized in chips for mobile phones, meaning that they're vulnerable to trends in the handset industry. Memory prices have taken off in response to this massive demand, but that has sent to crimp demand for smartphones and the processors inside them this year. Phone manufacturers have scaled back some of their production.
All right, Tesla. Apple just sitting there. Meta's trying to do something too. Meta. Meta coming off the low. This initial dip here and bounce, that's short covering. Maybe some new money coming in. It's bouncing off the 50 days, so that looks pretty good for Meta. I'd really like to see a follow-through day tomorrow. If we get a bullish candle again tomorrow, that's going to be a good signal.
As potential price floor and a potential price ceiling, levels where stock often stalls out or bounces, even if they don't always hold. If you're watching the video version of this podcast, you're going to see a 10-year chart of Intel. And if you're just listening, that's fine. We're going to describe what is going on. So we have two red resistance lines drawn on in this Intel chart.
One is on top, just shy of the $70 level. Those are the old 2020 highs on the chart. By the way, the actual highs for Intel, you gotta go back to 1999. But we have another red line at the $45 level, which happens to be right where the price currently is. In between those two levels, $45 and $70, price can bounce around and not mean much on this time frame. And if you want more resistance levels, you got to go to a lower time frame chart. I should also point out that $45 used to be a floor from 2018.
What's Intel doing? I took some profits on Intel on the. Okay, so it looks like we could bounce some more on Intel. Intel's another one. I don't need to do it today, but had a nice bounce this morning. I took some profits off into strength at the high of the day. We'll see what it follows through. It's not really that exciting of a trade. Got to take profits when you can. Okay, Apple's turning up. Apple's starting to turn. Apple's showing signs of a turn here. Not that much. It's Chevron, actually. Chevron caught my eye. Chevron coming back off the low. Oh boy, S&P. It's going to take a few days for this damage to correct itself. Doesn't feel like the last couple of times we dropped to the 50-day. Feels a little different. Feels more intense. Like we could follow through tomorrow and be down 5%. Okay, VIX is at the lows. I'm thinking about adding back to my VIX. I'll wait. If we can get down here near 18 or so, VIX, I might buy some more VIX. Between 17 and 18, I wouldn't mind. Hopefully this is over with. Hopefully this pullback is over with. We'll get more earnings. Get more earnings tonight. You can see hedge flows have just shut off and basically going sideways. Okay, so there's no instant worry right now. Okay, so tonight, MicroStrategy, Amazon. These are 7-8%. Roblox, Iron, they're expecting 14%. It's already down quite a bit. Affirm, 11%. Reddit, Roblox. Okay, all these more than 11%. Costco, squeeze candidate on Costco. That one's been looking pretty good lately. Retail, Costco and Target. Costco, Target, these two been on the move lately. TJ Maxx. TJ Maxx, nice follow through back above the 50-day now.
Well, you would think that they have to have businesses that generate enough revenue and cash flow and good performance, but it's almost euphoric at this point. It's the exuberance, the understanding that these are super limited markets with a very small subset of companies that can compete, and what I call an insatiable appetite from investors to participate in these companies. As you saw, OpenAI jump from its 10 billion to 150 billion, 300 billion, and now they're looking at around 800 billion. I think they're trying to close that round out now. And the numbers are still sort of eye-watering in a way where you're like, when do they start making money? It doesn't matter because this technology is so important and critical in the future. But I think the problem with OpenAI is they don't have the same moat. You've seen how Google Gemini in a very short period of time have been able to meaningfully take share from OpenAI, and also their financial obligations make them a little bit scary, in my opinion, for investors to say, I'm willing to pay $1 trillion to get in. Having said that, my prediction is even if it came out at $1 trillion, they wouldn't have a problem on IPO day, just because there's just so much interest. And this is like one of those names, kind of like Facebook was in its earlier, people are so polarized that they just want to be part of it. You said Facebook, and I was just thinking back to their IPO, which was kind of a mechanical disaster for the NASDAQ. But let's say that that there is not really a lot of investor appetite, or that there is on day one, but then OpenAI just kind of trends down from there. Is that a signal for us that we should be watching? Yeah, I mean, if they can't, a lot of IPOs do that. There is a lot of exuberance or just enthusiasm on IPO days. People aren't making money yet, and I don't name like this. But let me flip to SpaceX. I mean, we're hearing about data centers in space right now. We're seeing, the ability to bring connectivity to the world. We're seeing the revolution in Iran. We've seen what's happening in Venezuela and other parts of the world where SpaceX has been kind of, again, that's just one of its technologies, bringing meaningful payloads into space, potentially helping us counter the dynamics of building data centers and energy requirements here on Earth. This is super interesting. That's a moat. That is an absolute moat. And that's the one thing is like, well, there is Rocket Lab, there are a few other companies that are in that space.
All right, TJ, S&P still fading a bit. Spinning top. This could go either way, obviously. We could get a pivot here tomorrow and be up near the 50-day. Now that we're below the 50-day, we are short and intermediate time frame bearish. Long term is the 200-day. That's down below. 200 days way down here. I don't think we're going to get there. Possibly this area right here. Support, or this one right here. We're right here right now. So it's possible that this is the pivot that's going to hold. We won't know until tomorrow, most likely, or late this evening. So the way I view this is, what's your hurry? What's my hurry? I'm not in a hurry. I want to see confirmation. We've got 3 days of distribution volume, and we continue to fade now.
I was just the National Retail Federation big show on Sunday afternoon, and we even heard from Google CEO teaming up with retailers to launch Gemini. What do you make of all this?
Yeah, I'm really proud to say that I was banging the drum on Gemini when it was 5th or 6th on the Mag 7, and I kept saying undervalued. Company got a few things right. Remember, this is multi-decades. Google Brain, Google DeepMind, they've been building TPU, a custom AI chip, for well over a decade, 7 generations of building this, now into V8. This is a company that understood what it took to build AI. And it has all the right pieces. And on top of it, has all the content. It owns a lot of content. YouTube, it's got Google, it's got search. And it's able to basically take its audience and bring them to its new products. And that's something OpenAI doesn't have. OpenAI had a huge customer acquisition. Now all of a sudden, Google is basically using its distribution to a huge advantage, where it's able to move customers over. And they're saying, you know what? I can go back to using Google search the way I used to, and I get AI.
and I can have workspace, and I have YouTube. Oh, and they can run all their own infrastructure, so they can, by the way, do it with better economics. Like I said, I love NVIDIA for NVIDIA, but the fact that Google can build its own vertical infrastructure, its own networking, its own silicon, its own compute, it's able to make more money, and that's going to be a big thing in the future years with all the money we spend on the capex. Is how much margin can these companies that are delivering AI pull out of their AI applications to bring the bottom line to expand earnings and to return to shareholders.
And the innate user base that Google already has definitely makes it competitive.
Best distribution in the world. I want to get to Apple before we get to our runway showdown because Apple is kind of.
All right, we're back to VWAP. Probably going to lose VWAP here the way it looks.
Come from behind story many times in the past, and we've called them King Apple many times in the past as well. So, do they come back on AI? Well, and when? I'll use my words of the day will be regime change. They are due for a regime change. But no more Tim Cook. Tim Cook is
reportedly set to step down this year.
It's going to happen.
In the near term.
It's going to happen. And here's the thing: like Tim Cook has been a magnificent CEO for his shareholders. Absolutely wonderful. But remember, Steve Cook built on a legacy of Steve Jobs. Steve was the idea guy. Steve brought all kinds of new products and services. What has Tim Cook under his? Now brought new generations of phones, watches. I mean, the Vision Pro is an absolute failure. Credit cards, movies. I mean, they innovate. They need innovation though. So I think they need to flip back and find a great number two that's like next Tim Cook, and they need a Steve Jobs visionary type to come back and really lead that company to bring new product services. They can stay consumer. They don't have to be in the data center.
All right. So we're dropping below VWAP now.
Distribution, they got the best on the planet, but they need to get back to innovating. I do think they become a safe bet for investors because they buy a lot of their stock back. They aren't taking big risks. They haven't gone big on capex. But a lot of people are wondering, as fast as things are innovating, what does 3 or 5 years from now look like if phones aren't even phones? And there's a very real chance that the device.
Microsoft rolling over, Tesla rolling over, Apple no follow through.
Now we've got a market take on a Hollywood Gap show staple. Call it Who Wore It Better. And today is back in vogue edition, and we're pitting Amazon versus Meta. Both names have re-entered the chat as 2026 winners, but for totally different reasons. Amazon's story is AWS, a capacity and execution reset. Think infra build-out energy, more data centers, more compute, more of the picks and shovels that make AI run. Meta's story is a little bit different. It's about turning AI into products people use every day and proving that all that talent and spending can show up in real results. Same AI being two different runway looks. So Amazon is the builder here. Meta is the product machine. And Dan, if you're going to pick one that wins it in 2026, who's it going to be? Yeah, they were both on my list of winners because they both underperformed last year, and I think they have made those changes. But because your question doesn't allow me to go into deeper detail on that, no, I'm already on that path, as you see. I like Meta because I think it's made massive investments in human capital, and it's such a cash machine. So they have those two things working for it. They can pivot away a little bit from maybe some of those OpEx, the Reality Labs stuff, and move it to AI. But those super intelligence bets, the talent that it's brought over, we haven't seen anything from it yet. We really didn't. We talked about the $1 billion per employee hires that they made, and then we're like, well, but the thing is, the expectation that 3 or 6 months is going to turn into something. I think they've been in their cave. I think Batman's in their cave, and they are building something. And I think we're going to see that. I do really think Amazon has. They're another one with great distribution, though. Two things that I'll just say on Amazon, why I like them both. One is Amazon fell behind in the AI race. They underinvested early. They have caught up in that investment, and they have huge customer base in cloud. The cloud business is still the largest by a long margin. And two is they are going to be the beneficiary of physical AI in the next decade. When they can, they're already putting robotics in their warehouses and distribution. When you think about autonomous vehicles, drone deliveries, robot warehouses that are doing same-day distribution. I know Google and Walmart are stepping up and trying to compete with it. Amazon is going to be almost impossible to compete with when they start taking on margins. Remember, they do not make they don't really make money on commerce. They make money on ads. They make money on AWS. They make money on their marketplace. But their e-commerce is a lot. Imagine when they can take all that cost out and almost have all those jobs. When they take all that cost out and start delivering commerce at this rate,
hovering around VWAP now. MACD is negative, bearish. Spinning top on a daily. Stocks pull back.
I don't have the time to go through all of the points and highlights and industries that we're talking about, but be sure that 2026 is going to be a year when we see a lot of shakeout here. Also, look at this. We're also talking about support and resistance. Intel, what's it going to take for this foundry, and it is a foundry, the largest in the U.S., to get back on top? Maybe that's going to happen in the next few years. We'll have to get Dan back for that one as well. And also the $1 trillion IPO. Are we going to get one or two? My bet is on SpaceX just absolutely killing it, and we'll have to see how that shakes out. But once again, Dan, it's been a pleasure having you here. And we have wound things down here at Stocks in Translation, but be sure to check out all the other episodes of the video podcast on the Yahoo Finance site and mobile app. We'll catch you next time.
Market has no momentum at the moment. Okay, so we left off. Actually, we went all through the sectors. Only sector that looks okay is well, there's a few that look at okay. Consumer staples, and even that is seeing some profit taking. Consumer staples has been the leader. Defensive, let's see what that looks like. XLY. XLY is still lower thanks to Tesla and Amazon. They make up almost 50% of the weight. Google moving higher off the dip, so that worked out. I had a iron condor, took the put side off, got plenty of time for the call side to work out in June.
Welcome to Trader Talk, where we dish out the latest Wall Street buzz to keep your portfolio sizzling. I'm Kenny Polcari, and I'm coming to you live from Yahoo Finance headquarters here in the heart of New York City, a global hub where deals are made.
S&P is still trying to hold on to this level. This is tiresome, just waiting for this to happen. What's going to happen is if you enable Bollinger Bands, you'll see these Bollinger Bands contracting.
ESG has become one of the most misunderstood ideas in modern investing. To some, it's a political agenda. To others, it's marketing fluff. But strip away the noise, and here's the reality. ESG is not about virtue signaling. It's about risk management.
Okay, so S&P got a slight downward fade to it, but the Bollinger Bands are contracting. Okay, 60-minute.
Fragile labor practices or an unstable
I mean, you should be able to see this without question. Okay, without question, we can see what we're doing here. We're range bound. Range bound. The center of the range is back here.
The market eventually prices all that in. ESG just forces investors to look earlier instead of later. That doesn't mean every ESG labeled investment is good or that return should be sacrificed. It means smart investors use ESG as a lens, not a mandate. You don't buy a stock because it has a good ESG score. You avoid or discount the stock when poor ESG signals point to hidden landmines. Governance alone can make or break.
Okay.
Enron, Wells Fargo, or FTX. For investors, the takeaway is simple. ESG isn't about being woke or anti-capitalist. It's about understanding long-term sustainability in a world where regulation, transparency, and accountability are rising. Capital flows to companies that can operate, adapt, and grow without blowing themselves up. Bottom line, ESG is not a feel-good strategy. It's a forward-looking risk screen. If you ignore it, you're not principled. You're being blind. Markets don't reward ignorance. They punish it. Now, my next guest is a friend of mine from the New York Stock Exchange, Dan Lavovitz, co-founder and CEO of the Green Impact Exchange, the first registered national securities exchange built specifically for the green economy. Dan's a market structure guy through and through. He spent a decade at New York Stock Exchange regulation, writing all the trading rules and serving as an exchange prosecutor, focused on keeping markets fair, orderly, and transparent. Now he's bringing that same discipline to sustainable finance, aiming to turn a trust-me marketplace into one that can be verified and priced like any other asset class. Ladies and gentlemen, please join me in welcoming Dan to the show. Dan, it's always a pleasure. Thank you for coming. It's been a while since we've seen each other.
It is, but you didn't mention that, by the way, I used to be your regular.
Yes,
so
do we have to go there? Not that I did anything wrong, but yes, you were the regulator. All right, listen, I think I want to start with one simple idea. Explain to the audience when we talk about carbon credits, carbon.
Sure.
And define what that means.
So a carbon credit is an accounting method. It's basically saying I took an action that resulted in a ton of carbon being removed from the atmosphere.
Which is good. That's just
good. Yeah, we're reducing or we're avoiding putting carbon out. I get a credit. It's a recognized thing that then I can turn around and I can sell it to somebody.
Who gives you the credit?
The credits are issued by various registries called, they're non-governmental organizations that maintain these registries of carbon credits. You get an accounting firm that will accredit it and make sure that it's valid, and then they issue it and it lives on that registry.
Is it a U.S. thing only or is it global?
It's global. There's different kinds of carbon credits and carbon markets.
Right.
There's the voluntary carbon market, which is you and I are going to do this because it's good for our bottom line, but nobody's telling us we have to.
Okay.
And then there's the compliance market, which is the European Union or the state of California or others say power plants and other big emitters have to reduce their emissions or else they have to pay a fine.
And that's global, right? That's global. Countries around the world are embracing this carbon credit.
More countries outside the U.S., obviously, than inside.
Okay, perfect. Okay, so now let's move past the kind of the ESG label and let's talk about how you strip out politics and make sustainable finance really about risk and returns and data.
Well, I think you said it in your opening. Sustainable finance is about identifying risks and mitigating those risks, or identifying opportunities and taking advantage of those opportunities. It's not about I'm a good person, I'm a good company. It's that climate risk is a threat to business. It's a business risk.
Okay.
That's the essence of it.
And that's the essence of it. You're right. And so it is a risk. And though I wonder, though, 2 years ago, maybe people were more concerned about it. Are you seeing that's fading, or is it still top of mind for a lot of companies?
So there's this myth that somehow sustainability is passe.
All right.
Okay. What you see in survey after survey after survey is that
Trying to hold on the view app.
Investors and
Microsoft backed off. Apple did as well. So is Netflix and Nvidia. Meta. Looks like Google continues to see people coming in.
good for my business. And investors are the same way. They see it as, is this creating value in the long term? 2 years ago, it was values. You know, we're a good company. You want to buy for us, you feel good.
Right.
That's moved away from that.
All right, so then let's define this other thing, just so the audience understands. The
Google.
Impact Exchange was created, you founded it, you along with Charlie and the other guys founded it to do what exactly? Who are you looking to list?
So the Green Impact Exchange was founded on the idea that investors need more and better information about the companies that they're investing in so they can identify where are the value plays. Right. And look, the fact is that companies have conditioned investors not to believe them when it comes to sustainability. They say one thing, it got flies to Davos, right? And he says, I'm going to carbon neutral by 2050. But guess what? That's 3 CEOs from now.
Right.
And he's going to be sitting on the beach drinking a Mai Tai.
Right.
And when that check comes due, you know, he's not going to be the guy for them. So what we said was, you talked about governance in your opening. It's really all about identifying the companies that have good governance so that sustainability is threaded through everything they do.
Right.
So they see around corners, they see opportunities, they see risks.
Google's still climbing.
Where we started. And that's what we're trying to bring out.
Okay, so just tell the audience also, where is Green Impact Exchange right now? Does it exist? Is it trading?
It's not trading yet. We were approved by the SEC as the 18th registered national securities exchange.
Congratulations.
Thank you. And we are planning to launch trading next summer, which means we will be up and running. We'll be just like New York and NASDAQ and all the other exchanges. We will trade the full list, and we'll start to dually list companies.
So, okay, that was my next question, as people understand. So dually list, meaning companies that are listed on the New York or listed on NASDAQ can then dually list on the Green Impact Exchange. And they're going to be, I'm assuming, they're going to only be able to list there if they meet a number of criteria that you have set up.
Correct. So dually listed means the company B is listing at New York Stock Exchange or NASDAQ.
Right.
And then they take a secondary listing with us. Right.
Right.
So it's just it's a label.
Yeah, understood. Let me ask one more question.
S&P moving lower.
Are you going to be asking different questions to list there than the New York Stock Exchange or NASDAQ asks these companies?
Every company has to be New York, NASDAQ, doesn't matter.
Right.
And then we will have what's called the alpha.
What's ARM Holdings look like now? ARM Holdings.
Corporate governance around sustainability. We will ask them to show us their commitment to sustainability at governance level. Show us their management strategy. Show us the data.
So if they don't,
60-minute. While this is still fairly choppy, ARM Holdings is doing exactly what we need to see happen. I'll probably do something tomorrow with ARM Holdings. Volume well above average. That shows institutions have been accumulating shares down here. They liked what they saw with earnings and guidance.
I want to buy XYZ. And if it's listed as an alpha tier stock on the Green Impact Exchange, that's going to tell me that.
That's going to tell you that their board has made a commitment to sustainability as a long-term shareholder value proposition. Right. The board is committed to robust oversight. It's not just, Kenny's our board, our green guy, and once a year we hear from him at the annual meeting. There's a regular cadence of
S&P continues lower.
management saying, here's how we're going to get there, and here's the interim goals you should measure something.
Okay, so if company ABC doesn't have that little green X next to it, they're just a standard listing. Right. That tells you that they're not as committed.
It tells you that they have not made the commitment to actually.
Okay, 163 stocks advancing, so we're losing more on the breadth. We had 190 this morning. We had 250, something like that, 235. We're down to 165 stocks advancing. So that's telling you what you need to know. Market's pulling back more.
So the environmental part is where the carbon credits come in. Yes. Okay. So let me ask you a question. Then let's talk about what you're looking for in a company what do they need to be doing with their carbon credits?
So the carbon credit product, what we're looking for is to take the carbon market.
Okay, ARM Holdings off the high of the day. There's no need to chase this. Look for B and C. I'd take it easy.
You do a project, you develop carbon credits. You put them on a website, and I can say, click on Kenny's credits, put them in my
I would take it easy with starting new positions. I'd really like to see a bounce and a follow through tomorrow.
So I'm doing, let's say, I'm Delta Airlines. Okay? I'm flying planes, and as much as I am a sustainable company, the planes take carbon to fly, right? So Delta will reduce its
Tell us a lot about what institutions are thinking if they start to come in here after 2 o'clock and start selling. So we did get a little bit of a bounce. Looks like some people took profits off into strength on the bounce. Doji, tomorrow, are we lower or are we higher? That's hard to say. It's going to make a big difference on how we open tomorrow. Apple. Apple. Google. Google. Okay, a close up here would be much better, obviously, than a close below the 50-day after attempting. Okay, we're at 325, $4 above the 50-day. Okay, Meta bouncing at the 50-day. Really want to see this follow through tomorrow, get above the 200-day. So that's two stocks that I'm interested in. ARM Holdings, Google, Google, and Meta. 3 stocks. All right, Gilead from the watch list. Gilead. Okay, that's still going, Gilead. So these pharmaceutical names are working. I have Merck. I have a Merck position. That's just broken out this week. On Monday, this broke the highs. Bollinger Bands opened up, RSI rising.
Now we're back at this whole carbon neutral thing. So it was a very fascinating conversation. I'm interested to see now as we move forward how these listed companies, because I suppose what you're going to do is you're going to reach out to all the listed companies and trade NASDAQ in New York and present them with Green Impact Exchange. Here are the qualifications. See who wants to be part of that movement. Am I right? Yeah. Who wants to be valued that way? Who wants to be valued that way? I hesitate with the word movement. No. Suggest. Yeah, you're right. Who wants to be valued that way? No, you're right. But I would suspect that companies that
Yeah, Merck is in SCHD and SPHD. These are dojis for now.
I'm going to throw some stats at you. Yeah, go ahead. So every dollar that is invested in sustainability returns $21 in value. Okay, that's CDP, the Carbon Development Project, right?
Micron. Micron rolling over a bit.
Firm value by 36%. That increases profitability by 21%. It increases shareholder returns by 6%. B2B and B2C sales up 20%. Employee engagement up 57%. Right? Those are things that you want as a company. They're real things. They're real value. And I would imagine as an investor, if you're looking at it and you see that company is doing that, that only endears you of Gen Z and 97% of millennials said they look at sustainability as a factor in their
Right, and we know that, we hear it all the time, right? And look, and I suppose, what's happening to Gen Z, the opposite generation?
Yeah.
And I'm sure they're gonna look at it the same way, right? Because that's kind of gonna be the way that they're educated about it. And it's all good. I'm not saying anything negative. I think it's great. So let's talk about why market structure matters, right? The green economy, it's already the green economy. What breaks?
There's just no momentum. We got a slow drift lower. Hedge flows, basically, they shut off. Hedge flows shut off. They're just moving sideways. They're not driving higher. They're not dropping lower. It's just moving sideways. So hedge flows are telling you slow grind. Google, let's see what hedge flows look like on Google. Okay, somewhat flat.
I can design a market that trades like carbon credits are more like a commodity. They should behave like a commodity.
Okay, watching Google at the highs. Near the highs of the day, Google.
Or in the market to be there, but they're not. It's very, very hard to buy a carbon credit. So what we're doing is taking those carbon credits and equity wrapper, putting that wrapper so it's an ETP that holds a carbon credit. Now you can buy it as
Google.
somebody else can buy it as a speculator, retail investors can buy it.
Would that be proprietary to your exchange?
325. Google's at 325, right in here. Right between these two big strikes, Google. All right, let's see what Google's right in the middle. Where was it prior? Google went from expensive calls to right in the center, right at the center of these four quadrants. Google's right there, so selling call spreads. Yeah, not interested. Okay. All right, S&P continues to move lower. S&P. A lot of conflicting signals with most sectors seeing some profit taking. I get a sense that traders were expecting maybe we get a bounce, a follow through today on S&P instead of this drop, because we did defend the 50-day for 2 days. We defended the 50-day. I suspect a lot of people were surprised on the pullback, not looking for a 3 to 5% pullback. So when we get these pullbacks, a lot of traders utilize a lot of their mental and emotional capital, if you will. I prefer to not get involved with that. I've been taking profits for a couple of weeks now. rolling some things out. Let's see what breath looks like right now. Breath is still fading. I mean, if you look at this, basically haven't done anything. We've been staying above the zero line, okay, in this sideways pattern. Very seldom do we drop below the zero line on the S&P. So what's the S&P doing? It just keeps moving higher. Same thing with small caps, spending most of its time. They all do the same thing. Now, with the NASDAQ, it's a little bit different. NASDAQ has been spending about equal parts above and below. So what do I make of that? I would be a little bit more critical on anything that I take new in the tech sector. Probably wouldn't buy individual chips aside from, say, ARM Holdings, which are already down here creating a base. Semiconductors, that needs to perform and show us the money. Okay, so semiconductors need to hold this. Very possible this could drop right through the 50-day. Micron's fading at the moment. Micron lost the 21-day. Sellers at the high of the day. Okay, so I don't see a lot of reason to do anything at the moment. Oh boy.
And the future of stock trading is going to be tokenization. I think it's an extension of what's going on. Yeah, they take 10 years, right?
All right, VIX. We were looking for VIX to back off a little bit more. VIX maybe back off a little more. I'd like to add back to the March 20s. We're back to 21 already. We got down to 20. Okay, so I'm looking for this to get down between 17 and 18. I'd be interested again. Between 17 and 18. This is still pretty elevated, so I don't want to buy the calls up here. I want to wait till it pulls back again.
And that's true of tokenization for anything. Right. Real estate, cars, whatever you want. Right. I don't want to say that. No. Listen, I could sit and talk about this all day, and that should have come back. We should talk about it again. But in the meantime, I want to, as I always do, I end the podcast with presentation. So today I'm going to give you the special shrimp, which is a crazy presentation made. It is a Christmas favorite of mine. But I'll just give you a little sense of this dish. It was born on a Greek island, right? Really shaped by the wind and water and the salt water, right? A place where the bright stone buildings on the cliffs of the Greek island holds the heat of the day and the sea beside what we're going to have for dinner. The shrimp arrives from the boats at dawn. It's still tasting of salt. The garlic is sliced without even counting how many you're using. Time is kept by the light, not by the clock. The butter now meets the olive oil in the hot pan. The garlic softens in the air even before it can darken. The shrimp are then laid down carefully. You're going to sear it really quickly. They turn pink. And then you pour a little bit of wine and it flashes in the pan and it brings the sea and the heat together. Then you add some sliced tomatoes on top so they collapse into sweetness. And then you cover it all with feta cheese. Oh my God, it is so delicious. It all comes melting together. And it binds everything together without surrendering anything. Now, you can serve this over orecchiette pasta or just in a bowl with toasted garlic bread. In any event, you are not going to go wrong. You can scan the QR code on the screen for the full recipe, and trust me, you can thank me later. That's a wrap for today's trade. on Apple Podcasts, Spotify, Amazon Music, or wherever you get your podcast. You got questions or topics you want covered, email us at tradertalk@yahooinc.com because we're always listening. Until the next time, stay sharp, stay disciplined, stay in touch, and take good care.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
Mark, Keith, what you doing? We think it's a drainage issue. No, I know what they're working on. What are you guys doing?
Young homeowners turning into their parents. Love a job site.
Reinforced concrete.
Here we go.
It's an incredible thing.
Hey, fellas, this is some work getting done at the middle school. Is this related?
I don't know. Just had a question about the wiring inside there.
Let's go.
Progressive can't save you from becoming your parents, but we can save you money when you bundle home and auto with us.
We'll be back, fellas.
We won't.
You told to optimize, to have. Every January, a new you. What if you were never meant to start over? Your biology knows how to thrive. It just needs a reminder. Armor Colostrum reawakens that rose. 400 nutrients, 4 seconds, 1 daily revival. This new, remember what you're made of.
All right, S&P.
It's time for Yahoo Finance's Market Minute. U.S. stocks struggling for gains as the tech sell-off builds. Investors assess Alphabet's big AI spending plans while awaiting Amazon's earnings. Wall Street also digesting weekly jobless claims that climb.
All right, we're trying to bounce here.
Job openings descent. Checking in on Hims and Hers, the company said they will begin selling compounded copies of the Novo Nordisk Wegovy pill. The Hims and Hers product would cost about $100 less than Novo's, according to Reuters. Hims and Hers highlighting that its pill is formulated to protect the active ingredient during digestion and support absorption. Lastly, Chinese TV maker NIO says it expects to achieve an adjusted profit from operations for the fourth quarter of 2025. This would mark a first time for the company. NIO noting that the expected profit has been driven by growth in sales volume, optimization of vehicle margin, and cost reduction efforts. That's the Yahoo Finance Market Minute. welcome to a new episode of Opening Bid Unfiltered here at the NASDAQ in Times Square. I'm the Alphine's executive editor, Brian Sozzi, and a real special episode coming up here with Dr. Klaus Schwab, the founder of the World Economic Forum. Now, a lot of my followers of my work know that I love attending the World Economic Forum every year. It has changed the arc of my career, spending a lot of time with some really transformational leaders there over many years. It has been a real treat to go there each year. Let's bring in Dr. Klaus Schwab here to talk about his new book. Dr. Schwab, it's a real treat to finally get some time with you. You know, I spent many years watching you on stage, do these interviews, work these rooms. So it's a treat to get to see you here. And I thank you for coming on here to do this podcast with me. And then it comes at a time for you where you're out with a new book, what I find absolutely fascinating. I really enjoyed reading it, called Restoring Truth and Trust, an Agenda for the Intelligent Age. Take us through what made you write this book today.
When I look at the world, our whole context, political, economic, social, technological context, is in transformation. It's a revolutionary transformation. And humankind has to cope with this transformation. And here we see at the same time an erosion of truth and of trust. So I'm very concerned that if we do not restore, and that's the title of the book, Restoring Truth and Trust, if we are not capable to restore truth and trust in our society, we will lose control over the transformatory process.
Okay, we're bouncing back now. This is just chop. Don't want to be involved with this personally. As hedge flows continue to chop around, it looks just like Monday. Monday, we went nowhere. Okay, this is what Monday looked like. Actually, that wasn't Monday. Yeah, that was Monday. Was it Tuesday? Chop, chop, chop. We rally. Oh, it was the previous Monday. Okay, so the last week of January, we had this choppy price action. We don't want that. We want a trend. Okay, so we're looking for a trend. Right now, we're just chop. So the marks are just going to hover above and below VWAP. That's actually, I don't know, it's a neutral signal. We won't know until tomorrow or the close if we're going to bounce off of this level and create a 3-candle reversal, or if we're going to drop off more tomorrow. If we get a bounce higher tomorrow, there's a number of things that I was looking at. Microsoft potentially, ARM Holdings, Google. Google's pushing here. Google's still pushing higher. Google.
How is this moment in the world, Dr. Schwab, different than when you founded the World Economic Forum in 1971?
I think what has happened is that the world has become much more complex, much more fast moving, and much more systemic. Today, politics,
nice bounce in Google, back above the 50-day.
they're all interdependent. I recall when I created the World Economic Forum, and I spoke about the need of public-private cooperation. This was a new idea. Today we know that the big challenges in the world cannot be solved by one actor alone. We need the cooperation. Just think, for example, the need to create ethical guidelines for algorithm, for AI. You cannot do it as a government, you cannot do it as a business alone. You need really a collaborative effort.
One of the first WEFs, of course, it's short for World Economic Forum, that I attended, Dr. Schwab, was really so much focus on stakeholder capitalism. And I remember spending a lot of time at the coffee bar in the Congress Center talking to a lot of CEOs about what that meant to them and what it means to their shareholders. But this event that was just held in 2026, I didn't hear that message. How dismayed are you by that?
Yeah, I think we should probably talk more in the context of long-term and short-term wealth generation, and not having this conflict between shareholders and stakeholders. Because long-term, I think shareholders are also best served by value creation, and value creation is best possible by cultivating the most precious good a company or a government can have, which is trust. And trust comes not only from accumulating profits as much as possible, but also to serve the needs of society, nature, and last but not least, your employees. So we have had some, I would say, um, some backlash against stakeholder capitalism, and I can understand it because I think there were too much bureaucracy which was creeping into defining the ESGs and so on. But at the end, we have to find a balance where we foster entrepreneurship, which ultimately is the creator of public wealth, but on the other hand, take care of the social problems which we have challenges, and we create a better balance between man and nature.
Happens to me that
All right, so a nice little rally there. Google. Google.
focus on stakeholder capitalism to
Okay, Google looking pretty good here. All right, so that's good. Google.
find expense savings. There's been such a shift in how they think in the past 12 to 18 months. What do you think about that?
Yes, I think as long as we had not so many challenges on the global agenda, we had a move which was very favorable to stakeholder capitalism. But now I think the world has become much more looking short term. And so there is this conflict between long term and short term. Shareholders looking more at short term profitability and profits. But I'm convinced that at the end, stakeholder capitalism will triumph because if we create trust for companies, we also have the capability to attract the best employees, to create truthful trusting relations with our customers, and I think this will benefit the company in the long term. So it's a question: do we take a short-term or long-term approach? And as I mentioned, I'm still a fierce promoter of stakeholder capitalism, and I'm sure this will be right.
All right, yeah, Google looking really good here. S&P shaking people out. So if you went short, you probably stopped out. If you go long down here, you probably get stopped out. I don't know. I don't like the markets right now. I don't like you. Okay. I want to see more. I want to see more evidence tomorrow. All I've been doing is reducing my exposure, shorter term options that expire this week or next week. We got some earnings tonight. I don't know that I want to do any condors. Only because the markets are acting very erratic. Okay, so I'm going to pass on condors. I went long on Google instead of going selling an iron condor. I wound up going long because I already had a position. Okay, what's this UAL here? What's going on with UAL? Okay, there's the S&P. S&P on the move. UAL. What's going on here? Okay, UAL. Why am I looking at UAL? Taiwan Semi, Netflix, NVIDIA. Okay, NVIDIA, you can see positive gamma starting to come in. Calls being bought, puts are being sold. That's positive gamma. That's what you want if you're bullish. You want both of these lines to be moving higher along with the white line price. Apple, same thing. Puts being sold, calls being bought. That's positive again. There goes Apple. Okay, Apple. Apple on the move. Probably going to add to AAPU shares. I won't do it today. I'd love to do it today, but I've just been sticking to my guns today. My notes to myself last night in the evening session was to continue reducing exposure, keep an eye on XLY, XLP ratio. Today we had XLP, a little profit taking. Yeah, so we're watching all these cross currents.
Get tax expertise without fees. Switch to a TurboTax expert for $150. Say bye to fees and match with a trusted expert to handle your taxes. All forms, all returns, all tax situations. $150 all in. No surprises. Now this is taxes. Intuit TurboTax.
Explore the rivers of Europe with Thurs. Connect more deeply with the people and places you visit. Enjoy a more intimate, engaging atmosphere with fewer passengers on board and expertly guided shore excursions without the crowds. All included in one upfront price. Travel beyond ordinary. Travel with Thurs.
Hey, it's Ryan Reynolds, and this year our holiday commercial is just stuff I picked up for $5 from the yard sale. Oh, good. You're still doing this. Doing what? Well, the holiday offer. All big wireless companies stopped doing theirs in January, so I wanted to make sure that we don't stop customers just because it's December. So is future me micromanaging me? Just cut the offer.
Okay, Apple. Nice move on Apple, turning back up, looking like buyers stepping up. You want to see the after 2 o'clock crowd come in? Okay, we're seeing the after 2 o'clock crowd come in.
It is, we don't have a version of the Super Bowl and financial news, but this is, I think, my version of it every single year. Dr. Schwab, for those not familiar with your story, why did you found it?
All right, Bitcoin. Bitcoin is destroying some capital. All those Bitcoin people that have been on the TV talking about how, yeah, well, what was it? Like Tom Lee's talking about 200,000, whatever it was. A lot of disappointed Bitcoin holders. But it'll be an opportunity for others. Okay, so Apple, nice bounce in Apple. Google, nice follow through. Okay.
So I wanted also, in Switzerland, we have obligatory military service, and you whether you are the head of a bank or whatever it is, you come together every year or every third year, and you share a common space. And I wanted to make Davos a common space where there are no barriers and where people really interact.
Is it your hope that the annual meeting will always be in Davos? You've heard some murmurs that there might be another event created in a different location. What's your hope for the long-term vision of WEB?
My hope is that we stay in this village context and Davos
Apple.
the optimal conditions. But I'm much more concerned, let's say the location is very important, but the core of the annual
Google.
is even more important. The soul. And the soul of the meeting is that it is really
a place where not only business and politicians,
Meta.
where all key stakeholders, I come back to the notion of stakeholders, where all key stakeholders are involved. And that's the reason why I made particular efforts to integrate young voices, to integrate NGOs,
Tesla.
the whole diversity of global societies. And Davos has also become very well known because it integrated since many years also what we call
Tesla.
South.
Arm.
So really should be this global village, but at the same time, Davos should not be a mirror only of what's happening today. It should be mainly a platform where you shape the future through the exchange.
Like this guy's voice. Yeah, Vol. Okay.
Before, like you mentioned, Dr. Schwab, of Davos was cooperation, countries working together, CEOs working together. Of course, they network at this event, but everybody's cooperating, getting things done. What did you think the President Trump's main speech this year, did that capture the essence of why you created WEF in your view?
I think to a certain extent, Davos is always a reflection of what's happening. And many people say they come at the beginning of the year to Davos to feel the pulse of the year. And this year,
Google definitely got a mind of its own. Google's on the move. Got the Get Smart theme song in my head.
The U.S. determining the news of what's happening in the world.
This is a very important moment for Europe. How should European leaders view the U.S. at this point, and how should they respond to some of the criticisms from the U.S. administration?
I think that the partnership needs two equals. Then a partnership is most stable if you have two partners of equal weight. And of course, you could argue Europe has more or less the same economic weight as U.S. has. The U.S. has certainly many advantages because it has what I call systems leadership in many areas, like the financial area, like the digital area, the artificial intelligence. But I think this year's annual meeting was a good wake-up call for Europe because Europe has become inferior, and I think it's good if the message which was heard in Davos leads to a situation of closer cooperation in Europe, and I see this also as a good way to fortify U.S.-European relations. If Europe, for example, is the defense sector, shows that it is taking the necessary efforts to be able to defend itself. Ultimately, I think it should be always in alliance with the US, but I can understand that the US will profit from a strong European partner. And I hope that Davos was a message.
Oh boy.
For Europe to get its act together.
How concerned are you about the state of the relationship between China and the U.S.?
I think it is a...
Google's still going here. Oh, Google looking good. Dip buyers, thank you very much. So the put side worked. I took the put side off. I had calls before earnings. I didn't want to sell it. I didn't want to do an iron condor for premium. I didn't think it was going to move as much as it did. That said, the out the put side, I still have the call side, and looking for more upside. That looks good.
Related to the decisive technologies, I think China has recognized
Still going. Google.
tomorrow
Very nice.
the mastership of what I call the fourth industrial revolution, the key technologies which provide superiority. So we will have a very competitive environment. And coming back to Europe, I think it will be very important for Europe to play a kind of reconciliatory role in what certainly will be a period of tensions. And I hope that those tensions can be resolved. And I'm optimistic that also China and US will create a close working relationship.
Tesla trying to get back up to the highs. Apple moving back up to the highs. Meta and Google chasing each other.
Think of the need to develop frameworks for AI. Think of environmental.
Now we just need to get Microsoft to turn. S&P turning back up above VWAP. Okay, still got a lot of work to do up here. Okay, S&P. Okay. So we got this area to deal with now. Okay. Volume, look at the volume. Check MACD. You always want to buy when volume picks up and MACD crosses if you're going to go long. Okay. Put side, obviously, you want to take profits when MACD flattens out. We're fortunate enough to have a sell order block overhead that we can use for resistance. If it gets to resistance, then we can maybe do something else. Looks pretty good on the S&P though. For now, Apple. Okay, not a bad day. Like I said earlier, down days tend to liquidate your mental capital and emotional capital. If you get emotional every time the markets pull down, you're gonna be miserable. You have to learn to be okay with the fact the market occasionally will pull back. The biggest issue I find is not having any kind of barometers or reference points to look at. Like for example, we like to use junk bonds. When junk bonds gap down, that's a sure sign that you need to pay attention. Not just junk bonds, but other things start to show up. So junk bonds gap down on Monday. That was a clear sign that you needed to do something differently. So adding to on Monday, adding to VIX 20 calls and VIX 20-30 call spreads for March. That worked out. I sold that at the high of the day, so that helped to buffer this downside. Okay, we're not coming back down now. Okay, S&P is not going to be, it's going to be evil. Okay, futures look a little bit more extreme. Okay. But yeah, you don't want to expend your mental and emotional capital on a couple of down days because it's perfectly normal. You just need to pay attention and get used to paying attention. Just drill it in your head. What is junk bonds doing today? Dollar's really good about this. Dollar constantly throwing junk bonds in the room. Sometimes I forget. He'll throw it in the room. He, him, they. I don't know what your pronouns are, dude, but I'll just call you Dollar. Oh, man. You're getting old when you have younger people looking at the norms that they're living with right now, and they look at you and say, why do you have a problem with this? You're old. Go away. You're getting old when things start to bother you. Has nothing to do with trading, I know, but it just happened to pop into my mind just now. I was watching a movie last night and I couldn't figure out something about one of the actors. And it's just like, oh, you're one of those old people. My son was laughing. Call myself an OG. Says, Papa, you know what that means, right? You're not a gangster. Original gangster. I thought it meant old guy. Okay, so you say you get out of touch. It's like my father with me. That's not music. And they're listening to Kiss or Motley Fool. They got that long hair. They're a bunch of women. He used to drive him crazy. Ozzy Osbourne. Oh man, yeah, we all go through it. My oldest daughter now, she has 3 kids. Shaking my head. So you got like a 25-year investment right there. Get used to it. 25 years are going to pass like that before you know it. Um, okay, S&P. So anyway, back to what I was saying. So get used to looking at things like junk bonds, right? Look at the US dollar. Just understand what the US dollar is doing, how it impacts the markets. If the dollar's moving higher, okay, international companies, they're still making good money because we're, near the weekly weekly lows. But generally for US companies, when the dollar's down here, internationally, you selling international products overseas, translated back into US dollars, you're making more money. When it moves higher, we're well off of the highs that we saw back in 25. The other thing that happens with the US dollar is when the dollar starts to rally, you start to see the commodities come back down. Commodities. This was a concern last week. We were concerned about the commodities being way up here to start the week. It was Thursday we hit that high, came back on Friday, so that started to give us a signal of maybe the dollar will back off and start moving higher, and excuse me, that commodities will back off. So this is DBC, Deutsche Bank Commodity Index Tracking Fund. If you're a bull, if you're bullish, you want to see this moving lower, not higher. Okay. You want to see gold and silver back off, right? Gold and silver backed off. Okay, these all make sense if you understand, the way the money is flowing around the market. It just doesn't disappear. When you take profits in silver up here, where does the money go? Well, first it goes into cash. So you got the US dollar. And when the dollar starts to rally, of course, Deutsche Bank, the commodities start to pull back in. So people take money out of this. So that's two groups there: silver, gold, both commodities. Watch the crude oil. What's crude oil doing? So our lower crude oil price is obviously good for the consumer. Currently, we're back up to 65. Okay, so let's look at gasoline spot gasoline. Okay, you may not be interested in any of this, right? You just want to hear me tell you, okay, we're bullish or we're bearish. That's fine. But, it's good to know because worst thing is you wake up in the morning, you see futures are down, you automatically start to panic. Oh, I got too many longs. You have no reference point. Okay, we're down 20 handles. Not a big deal. Down 40 handles. Still not a big deal. Could bounce. Where are we in reference to the 50-day? Where's the money flowing? Where's the money flowing? Is it going into equities? I would say right now, probably not so much. Probably people still taking profits off, collecting cash. Here's XLB. Let's just go through the sectors real quick. XLB, XLC, communications. That would be Meta, which is bouncing right now. Meta, Google, Netflix, Charter Communications, Netflix. I said Netflix. Disney. Okay. So that's communications. Not so much. Energy, still. Okay. So buyers are stepping up on energy. All right. So they're buying energy. So some of the money that's coming out of XLB, out of silver and commodities looks like it's going into energy. Energy still got a bid. So that's good. We want to be above the 60-minute 20 MA. What's it doing? It's trending. So I want to look at stocks like Chevron, ConocoPhillips, ExxonMobil, Okay, these are all trending. So the money's flowing out of certain areas and coming into this area. Energy. Financials. Okay. Little bounce. Okay, financials are getting a bid. Getting a bid, double bottom, triple bottom right in here on the 5-minute chart. 60 minute. 60 minute. Okay, so really not interested unless the 60 minute can cross above the 60 minute, the 20 EMA on the daily. If that crosses that red dotted line, then I'd start to get interested. Okay, so financials, aside from banks, financials, they're mixed. Some of the insurance companies, Mr. Flood, who is an executive that deals with management of all these different insurance companies, he knows what they're doing. Cincinnati Financial. Okay, the insurance companies are doing well. Okay. Yeah, so insurance looks good. Let's see, Chubb. CB, Chubb. Insurance, okay. What is UNH doing? UNH still moving lower. UNH, healthcare providers, not interested. Financials, tech, a little bit of buying down here. We showed you that this looks like a double bottom on tech. We're right above the 200-day, so it could be some rotation back into tech. Or right about the time you're selling, they start buying, and we get a bounce. I'm not saying that's going to be the case, but we'll look for a bounce tomorrow. Industrials, still very bullish. Okay, higher highs, higher lows, 921.50 are all pointing up and to the right. So I would suspect that these will continue to get bought. Caterpillar off the high. It was outside the upper Bollinger Band for 3 days. It pulled back in yesterday. Russell was short Caterpillar. If you were here yesterday, he got short up here at 721. 721, he got short, $2 off the high. He rode this down yesterday. I don't know if he's still in it, but that was a short on Caterpillar. Industrials look good, though. The buyers are stepping up at the low of the day. So that's an okay sector as well. 921.50 up and to the right. So while the markets are, below the 50-day right now, the S&P and the Qs, okay, they have some mending to do. IWM is right above the 50-day. So IWM should be helped if the 10-year yield, if the 10-year continues to back off, that's going to have an impact on the IWM eventually. It makes these expensive these companies that have to pay up for financing their business because they're small caps, they don't have the same strength that a big cap that can dictate their lending costs, prices. This will bounce usually with with 10-year yield moving lower. Okay, so that's tech, industrials, financials, consumer staples. A little profit taking at the highs. So if you've been riding this up since January 8th when this broke out to the upside, maybe taking a little profits off up here. So it's held up pretty good. The buyers stepped up, so that's a good sign. So you got financials, energy, industrials to a certain degree. All of these are trending, and consumer staples. So that's 4 sectors. Okay, so what's going on here? Procter & Gamble, higher. Kimberly Clark. This was just turning. I don't know. If you're one of those people that need toilet paper and different types of things like that, tissue, different products that Kimberly Clark specializes in, that's probably going to be a decent trade. Kimberly Clark. Let's see what their earnings look like. Okay, they beat expectations. Earnings growth is okay. Revenue growth, sort of negative there. Indispensable for life. Okay. They make products that are indispensable. Okay, so $1.86 on $4 billion. Okay. So Kimberly Clark. Yeah, so that's turning off the low. That's a defensive play that could continue into the gap over here. So you could see maybe 10% upside. 104, 114. Yeah, you could definitely see 114. Probably takes about a month to get there. But stochastics, RSI, everything's pointing higher. Volume looks good. So Kimberly-Clark is a definite play. Walmart, keep looking at Walmart. All right, so this needs to fade a little bit. So yeah, so money is flowing. Understand where you're looking at, why things are doing, what you're seeing. Okay, here is, let's look at the equal weight index, see what that looks like. Removing the weight of the big tech names. Okay, so still trending, consolidating. We're having a difficult time getting above these highs. Number of stocks above the 20-day at 60%. Number of stocks above the 50-day at 65%. So these are pointing lower. This is telling you that we could see a little bit more weakness before we turn back up and start to trend on the next leg. I mean, this looks okay. So nothing really worrisome here. New York Stock Exchange, composite, 2,400 components, 70% of which are U.S. stocks. About 25% are American depository receipts, ADRs, and about 5% are REITs. What about some REITs? Let's look at DLR, Digital Realty. Okay. What's Avalon? Avalon. Avalon Communities, AVB. Nothing there. What about Valero? Energy, no. VNO, I'm sorry, Vornado. Vornado, that's at the low. Jones Lang LaSalle. Okay. So ADRs, there's a lot of, let's look at the countries. Okay, that's another thing. Do you always have to be in the U.S.? I would say not always. EWZ, Brazil, consolidating. EWW, Mexico. Okay, so money can go here too. Okay, it flows lots of places. So that's that. Argentina, ARGT. That's pulled back. Chile. ECH. Chile. Okay, at the highs. Greece. Let's take a look at Europe, Greece, Turkey. Okay, these are off the highs. Let's look at Ireland. Ireland, that's pulled back. EWU, the UK, pulled back. So everything is pulling back right now. It's telling you collect some cash. When everything is pulling back a little bit, collect some cash. Get ready for the next buying opportunity. EWQ, France. France is okay. EWP, Spain. Okay, that's all right. ELI, that's Italy, right? ELI? No. What's Italy? Italy. Oops. EWI, right? EWI? EWI. Yeah, that's Italy. Italy. Okay, that pulled back a little bit. All right, so everything is pulling back a little bit. Emerging markets, EEM. IEMG, okay. Tech, aerospace, builders, ITB. All right, that's bounced. Toll, builders actually look pretty good. DHI, DR Horton, Beazer, BZH, TriPoint, TPH. Okay. KB Homes, KBH, Lennar, all of these got a bid. XBI, XHB, Nail, and AIL. Okay, so these all look all right. So we had rotation this week into energy, financials, industrials, and consumer staples. Okay, so that's what we're looking for to stay strong, or look for any kind of signs that maybe they're starting to rotate out of those back into tech because tech got beaten up. Tech is down. Okay, so double bottom, maybe an opportunity here. Do we want to jump in right now? I don't. I want to wait and see what happens tomorrow. Can't believe it's Thursday already. I'm your host, Cousin coming to you from theclosingprint.com. It is Thursday, February 5th, 2:42. We got a few minutes left to go. Okay. Some days, like Marty Zweig used to say, Marty Zweig, very smart fellow back in the 80s, 70s, 80s, trader. He lived in a penthouse on Park Avenue. Very extravagant lifestyle. Marty Zweig, very smart guy. A lot of good things came from understanding his ideas. Okay, one is breath. The other is just a simple thing. You don't have to be trading every single day. Sometimes you just save your cash, wait for clear signals. That's what I'm doing right now. And with that, I'm going to take a few minutes to do a little bit of exercise. I'm not going anywhere. I'm just going to do maybe some stretches and stuff. Get out of this chair. Okay. I'll be right back.
It makes me feel very confident that nothing's missing and everything's accurate. With AI Assistant, we're able to focus on what really matters. Growing our business and finding new ways to reach soccer fans.
When times are tough, life can be hard. But when you have kids, it's even harder. Hi, sweetie, how are you? It's my birthday. Happy birthday. You want to give them everything they want, even when you don't have it to give. But thanks to Food Line Feeds, we got you a little something special. I can focus on what matters. Thank you. Like her next birthday wish. Thank you. Here to fill tables and hearts with hope. Food Line Feeds.
Still waiting for the ads to finish? Why not dive into Candy Crush Saga and challenge yourself to over 16,000 levels? Whether you're waiting for your stop, turn, or your chance to save it away. Candy Crush Saga. Download now and make your wait a sweet escape.
Hey, you. Yeah, you on your phone waiting for your movie to start? Let's make the wait interesting. Cards are on the table, and your seat is waiting. If you're lucky.
Take your seat on the WSOP free-to-play app. Enjoy a huge variety of poker games. Compete in tournaments and win prizes. Play now and get 1 million free chips.
This episode is brought to you by number 42%. That's what Bitcoin is sold on from its all-time high of just over $125,000 that it hit in October just last year. This week's low is just around 73,000, but that's supposed to be taken out in this very moment. And it's not just crypto. We just watched gold and silver whipsaw idly too. A rare week where safe havens and risk assets both felt like pretty much roller coasters. Our reaction that we've seen in metal and crypto and dollar and interest rates, I mean, they have been fast and furious. So how are you thinking about all of this right now?
And you say cross-asset volatility, maybe break that down.
Yeah.
I'm thinking carefully about all
I know, metal, crypto.
So huge sell-offs
lows. Cryptocurrencies are in a very difficult spot right now, and I do believe we're in a crypto winter 4-year cycle, which tends to repeat. I don't sense it would go down 80%. Personally, I think it's going to be capped. I think Bitcoin, in my own view, goes to 60, between probably high 50, 60. I don't think it's going to be a straight shot. So that's what it does. You have to be prepared to really hold this, and many people even use technicals get caught off guard with the sudden volatility. You're like, wow, I guess I'm a hodler now. I have to stay in it. I can't get rid of it now. But look, it's difficult. My thinking is a short-term bounce could happen to 87, 88, and then we go to 60 probably into May, and that's the time you want to have some cover. So crypto, it's not the end of the world. I think it will bottom probably sooner than they have in years past. Crypto will likely bottom before equities, so equities could have a larger drawdown in Q3, whereas I think crypto very well might bottom out sometime in the spring and start to turn up again. So I have optimism, but it's really important to be patient. Don't put all your assets in one basket and diversify. Understand that we're in a very strong bear market right now, and even if we get a bounce, the path of least resistance right now remains to the downside, at least with regards to crypto. With metals, eventually I think we'll probably get back to the highs.
Eventually, though, you talk about taking out recent lows after this.
Yeah, that's right. So you bounce probably throughout February in both gold, silver, and then I think we turn down, and I think we probably take out lows, which means it could get worse. Gold might get to 3,700, 3,500. And then I said, we probably summer into the fall is normally a great time for the metals. The key message for the metals is that still all of the pieces are in place why you still want to own metals, and that being the Fed still has potentially a lack of independence right now, even under Warsh. We just don't know what's going to happen. We don't know his communication style. Yeah. And obviously, when you look back over history, a change in Fed leadership is generally.
All right, so a little stretching always goes a long way. Alrighty, back below VWAP. Okay, some more chop, chop, chop. Spending top is what we're looking at on the daily. Okay, nobody's winning. It looked like we might get a little rally. We've got an hour and 9 minutes to go.
I'm long-term bullish, but I sense the level of spending is a difficult problem on both sides, being not willing to address it. And normally that's good for precious metals, as is cutting rates. So all those things are still in place. But the volatility has reared its ugly head and likely means that between now and, let's say, April, May, gold, silver probably drop, and then it's time to get long again. I sense that gold goes to 67.50. Silver probably can go back to new highs. With China demand coming back, I think they're very, very
700 and then wait for 100%.
These have become.
And when would this happen? Because we're hearing from like JP Morgan, their goals, their targets for gold are over 6,000 by year end. And
right.
Saying, like, when would
I think that's probably a year end. I don't look. These are very extended in their longer term cycles. We've already seen almost a 3-year rise in the metals, and everybody all of a sudden became enamored with the metals, and that happened literally right near the top within a few weeks, where everybody knew the metals were working. That's normally not the time to buy them, right? So
when one of my friends is asking me, guys, what do I need to know about gold? I'm like, all right, this is Main Street, Wall Street company down there. That's great.
Hey, it always pays to look when sentiment starts to get frothy. I think we've seen that in crypto, where it spread to the metals, and software obviously is being hit. Now we're seeing all these, storage stocks and the semis have been red hot, and I sense that's probably the next shoe to drop in the next month. But pay attention, use trends, and diversify. I think defense. That's the key message for this year.
Beautiful. Happens to be our word of the day. But a quick pivot here, because we have got a market's take on a classic Hollywood gab show staple, Who Wore It Better. And today's runway is all about tempo, how you play the trading game, and we've got the momentum cyclist up against the diversified golfer. On the left catwalk, the cyclist. Peak performance mode, this momentum trader hits the spotlight in a skin-tight Aero jersey with ticker symbols down the sleeve. This trader is going all out on 3, maybe 4 high-conviction breakout names. No diversification, no hedges, just max watts into a handful of rocket ships. It's pure speed, pure focus, and if one of those bets blows a tire, on the right catwalk, the diversified golfer, sustainable pace.
Okay, Tesla backed off. All right, Apple, Google, Meta. They're trying to hold on to the highs. Microsoft making a new low.
Spreads risk across asset classes, sectors, and geographies. Never tries to hit a 300-yard chip shot. Just plays the full course with balance and lives to tee up another 18. So, Mark, in this trading environment, who's wearing it better? Is it the Momo cyclist?
S&P is still fading here. S&P. S&P. I'm very inactive today. Inactive. Maybe we get a. Maybe we get an opportunity tomorrow.
But this is a year, I think, of consolidation, of defense that favors those that not only can hit it long off the tee, but can putt well as well. And one wants to really favor, I think the country club, and hopefully that warm weather will be here before we know it. We're here 6 weeks, so we'll know. I think there'll be a time for momentum. This seems to me to be a time of value and not growth. And I think the cyclist is going to take second seat behind, those.
Yeah, I would love to see ARM do something tomorrow. That looks like that could go a ways. Micron bouncing back up into the lower half of yesterday's range. Sellers at the high. Just feels like Micron's going to pull back a bit more back to the 50-day. Micron. Google, nice little treat to have the dip get bought like it did. Same thing with Meta bouncing off the 50-day and Apple above the 50-day, looking for more follow-through back to the 52-week highs.
I've had some good calls. I turned bearish in late 2021, early 2022. I was fortunate to catch a pretty good downdraft in June of that year in October, and myself along with Tom Lee have been bulls the last couple of years. But this year we said, you know what, it's time to really consider that we could get that consolidation for reasons such as tech starting to gradually wane. Leadership is changing. We're in a midterm election year. We have a new Fed governor approaching. There are all these reasons why everybody thinks, oh, this is happening in the world. This should be stocks down, the tariffs, and none of that.
You may think, let's say, this will be covering something I already talked about, but you may be thinking, okay, so I've been investing. The market's kept going higher and higher and higher. What should I have been looking at to give me an idea that maybe I should start reducing my exposure? Okay, I know I've already covered this, but this is what I'd be looking at. All right, so one of the first things I do in the evening or in the morning, at least once or twice a week, I'll always be unless we're trending, I'll always be paying attention to the XLY XLP ratio. Okay, that is clearly turning down. Okay. Back in February, had you paid attention to this signal, you would have missed that very significant drawdown. Also, you would have caught the buy. Okay, back in April. On April 7th, this turned back up. Everything turned back up. So it's one of the first things I watch. You don't need to do it every day, but especially when we were trending like we were from about April into December, basically. But once a week is good. Also watch junk bonds. Watch the advanced decline percent. We get to extremes. Watch S&P equal weight index. What's the S&P equal weight index doing compared to the New York FANG components? And if you just look at those few things, understand where money's flowing, you won't get blindsided. Okay? You won't get blindsided. And you can sit through a day today and just, wait for your opportunity. As Sunrise trader, somebody I've known for 15, 18 years, Sunrise trader would say, let the price come to you, right? You don't need to chase. Wait for it to come to you. Okay, this is a weekly time frame. Let's look at the daily. Daily is very obvious, okay? And that peaked in January. And what happened in January? Think about this. Okay, so the S&P is at the highs. XLY, XLP rolls over at the beginning of January. What happened in January? What happened? Well, we know that the defensives kicked in. So in January, look what happened. Boom. So even if you missed this opportunity this time, you should be waiting right now to do anything else, right? You should be waiting because what happened on this run up could play out into a rotation back into tech, in which case you want to be watching tech. Okay. Do you need to be on the ball like today, tomorrow? No, you could be fine if you miss it a day or two. You got a double bottom here or above the 200-day. Tech is probably going to do something soon. New York Fang. Promise you, if you just look at the markets this way, I learned this through some trial and error, but I've been a stock charts member for a long time. I used to read all of these articles, but now, I pretty much know what everybody's going to say. Okay, so Arthur Hill, I'm sure he's been talking about. Okay, so that's January 29th. Okay, and over the years, I would watch what Arthur was writing about, watching what some of the other old timers were writing about. Like, let's see. Where is Martin Pring? There's another one. He's another one. Gold and silver. Okay, and they would produce these charts, and I just copy it, and save it into a folder. And after time, you start to see what they're talking about over time. So that's what I try to talk about on a daily, weekly, monthly, forever basis.
Spot what matters, predict what's next, and start with confidence. It's all on one platform, from stocks and ETFs to options and crypto. Trade smart with Moomoo.
Oh, hey, all that fun program? Yeah, it's awesome game. Caesar slots on my phone. Oh.
She's good too. Mary. Mary's good. Okay, so anyway, the S&P is just sitting here at VWAP, spinning top. If we're lucky, we'll hold right here, and tomorrow we'll open higher if you're bullish. If you're not, 5%, we already talked about where 5% would pull us back to. Previous pivots. Okay, so these are the levels I'm looking at, okay? For reference, okay, this is what I'm thinking. Okay, do we go all the way down 4%? That would be that previous pivot. Could be in a range. Could bounce back above the 50-day tomorrow, like we did in the previous 4 occasions where we drop below. If we go back to the 200-day, that's a 7% pullback. Okay, so we gained 45% on the S&P 500. Surely you can handle a 3 to 4% pullback, even if you're positioned 100% long. You should be able to handle a 4% pullback, 5%. Earnings are good. That's the main thing that we want to be paying attention to. Earnings are good. Guidance is good for the most part. ARM Holdings just reported. That's a chip stock. They reported good earnings with positive forward guidance. They're expecting more profits. And what's happening with ARM? You get the corresponding reaction. Okay. Look at the volume. This was way down here at 10 million earlier. Now it's almost 20 million. You think that is definitely institutions. 18 million shares trading hands. So definitely institutions. Okay.
Financials to round out those terms there. Here's the NASDAQ 100, and you can see Microsoft down 4%. The sell-off in software continues. Amazon down 4.5%. And let's just dive into software right now, where we can see a couple green spots like Cisco and IBM, but for the most part, a lot of dark red there. And semiconductors, well, that is the opposite story. A bastion of strength, if you will. But I did promise crypto, and I do want to get to that. Here we have Bitcoin down 11, almost 12% over the trailing 24 hours. And then you take a look at some of the other coins like Ripple down 21%, Solana down 13%. Let me give you a number for that, 65,000. The record high was 125,000 in October of last year. So Bitcoin is in danger of nearly being cut in half. Here's a one-year chart, and that is a real ouch. Very oversold on the daily, the weekly, and the monthly. We'll have to see if we get a little dead cat bounce, but at this point, looking like that crypto winter has arrived, Josh.
Jared, thank you. Well, it's building as the NASDAQ extends its route to a third day in a row. Gina Martin Adams, HB Wealth, Chief Market Strategist, joining us to discuss. Gina, let's argue this. So far in 2026, almost everything is beating tech. Because you're right, of course, this year what's been working, it's energy, it's materials.
Yeah.
So do you look at that rotation, Gina, and you say, okay, this is real, it's sustainable, it's durable, or no?
Okay.
It's more of it's going to prove to be kind of a short-term trade.
I don't know what else to say. I don't want to be so redundant that you tune me out, like a certain person downstairs. You ever speak to anybody that you're talking to them, and you can tell that they're not even listening to you? They're just thinking about the next thing they want to say. That's my life. I think you would learn. Big. This looks really good. Looks really good. I would generally say, I wish I'd done this earlier, but in reality, I don't want to buy it right now, only because the markets are not really conducive to 100% or even 90% probability that we're going to follow through. Okay, there's 50-50, basically 50-50 that we're going to stay right here in a doji. 50-50 that we go either up or down. We could move sideways. That's possible. So if we get a positive bounce tomorrow, I'm definitely going to be buying some ARM holdings. I'll go out maybe to like June, buy some spreads so it's cheaper. I definitely want to start some ARM holdings because we're down here holding the lows. Okay, we're down here holding the lows, basing now. Okay, so this breaks to the upside. It's going to be obvious. It's going to get into this Kirby. The significance of the Kirby is that there's less volume. This is denoting volume traded at a certain price, volume at price. So if it gets into this area, it's going to be much easier for this to accelerate to the upside, back to the 200-day. The 200-day is basically the ceiling right there. You see that big band right there? That's where a lot of volume traded. So there's going to be some memory there. There'll be some people that haven't sold that'll be looking to break even. But the idea here is that once we get above this level right here, this horizontal, okay, once we get above this horizontal, we should see we should see prices accelerate. Okay, in between here and here, that's the Kirby. Okay, basically prices can get sucked up into this area very quickly. Okay, so this is the area we want to look at right here. Okay, so that's the Kirby right here. Prices can get sucked up in here very easily. Okay, so that's what we're looking for. Looks good. Yep, looks good. Mm-hmm.
Staples do not outperform in up market. This is almost it's one of the just golden rules of the S&P 500 is if you're overweight staples and you're inherently suggesting some degree of defensive bias, staples do very well in a down market or in a weak market because they're a low beta sector. Utilities used to have this status. Utilities has become very interesting because unlike staples, utilities has become a derivative play on AI. Utilities are the recipient of tech, and it's a little bit more offensive. Still low beta, but I think that element of
Yeah, this is going to be good. Harm's going to be good. Okay, we've got NVIDIA starting to bounce now. Apple looks like it wants to go for the high now. It's trying the high of the day. There goes Google. Google, Meta, Tesla, everything is turning now. Okay, so there goes the markets. Hope you keep going there. That's good. I hope you can see why I'm not just jumping into this feet first and throwing my everything that I've made over the last 6 months started to scale out a little bit at a time. So those profits, some of the things like Chevron, since January, we were rolling that up. That stopped moving. Now, what's it doing right now? Okay, Chevron. Chevron's starting to grind back up. So I'll probably be back into Chevron, if not tomorrow, next week. I took a little bit off today. I still have a position. Let's look at Chevron. CVX. Okay, so when it starts to stutter like this, you don't get candles that just keep moving higher every single day. Start thinking about a base forming up here at the highs. That's fine too. We're seeing muscle, looks like a bicep and profile on RSI. This just means that the strength of the trend is persistent. Okay, when it stays up here like that. Okay, let me see if I can find another one. Let's go. Micron was a pretty good one. Look at the muscle on Micron. Look at this over here. Looks like a bicep and profile. What did prices keep doing? They kept going, 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 going. A lot of people use RSI just for overbought and oversold, and they might sell too early because you start to see this persistent strength, and then you watch the volume, and they just keep coming after the stock. It just kept going. All right, so a little dip there on Micron. Same thing with SanDisk. SNDK. Yeah, that's SanDisk. SanDisk. Look at the muscle. Look over here on the left. Look at September, October. Muscle. So a lot of people would see this lower high and say divergence, which it is, but very persistent. Just keeps moving to the upside. Okay, eventually RSI does drop down and we get a base. And then it breaks out again. Volume picks up. Institutions are super obvious. NVIDIA, not so much. It's been spending a lot of time below the 50 level RSI. MACD stochastics resetting. Maybe we get a bounce. Maybe we get a surprise for earnings. Because a lot of these companies have been saying they've been buying a lot of processors. Meta, 600,000 of the, was it Grace Blackwell or whatever it's called? 600,000 processors Meta bought or wanted to buy for their Prometheus project, which is like the size of Manhattan, so they say. That's just incredible, just to think the size of Manhattan. If you've ever been to Manhattan, it's not small. With a CAGR, the global AI industry has been forecasted and continues to be forecasted with a CAGR of at least 30, above 32%, above 30% for the next 9 years. So any dips, we want to see evidence of it being bought. All right, so we do have a little stumble today and this week, S&P. dropping below the 50-day. We're trying to put in a hammer at this previous pivot at 67.89. I want to see evidence tomorrow. I want to see a bounce tomorrow, then I'll buy some ARM holdings. Google's still going. So they're not even wasting any time with Google. Google is gone. I take it you're in it, Grover. I'm in it. I got June 340, 350 calls. I'll roll these up to 345, 355, something like that. I'll just let these go for now because it's pretty obvious what's going on. It does. Okay, once we get above yesterday's close, just a little bit higher, this red bar is going to turn green. Okay, I'm going to take a snapshot of this and see what it looks like after the close. Okay, so it's 3:13 p.m. Do you know where your kids are? They better be in school, maybe getting out. I think one of the biggest changes in my career as a trader and investor was that paying attention to money flow. And once I'm ready to buy something, looking at the 60-minute, the daily, and the weekly. Here's the 60-minute. Okay, so this is Google. Still not out of the woods, but that's a hell of a reversal. If we had saw the same thing in Microsoft, they'd be very interested. Microsoft's still dropping. See that 20 EMA, that green line? What's ARM Holdings doing? ARM Holdings, okay, back above the 20 EMA. So do I want to buy ARM? If this continues, what we'll get is a little dip tomorrow. Or maybe not. Maybe this just keeps going like it did over here. Okay, so watch your money flow. Check your daily, weekly, and down to the 60-minute. Okay, here's the weekly. Weekly. Okay, there's the weekly. So we're in the lower part of the range on ARM. I think I marked this up already. Let's see, ARM. I marked this up. Okay, so ARM, the weekly time frame, ARM. Let me go. It's just switch here. For some reason, it doesn't change. Okay, ARM. Okay, ARM weekly. All right, this should be pretty obvious. Okay, so we got good earnings. We got good guidance. We know the 60 minutes above the 20 EMA. The daily looks good. We got 18 million shares plus trading hands already. So the last thing I want to do, or the first thing I want to do, is set a benchmark, right? I want to set a benchmark. Okay, so I can see what appears to be a range for the most part, plus or minus, and I can see the middle of the range, and I can see where we are. We're in the lower half of this range. Okay, that's been banging out since 24. So what's the likelihood this is going to turn up? Well, with it above the 60-minute, it's pretty high. With good guidance, it's pretty high. So I want to be thinking about it. Yeah, I want to be thinking about buying. So tomorrow, I've only said it like a million times now, ad nauseum. We'll get something going. Okay, S&P turned back down. All right, so just like that, they're not going to make this easy, are they? So on a day like today, I want to mark up my homework. What stocks I'm thinking about buying, my shopping list. I want to be taking some things off, taking some profits, collecting some cash, short-term trades, expiring this tomorrow or next week. I want to make sure that I capture those profits. I don't want to lose too much off of these gains. Chevron's continuing. Chevron looks like it wants to keep going. So Chevron looking good. All right, so buyers at the low of the day. Chevron. Okay, this looks good. 180, 185s. I can get back into these. Okay, 180, 185. This is where I sold it before. So I'm going to get back into this just a little bit. I'll do like 5 of these. Chevron. CVX.
to see you. So let's dig into this. You beat out
June. Okay, so June 180, 185s. Okay, that'll be about $300. That's I sold it for $400 earlier. Okay, so that's good to see. 180, 185. All right, so that's pretty decent re-entry. Yeah, I'll take that. All right, so I'm gonna do half. I was gonna buy 10. I'm gonna buy 5, and I'll do the 180, 185s for June. 225 debit. Okay, because if this does dip a little bit, I'll add some more to it. All right, I'm filled. 225. Oh boy. Chevron added back 180, 185s for June. Chevron. 180, 185 call for June.
What has really changed is our customers' access to memory and pricing. Given the success of data centers and several of the memory vendors redirecting some of their supply to the data center needs, the handset customers are constrained. And what you're seeing being reflected in our outlook is really the adjustment process that the customers are going through. And we see it as a short-term phenomenon that will get settled over some period of time. There are a lot of uncertainties at this point. So
Okay, so this is looking good. Already starting to make money. Could have made a lot more if I'd paid attention to this earlier and wasn't talking so much. Got a captive audience. I get to say everything I want to say before I let you say anything, basically. Build. Okay. Okay, so I'm looking for Chevron to continue higher. I already have some of those 180, 185s. I got a discount to where I sold it earlier. Looks good. All right, so the idea here is once we cruise up towards 185, if we get there, I can roll these out to say July, like the 185, 190, and then just keep following this trend. Keep following the trend. Okay, so buyers keep stepping up, 920, 50 day or up and to the right. Oh.
You might see a little bit of volume being sacrificed at the mid-low tiers where there might not be enough supply. And so there's a little bit of impact on us. But I think
Bitcoin just got whacked. Oh, man. They took this out back behind the barn, didn't they? Wow. It's at 64th. Oh, my gosh. Bitcoin's at 64th. I can't even. I don't want to look. I don't even want to look at it. Oh. What's his name? Sailor's got to be freaking out, right? MSTR. Ay, ay, ay. Oh, my goodness. Sailor's got to be freaking out.
And then we're also addressing with AI 250 memory bandwidth, which is one of the constraints that data center operators have. And so as we've come in with these unique chips that give an advantage to our customers,
Ay, ay, ay. That is crazy.
in a few months, where we'll provide a lot more details about the product and the traction of the customer.
Let's talk margins here for a second, because chip gross margins, analysts were saying this morning, they seem fine.
Yeah, 20 EMA. Look at the 20 EMA, Tony. That looks good.
Is that mix improvement, Akash? Is it cost advantages? What's going on? And what do you see ahead? What's the trajectory of those margins look like, Akash?
Yeah, Josh, our gross margins have been very strong, and the reason for that is technology leadership. I mean, we've done very well. We have very unique industry-leading products. Our customers recognize that, and that's reflected in our gross margin profile. As we go forward, I think that's going to leadership is going to stay intact. We are introducing new chips that really offer these unique capabilities, not just in
Okay,
processing,
Dole
but AI.
PLC.
As we look at
Is this the pineapple? Dole DOLE DOLE.
and our roadmap gets stronger,
Yeah, Dole. Okay.
I think that's going to continue to get reflected in our
February 25th is the next earnings. It's like a Wahoo. The middle of a Wahoo is all okay. We're dropping off some more. The middle of a Wahoo is all pineapple farms. I think most of the flap areas of Maui are the same way, right? Okay, back down here. Microsoft. Man, Microsoft is getting its ASS handed to it. Wow.
optimized and suitable for where the cars are going, right? That is an industry that's in transition. It requires a lot more and different kind of technologies than
Okay.
Qualcomm is hitting that inflection point and bringing the right set of technologies into cars. So very excited. I think we talked about Volkswagen signing up with Qualcomm at scale. Several Japanese OEMs, Korean OEMs, US OEMs, Chinese, Europeans, they're all using our technology. And so the scale that we bring to bear is incredible. And we're now becoming the leader in ADAS as well going forward, autonomous driving. The other thing I'll say about automotive is that we are able to leverage this technology into robotics as well. Robotics
Tesla came all the way back down to the low.
that's coming up with humanoids and
Tisk. Google.
all kinds of
Google looking good. Google. All right. Amazon has earnings, right? Amazon.
now at the center of the transformation with our new product, Dragonwing IQ10, which brings the strengths from a connectivity processing and AI perspective all together and really optimized product for.
So tonight we got Amazon.
Very excited about working with the industry leaders on it, and as we look forward.
Okay, here's Amazon.
The opportunities are really limitless.
Okay, what did they do last time? Amazon, last earnings. Okay, last earnings, we gapped up. And 2 weeks later, we were back down to where inside of the gap. So do we gap back in the other direction? I don't know. I don't trust these puts on the downside. The call's not enough to do anything. There's scared money out there. So these moves can be a lot more extreme. The Bears got this. For now, with a few exceptions. We've got about 40 stocks, 30 stocks advancing on the NASDAQ 100. Let's see what we got here. We've got 33 stocks advancing out of 100. So we basically have 67 stocks declining or unchanged on the NASDAQ 100. So no surprise the NASDAQ 100 looks like it does. NDX. Okay, this NASDAQ 100 looks like it does. We could see a bounce here maybe tomorrow near the 200-day. XLK is already there, more or less. XLK is here. It's starting to close. Looks like it's going to close at the low of the day. We've got 33 minutes to go. 33 minutes to go in this trading day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Thursday, February the 5th, 3:26 p.m. My suggestion is to do nothing. If you've been accumulating some cash, that's a good thing. We'll wait for a bounce because the markets are pulling back. No doubt you've noticed.
So really good about execution on the things we can control. Now let's look into 26 to touch the other half of your question. The tariffs really didn't show up until the back part of 2025 in terms of the cost impact. we'll see more cost impact in 2026 to the tune of about $100 million. So that's a bit of a headwind for us going into next year. Also, the North American market, which is not our biggest market, but the North American market is going to be down another 15%. Now, this market's been battered in that it's last year in 2025, there's fewer tractors bought than any year down another 15%. The age of the fleet is as old as it's been in a lot of recorded times. So the market's tough with the extra cost pressure that we've got. That's a bit of the situation that we've got going on. We're just trying to control the things we can control and manage through this.
Hey, Eric, it's Julie here. So as you mentioned, the backdrop has been tough here, particularly in North America. You did say on the call that 2025 is the bottom of the trough. Were you talking about then the sort of global agricultural economy?
Yes, exactly. So North America will go down, but that's only about 20% of our sales. Like a little over 60% of our sales is Europe, and we expect that market to be up. And then South America is kind of in the middle. I was just down in South America visiting with many farmers. The smallest farm I was on was 100,000 acres. And they're actually more positive than I expected. The European show, we were at the biggest farm show in the world just a couple months ago, also positive sentiment there. And once again, the age of the fleet is quite old. And with our new AI technologies on our machines, our new data platform, the innovation we've been driving, 14 new launches this year, all of that is creating thirst and pull into a market that's got some pent-up demand because of the age of the fleet.
Eric, I thought an interesting point you made here. You said you gained global market share in 25, including, you say,
Chevron's still pushing higher. Chevron.
I'm curious, Eric, what
Google. Google at the highs. Chevron. Okay, just added over here. Chevron just added to my position here. Oop. Right in this area. That continues higher.
And until about 5 years ago, we really had it predominantly in Europe, but now we're bringing it to North America and South America.
Okay, Meta's pulling back. All right, so Meta we need confirmation tomorrow. I need confirmation tomorrow from Meta. Meta. Okay, what happens? Let's see what the 60-minute looks like. Okay, so you can see not only on the daily where we're bouncing at the 50-day, but we need to get above the 200-day. That would mean we'll get more positive price action, 685, 690. If we can get that tomorrow, I'd feel more confident on Meta. Right now, I'm not that confident that this can't turn into just a drop right below the 50-day. Micron, same thing. Micron. This could bounce. I've seen this story too many times where you think this is going to bounce, you buy, tomorrow we come in, it's like big down day, we're down to the 50-day. And people who are looking for opportunities welcome it because look at the move on Micron. Okay, I'm not saying this is going to pull back dramatically, but there's potential. There's potential because institutions are going to want to keep this up here as long as they can to take off their profits. Again, I'm not saying that this is going to pull back, but let's just look at this. This pivot low up to that pivot high on the weekly time frame. Okay, 382 would be 310. Okay, and if I adjust this, okay, 236 is right around 370, 365. Just eyeballing it. Yeah, 365. Let me just pull this over here. Okay, like this. Okay, so 361, right around 360. Okay. Mm-hmm. Okay, we continue to move lower, S&P. So there you go. So we just hit we hit the 236 area. Big run up. Hopefully Micron holds up here in basis, but that's what it looks like on the weekly.
Yeah. So not in the short term, but I am confident and bullish in the mid.
Google.
And so you listed one of the issues.
Okay, Google.
Is the demand side of the equation.
Apple.
Farmers, a large part of the demand.
Valiant effort here to hold on to gains. Apple. Buyers at the low of the day. We continue to ride the upper band. RSI is rising. Volume looks good. Over the last 6 trading days, we've had decent volume. MACD stochastics, all right. Looking at the 60-minute 20 MA. Okay, Apple is trending. Would I buy today now? No. Earlier today, yes. Stop underneath the rising 20 MA. So 272, 273. All right, so it's three and a half, three and three quarters. Looking for more upside. Apple looks okay. Meta, we talked about. Google. Okay, Google's got work. It needs to get back above the 20 MA. That 20 MA needs to turn up. That's going to take at least tomorrow to do that. Already have June calls, so that's not a concern. I would like to see the markets bounce, though. Let's see some rotation. Let's see what that looks like. Okay, so yesterday this was all green over here on the left. On the right side, this was all green. A lot of red in there. Stocks that were up yesterday, getting some selling. I think that's probably a lot of people taking profits and reducing their exposure because we are below the 50-day. Coin toss on whether or not we bounce or drop again tomorrow.
Using technology to make the farmer more productive, more profitable, given this tough backdrop until it clears up. Once it clears up, then these all just also are benefits.
Okay, we just got a little. Somebody just took some profits on Chevron right there. Chevron, a little profit taking right there.
Coming up, it's a big week for IPOs on Wall Street. Bob's Discount Furniture is making its debut today. The CEO, straight ahead.
Google. All right, we've got 25 minutes to go. 25 minutes.
Goldfish have short memories. Do you like goldfish? Brother.
Imagine seeing a stronger, more confident you. Without synthetics or injectables.
Okay, what's VIX at? VIX. Okay, so VIX is back up at the 20s, so I don't want to be buying any puts down here at the low because if we get any kind of bounce, VIX is going to get crushed. And S&P will turn in the other direction, so your puts will get evaporated. If you didn't buy puts 2 weeks ago when Brent was mentioning it, when we mentioned it, not a good time now. We'll bounce. Okay, let's go back to what we were talking about before. S&P. Okay, this is S&P currently. So a larger spending top, not closing at the high, not closing at the low, but right in the middle, but in the lower half of the daily range. So that's more susceptible to a move back down to this pivot, these pivots. So it already lost this pivot. RSI is still dipping, looking for this to turn. Okay, we've had 4 distribution days.
Millions of slot players choose to play Slotomania, the #1 free slots game in the world. Download now to receive 1 million coins and a free pick in Slotomania. What will today's spin?
What's SPXU look like? SPXU. That's moving higher.
Unlock Cleopatra's secret chamber and unleash Cleopatra's mega jackpot. Come play Cleopatra straight
straight from the floors of Vegas.
It's a busy week on the IPO calendar, and the marquee name today, Bob's Discount Furniture. Let's get to executive editor Brian Sosky on the floor of the New York Stock Exchange with the CEO of Bob's Discount Furniture, Bill Barton. Sosky.
All right, thanks so much, Josh. I can't tell you how refreshing it is to be on the New York Stock Exchange and not talk about a tech IPO. We're just talking furniture. Bill, good to see you. And you're not Bob.
No, I'm definitely not Bob. It's great to be here today, Brian.
I'm waiting for one of these Bob holograms, like the commercial to pop out somewhere.
Well, we can make that happen.
All right. So like I mentioned at the top there, I get your company. I very much understood the prospectus. Sales look good, profits look good. What should investors need to know about your company?
Well, what they should know is, first off, for 35 years, we've been helping people turn the place they live into a home they love by doing it the Bob's way. We're very unique. We're much more like a value retailer than your typical furniture retailer, right? Everyday low prices on quality stylish furniture and available when you want it. It's available now. So today we have over 200 stores, which sounds like a lot. We have a plan to get to over 500.
When will you hit 500? And where else do you see yourself expanding?
Yeah, it's a great question. So look, our 500 store target is 2035. We have about 300 stores to go. About a third of those will be infill in our existing regions, which is the Northeast, the Midwest, and the West.
Okay, looking like a little bounce here. I got a feeling we're going to move a little lower tomorrow.
It's done really well, really well. And in large part because we take time to study a market and plan.
Who's earnings tonight? Got earnings tonight. Okay, IREN, 14% expected move, 14.5. Roadblocks, Affirm, Reddit. Be nice to see these all guide and beat. I know it's expecting too much, but MicroStrategy, Sailor's got to be. I don't know if it affects him personally, his personal wealth, but definitely strategy, the company, you would think. I don't know. Oh boy, at some point this is going to be a nice buying opportunity for Bitcoin. I don't want to catch any falling knives, so we'll wait on that one. Okay.
And our staff is trained to be helpful and responsive and no pressure. And what you experience is what we intend to have happen every one of our stores.
With that 60% off discount I got, that wasn't normal, or was that? No, I'm just kidding.
Well, what you did get was what we call the Bob's discount. We negotiate great prices. We buy narrow and deep, right? So we make large buys and we pass that on to you.
So I'm going through the prospectus. What have you seen with the consumer this year? I mean, sales are pretty good, and most importantly, you have been growing profits greater than sales in a year where costs of things have just gone through the roof. No pun intended.
Yeah, well, for sure. Last year was, of course, a challenging year with tariffs. But, a couple of things. First off, we don't sell any third-party brands. Everything we sell is...
Okay, what's Intel doing? Intel's hanging in there. All right. So Intel, I would love to do something with Intel, but it's just not moving that much. Had a nice spike this morning. We got out of Intel at the high. Okay, Intel, we did get out at the high, so that was fortunate. While the getting was good, we got out at the high of the day, and then it collapsed. I mean, we almost top ticked this one on the way out. Daily price action is kind of messy, but any day we could wake up and Intel be much higher. Not my favorite. I would really love to see something with ARM Holdings. Okay, you can see that they've taken profits at the high of the day. Okay, what do we trade in volume? Almost 20 million shares trading hands. Okay, so it did dip. If you're thinking about ARM hold, maybe the dip here. Maybe the dip. ARM hold. Let me see. ARM. See what I can get here. ARM. Where do we hit? The high was ARM Holdings. The high was 115. Arm holdings.
These great relationships, and we're working to continue to move more back to the U.S. as we can find that capacity. I'm going to
Maybe April.
from asking a very geeky question on profit margins and cash flow. Who is Bob, and why I've been
Okay, so we hit 115-ish. Those are going for $10. 40 Delta. 40 Delta is the 120. There's a crap ton of options here. Buy a vertical. Okay, I'm going to buy a little bit with the intent of, okay, I'll add to it. 125, let's see. 125, 130. What does that say? Okay, 220, 266. So 130 to make 350. Okay, it's still dipping, so I'm going to keep my finger on the trigger here. Okay. Could just wait until tomorrow. This will probably be back up again tomorrow. ARM holdings. Let's see, the 60-minute. Okay, coming back to the 60-minute 20 EMA, 111. Okay, S&P continues to move lower. All right, I'm going to wait. I've been collecting cash. The plan was today to continue to collect some cash. Look for strength still showing up in energy like Chevron. Market's weak. We could drop a little bit more tomorrow. I'm going to wait. ARM holdings. Unless I can get a good dip here. Let's see if I can get a limit. $2. $2. What about 195? 195. We've got 15 minutes to go. I'm going to bid 190. 190 limit good till canceled. I'll close this later. 200 to make 800. Okay, if I can get billed at 190. Okay, so I don't think I'm going to get filled, but I'll put a limit order at 190. It's bid up here at 220 something. It's bid at 225, 190. Okay, I'm trying to get into some ARM 125, 135 call spreads for April. I don't know if I'm going to get filled, but we have a lot of open interest at this area. It's trading 225 right now. I'm trying 190 limit. I don't think I'll get filled. But if the markets dip a little bit more, maybe. Yeah, it's still moving a bit lower. It's a small position. I'll start to scale in if this continues higher tomorrow. ARM holdings. Been watching this one all day. S&P. Why do you have to pull back? Consolidate. Recent gains, 50 days above now. You're stuck, huh? There you go. I'm trying to get into some ARM spreads for April for $190. Okay. $125, $135. So 200, basically 190 to make 880. Let me just make a note of that. Okay, yeah, 190 to make 810. I don't think I'm going to get. I don't think I'll get filled, but we'll take a look at it tomorrow. I'm going to take a snapshot of this so I know what it was yesterday, or what it was today. All right, S&P still dropping down here. S&P. ARM Holdings. Really should wait for this to get above the 50 day. Maybe I should cancel this order. What's the bid at? What's the bid at? 230. Okay, and what's the open interest? We've got 1,000 in open interest, 2,260 calls traded today at 125 strike for April for ARM Holdings. Had a pretty bullish day today. It just looks like profit taking for now. All right, 12 minutes to go. 11 minutes, 30 seconds to go. Okay, if I don't get filled, I'll cancel this order at the close. Last thing I want to do is have this thing gap down tomorrow or whatever, ARM Holdings, and get stuck. So I got a limit order right now. I'm just watching it. ARM Holdings, Google. Okay, wife went to get the sun.
Will not be investigated by the Department of Justice if he doesn't cut interest rates exactly the way that Donald Trump has.
That is up to the president. Can you commit that you will?
I'm sorry.
Can you commit that you will not hold up?
Be sued if he doesn't drop interest rates. And you won't be criminally investigated.
The president also.
Oh, geez, Elizabeth Warren. Ay. Okay, so NVIDIA still, NVIDIA looks worse for wear. NVIDIA, Meta's pulling back. Did bounce to the 50 day, but I don't want to get sucked in. I don't know. I'm going to cancel this order. I'm going to cancel this. I don't like the way the markets are acting right now. Uh, 222. Yeah, I'm going to cancel this. Okay, canceled it. Oops. Nope, I didn't cancel it. There we go. Cancel.
We've got 3 mega IPOs on deck this year, and now Elon Musk's SpaceX story has a new twist. Its IPO advisors are reportedly looking into getting the space.
I was hoping we could get VIX to pull back in so I could buy some March 20 calls again. But that zipped higher. Okay, we got about 8 minutes, 15 seconds to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is a rather bearish day, following through what we saw yesterday. Okay. Google still trading near the highs of the day. Google ARM Holdings pulling back a bit more. It looked a lot more bullish earlier. People were chasing it. Now they're selling, taking profits on a big day. 20 million shares trading hands. Okay, ARM. Yeah, so I'll stick to my guns. I'll wait until tomorrow and see how the market's open tomorrow. Might get another discount. But I do like it. I do like ARM Holdings. They beat, and they have earnings positive for the future. Okay, S&P. S&P drifting lower. Okay.
Now let's put some history on this. Here are some examples of big IPOs and how long they had to wait to join the S&P 500. Take Meta, then Facebook, and Alphabet. They both got in fast, about a year and 7 months. That's the clean version of the story. Big, liquid, established businesses, and the market got comfortable. Airbnb took longer, almost 3 years. Uber took longer still, over 4 years. Why is this? Because sometimes a company is huge, but the path to consistent profit, that's what matters for the S&P. Palantir is a good reminder that this isn't only an IPO story. That was a direct listing, and it still took almost 4 years to land in the S&P 500. And then there's Tesla, Elon's first big public company. 10 years, 6 months. That one tells you that the S&P is not just about those day one IPO pops. It can be a really long game. Okay, so why do indexes build in a weight at all? First, price discovery. An IPO is a hype machine and a pricing exercise both at the same time. The index wants to see where the stock really lives when all the confetti clears. And second, a new listing has a thin float early on. A lot of shares are still locked up and can't be sold. So a little buying or selling, that can whipsaw the price more than usual. And third, these lockups change the supply of shares. And this is where you can get a sneaky price drop when the lockup expires, even if the IPO looked great on day one. And finally, index additions can distort, because when an index adds a stock, some funds have to buy it. Not because they love it, because their job is to match the index. And here's a great reality check from the definitive IPO trading book called The Life Cycle Trade. Kathleen Donnelly and the other authors found that 91% of IPOs...
All right, I bought some SPXS shares. Okay, we're at the low of the day.
That's a great reason why the index weight exists and why you don't need to rush to buy these new listings. Now, here's what to keep your eye on as these mega IPO stories evolve. Watch for developments on the NASDAQ proposal to shorten the time to index inclusion, and anything similar from the S&P Index Committee, though it's unlikely those guys will budge. And then when these giants finally start trading, pay attention to the lockup expirations. When the early buyers are free to
All right, so I bought a little bit of this. We're not too far off of the low here. It's 1 or 2 days, possibly, maybe even more than 1 or 2 days if the markets continue to fade and don't bounce. So upside, maybe you'd see 2 or 3 points. Downside, 36.50, 35.50, maybe $1 downside. 1 point, maximum 2. So can we get 3 or 4 out of this? Probably not. 36, maybe 4. Maybe we get to 40 if the markets really melt down. This is 40 over here, so it's 2 to 1. 2 to 1. We could lose. I won't lose more than 100 per share, or 1 point per share. Looking for 2 to 3 upside, just as a cushion. Okay, Bitcoin. Scared money, most likely. I don't know how margin calls work. I imagine they would work the same way for Bitcoin, right? If you were leveraged on Bitcoin. Not sure how that would work. Micron's holding up fairly well. Okay, that looks good. Google holding up fairly well.
Omaha Steaks is America's original butcher.
Hold on, steak voiceover guy. I got this. Omaha Steaks is America's original butcher. But what's that mean? It means all these steaks are USDA certified tender.
Well, she's right.
Yeah, they love it. I love that they love it. This is why you get Omaha Steaks.
Right now, get 4 USDA certified tender steaks free when you visit omahasteaks.com/tender.
Skip the grocery store.
Yeah, skip the grocery store and get Omaha Steaks today.
Oh, great. Gruel.
What do we got? 2 minutes to go. 2 minutes.
Oh, well done for me.
I'm done. Why would you do that to a piece of meat? Thank you for the call. So, what are you in the mood for?
I'm thinking ribeye.
Ribeye it is.
Norwegian Cruise Line. It's different out here. Imagine seeing a stronger, more confident you. Without synthetics or injectables. With multi-collagen advanced lean, you can lose 6 times more weight and burn 15% more calories. Are you ready for real change?
S&P.
New customers get 20%
Nice little bounce end of the day. Not trading it. Not trading it. A fade today was opposite of what we saw yesterday. So we got up here at the highs. We faded back towards VWAP. Okay. All right, folks. We got 40 seconds to go. 40 seconds to go. Hope you're having a okay day. Not the best when the markets are pulling back. You know, you deal with a lot of negative emotions. People get upset because the markets aren't rising every single day. I'm being sarcastic, of course, but definitely one of those days. Okay. And we could see more downside tomorrow. So there's another pivot down here. So there's a possibility we're down here tomorrow. Okay, is that possible? That's a more than 4% pullback, I believe it was. S&P. Okay, 4%, I think we said. 4% S&P. All right, so have a great evening, everyone. I know it's kind of sucks when we have days like this, but it's part of the market. 3 to 5% pullback. If you watch the weekend video and you were listening to some of the things I suggested doing, you're probably fine. Okay, 4% would be down here. Okay, at this pivot from December. Could be that we're still going to stay in a range and oscillate above and below the 50-day. Earnings are good, so we'll be listening tonight to see how earnings turn out. We want to hear positive guidance. There goes Google just made a new high. All right, so nice little bounce in the day. Google, nice little pop. All right, so take it easy. The markets are going to bounce. You know, take a deep breath. Everything's going to be fine. As long as you're not doing anything super risky, you know, putting everything on black and spinning the wheel. You don't want to do that. So we try to talk you through the reasons why you need to pay attention to money flow, where it's going, why is it going there, and what are the chances that it's going to help us or hinder us in the short term. Okay, so we'll talk more about that tomorrow. Just hang in there. Everything's going to be fine. And we'll see you then. This is going to create an opportunity, by the way. So opportunities do appear when the markets pull back. Other people sell everything. We're looking for reasons to buy. And we'll do that in the near term. Take care. We'll see you tomorrow. Ciao.